What the fuck? There it is.
Join Jim.
All right, welcome back to Worldwide Exchange. Time now for your WEX wrap-up. Vice President Harris's campaign revealing she plans to propose imposing the first ever federal ban on corporate price gouging in the food and grocery industry. Harris is also proposing to give the FTC the authority to impose penalties on those industries.
That profit margin's gonna get killed, CNBC.
And grocery businesses as well.
Socialism.
Cisco Systems shares are jumping on an earnings and revenue beat. Cisco also announcing plans to cut 7% of its global workforce. Cisco CEO Chuck Robbins will speak exclusively with CNBC coming up on Squawk on the Street, 9 a.m.
Boy, that would be a bold thing to do.
Big moves by big investors, including Warren Buffett's Berkshire Hathaway, taking small stakes in Ulta Beauty and Geico.
Wow, what happened to my table?
Also increasing its stake in Chubb as well. Bill Ackman's Pershing Square Capital Management
Oh my
unveiled
God.
a new stake in Nike worth roughly $229 million. The firm also selling about 16% of its shares in Alphabet and more than 22% of its shares in Chipotle. And David Tepper's Appaloosa Management slashing its stake in Nvidia by more than 84%. It's also cutting its positions in fellow tech stocks like Amazon, Microsoft, Meta Platforms, and Alphabet as well. So here's what to watch for today. Weekly jobless claims and July retail sales, as well as industrial production. We'll get earnings from Walmart, Alibaba, JD.com, Deere, Tapestry, and Applied Materials, amongst others. And St. Louis Fed President Alberto Musson and Philly Fed President Patrick Harker are both speaking later on today. Well, turning back to the markets, another check on how the trading day is shaping up. Futures are bid right now. The Dow's implied higher by just around 84 to 85 points. For more, let's bring in Jay Hatfield, InfraCap Pounder and Chief Investment Officer. Jay, this is a curious market, one that's been a big bounce just from the lows that we saw last Monday. What gives, and is this really an all-clear signal? And is that a way a Chief Investment Officer would even look at it, binary, like all clear or not?
Thanks, Tom. It's great to be on. Well, we actually have been very, very bullish this year. We started out with a 5,500 target. Now we have a 6,000 target. And it's also very normal to have a pullback in August. So we think that during the August period, investors tend to overreact. For instance, the job report last week, we had an increase in unemployment. It was all due to weather. And so we think the combination of the seasonality plus the yen trade going away, everybody overreacted. So we're not surprised though we're bouncing back. We think that once we get through the election, we're going to have a powerful fourth.
This guy's a dipshit.
So it makes sense to dive in at a point. 5,000 is a good place to enter.
How much do you pay attention to positioning? Because the overreaction might have been measured had it not been for.
It wasn't an overreaction, you dumbass.
Or whatnot.
We're overbought.
Carry trade that causes a cascading type
God.
Of to what we saw.
I hate
What
stupid.
exactly then do you look at to make sure that things have played out, or that things can be, more constructive?
I hate
to the
stupid.
upside?
Well, actually, the VIX is good to watch because what happens with big hedge funds and other short-term traders, and we do a little bit in our private funds, is if the market looks really bad, like overnight in our hedge fund, we bought put futures as Japan crashed. But then when the market started to open, or actually slightly before they opened, we covered our puts or sold our puts because you are going to lose money if you own puts when there's a 60 vol. So kind of everybody does that. That stabilized the market.
These are billionaires. You got to understand one thing about a
Look at what's
billionaire.
happening, let the market talk to you.
They've got the money to take the beating. They just buy the dip. They all do it. All of them. They sit there and they talk smack. And then when reality hits, they're not seen or they're not around. Are you still holding? I mean, are you down 40%? Are you still in the damn stock, you idiot? Were you calling this NVIDIA out when it was at 1200 to go higher, you know? They're full of crap. CNBC in a way. It was definitely a healthy pullback. That means dead cat bounce. Dead cat bounce is when you have a knife. It bounces up a little bit, then it comes back down again. We're too close into the election to have to listen to this kind of rhetoric. Yeah, he said after the election, he's sitting on his cash, you know. He's got billions, millions and hundreds of millions of dollars. I mean, you can play the market. That's what I do. I don't ever get out of a stock hardly on a dip. I buy the dip. When I'm in a trade, I just do it in a much smaller scale and a much faster pace. Where these guys will stay in it. I'm in and out, in and out, in and out, and I'm making 3 or 4 times more than they are by sticking in the damn trade. I mean, was the fool in at 565 and still holding? Or did it dive $50 on him? He probably held and had the dip. Buffett's cut a lot of his holdings out because he knows about election. So they get on here and they always whine about margin. They're cutting prices, margin. So here you got the president wannabe to the United States saying that they're going to finally tackle corporations. That's not good for a capitalist. You know, they should be talking bad about that. Say, oh God, this ain't good for the market. And they're just biting their tongue. They're not saying a word about it. Now, if this was Trump saying this, oh my God, you would not hear the end of it. About margin. And here's that idiot here, Santelli. He's another one.
And now we're back to where.
Now we're back to that.
But we're not back to July 10th.
That's exactly right.
On the NASDAQ, and I don't know what, you go back to last year in the sell-off, you could kind of actually trace it back to the Treasury refunding announcements at the end of July, and that started yields went up to 5 in October, and the whole story. I don't know what the whole story is about why the AI trade just suddenly ran out of steam about a month ago.
Yeah, in fact, right around when earnings season
You don't know.
is about the peak, right?
It's simple. NVIDIA up 1,200% in a year and a half. It's real fucking simple, man. SMCI up almost 3,000% in a year and a half. Hello. AMD up 300%. I mean, I can go on and on and on. You don't have years like that.
Today's Squawk Planner.
You just don't.
Earnings reports ahead. Walmart, Alibaba, Deere, and Tapestry are set to report before the opening bell. And a flood of economic data ahead as well. We'll get weekly jobless claims, a pretty important one right now. That's the most closely watched probably since last week's report helped fuel a rebound in equities from oversold levels. We'll also get July retail sales and import-export prices.
Looking forward to all of that. Chicago Fed President Austin Goolsbee is meantime raising a red flag on the economy, telling Bloomberg he's becoming more concerned about the labor market than inflation. I don't know if we call it a red flag, but maybe, he's following progress on prices and disappointing jobs data.
They're in denial.
Interest rates are, quote, very restrictive, a view that would only be appropriate if the economy were overheating. He didn't comment on the likelihood or size of a rate cut at the Fed's next meeting in September. Traders...
These people are in big denial, and they're one of the biggest pumpers out there. CNBC is. So I'm always I am now. I used to be able to follow their trades and have a good time with them, but now, no, not me. I've been around way too long to listen to these rookies talk about this.
Previous quarters. One bright spot, the $28 billion acquisition of Splunk, which closed in March. It contributed $960 million in subscription revenue during the quarter. Cisco announced a restructuring plan that includes cutting 7% of its global workforce. It is the second major round of layoffs this year at the company following a 5% headcount reduction announced in February. CEO Chuck Robbins will be on Squawk on the Street at 9:30 a.m. today in a CNBC exclusive interview.
Meantime, we are just learning some of the details about the pay package that enticed Chipotle CEO Brian Niccol to leave to run Starbucks. In a filing yesterday, Starbucks disclosed it will pay Niccol a base salary of $1.6 million annually with incentives that could net him an additional $7.2 million more in cash. He's also going to be eligible for annual equity awards worth up to $23 million. And for leaving Chipotle, Niccol will receive a $10 million.
I don't understand why tech was selling off.
Equity that will vest over a 3 to 4 year period. One perk for Niccol, he won't be required to relocate to the company's headquarters in Seattle. His primary office will be in Seattle, but Starbucks will also pay for a remote office to be set up in Newport Beach, California, where Niccol lives. Niccol agreed to commute to Seattle and travel as needed to do his job. Starbucks will pay for housing costs in Seattle for Niccol for up to 3 months while he finds a secondary accommodation there.
Pay him more.
What do you say?
Pay him more. I mean, you know the scope of the job he is taking.
And look, he created overnight $20 billion. So you're not paying less than that for.
The incentives are aligned. A lot of this is in shareholder equity. Presumably, he has to hit certain targets in order to receive. It is interesting detail though about the kind of work from home nugget.
And then he's going to have to travel back and forth.
Yeah, these guys are traveling all the time.
Yeah, exactly. Yeah. But Chipotle is in Orange County, right? So they are. That's why he's in Newport Beach.
Okay, let me get.
To Orange County.
That's right.
If
It
you
used to be
remember,
in Denver or Colorado.
because of where he lived.
Exactly. Yeah.
Meantime, the president of Columbia University, Machafik, is resigning from the university. She is the third leader of an Ivy League university to step down in the last 8 months. It follows heavily criticized appearance before Congress about anti-Semitism on campus. The doctor said her resignation was effective immediately, and she would be taking a job with Britain's foreign secretary. She said recent period of turmoil had taken a toll on her family. She decided that moving on would be best to enable Columbia to traverse the challenges ahead. In a statement, Columbia's board co-chairs said they were disappointed to see her leave, but understand and respected her decision. Last spring, she faced a lot of backlash from students and faculty.
Freaks.
Summoning police to campus to clear
Racist.
an occupied building. At the same time, others in the community, including major
Stress.
donors, said she had not done enough to protect Jewish students on campus. And I should
People
say
don't remember
that
this
while
shit.
The resignation appears to be a resignation. There was a
I'll never be a Democrat ever again.
even though the past couple weeks behind the scenes, from what I understand,
Really?
to try to push for some of these things too. So I think there was a lot of a push-pull.
Is that because the school year is about to start and I felt like this was the moment to...
I just think that there were, from what I understand from the donor class, there was a group of people who had been very frustrated and had been trying to. So I think that probably some people who are sad today and other people who are quite happy. Coming up on the other side of this, we're going to go whale watching. We're going to talk about some of the new investing moves just disclosed by some of the world's biggest investors, including Warren Buffett. And later, after today's flood of economic data, we're going to talk about the impact of the Fed with Roger Ferguson, former Fed Vice Chair. Squawk coming right back after this.
Too much stress. Well, you quit teaching your kids to be hellraisers. And tell them what a genocide is, for God's sakes. Don't you teach that anymore?
Differently.
Welcome back to Squawk Box. Investing giants like Warren Buffett, David Tepper, and Bill Ackman all filing 13F reports for the second quarter, which gives the rest of the world and all of us a look inside their portfolios. Contessa Brewer is here at the table to tell us what was in those portfolios this quarter.
This was my first time doing the whole 13F things, and wow, what a view you get by really diving in. Let's start with the obligatory reminder. These figures are only current as of June 30th, so additional moves may have been made since then that we just don't know about. Berkshire Hathaway, the big one. Warren Buffett's firm disclosed the size of its Apple stake. At the end of the second quarter, it was 400 million shares. Recently, Berkshire announced it had decreased its Apple holdings by 49%, and now it appears that happened during the quarter. Buffett's firm also increased its holdings in global insurance giant Chubb to 27 million shares, and remember that was revealed as its mystery stock back in May. Other noteworthy moves: Berkshire decreased its stake in Capital One, T-Mobile, and it dissolved its stake in Snowflake, the AI cloud computing company. Cosmetic maker Ulta stock got a boost after a small new position from Ulta. There you can see the move. And Pershing Square made some moves in the consumer discretionary space as well. Bill Ackman's fund revealed a new stake in Nike. It bought 3 million shares in the quarter, but disclosed small decreases in Chipotle and restaurant brands. Big tech in play: David Tepper's Appaloosa selling Alphabet, Amazon, Meta, and Microsoft. Dan Loeb's Third Point also selling Alphabet and Meta. And in the semi space, you have Appaloosa decreasing its exposure to the chips: NVIDIA, AMD, Micron, Qualcomm, Taiwan Semi, and Lam Research. Meanwhile, Viking Global took a new stake in NVIDIA and dissolved its stake in Advanced Micro Devices. Third Point taking new stakes in ASML and Micron and increased its stake in Taiwan Semi. And then, Carl Icahn bought 2.6 million shares of Caesars. We knew he took a stake, but we didn't really know how much. I just wanted to throw that in there because how can I come on with you and not do some coverage of casinos?
Casinos or Carl.
And this goes back to what we were saying about July 10th
Yeah.
when tech stocks topped out, and now we're learning some of the biggest players trim their holdings. But how about
Ahead of that, yeah.
Yeah, ahead of that. But how about Ulta? This is
Yeah.
what I was
Fascinating.
cackling last night reading this. It's
You were cackling?
Cackling because we were just talking about this on Monday. Remember, and Mike was saying maybe, and Sephora. We were talking to Oliver Chen.
Yes.
And he said Sephora was picked. So they're looking at Ulta. Is it really
Right.
12 times
And
now, roughly?
like 12, 13 times.
That's
already. So
amazing.
it got cheap. Ulta got cheap. Kind of got into their zone. You always have to. I have to confess. I'm usually like, 13 apps. It's kind of noisy. This is not really.
These are more
dismissible.
interesting.
It's more interesting.
These are
because
more
it's
interesting.
Opportunistic stuff, right? I mean, that Ulta is a broken growth stock. It gets cheap. Small position for Berkshire, but then also the Nike one
Yeah.
is fascinating. It's a concentrated
especially-
portfolio.
And especially when you're looking at so much reporting of consumer pullback and to see this diving into, which I guess, Ulta, the other play on this is if you think consumers are pulling back, what are the conventional wisdom that they're always still going to spend on cosmetics and, lipstick.
The lipstick
Shoes,
indicator
sneakers,
kicking
yeah.
around.
Exactly.
But what's the Nike thing too, though? So that's the position Pershing Square took as of June 30th. The last trading day of June, the stock crashed 20% because they had earnings.
Right.
So you see that vertical line lower,
Yeah,
So
so
where
he
were
bought
they?
in right before is what you're trying to say.
or after.
Or after.
He could have bought it that day on the break, and that's the fascinating thing you don't know.
I want to bring in Stephanie Link. Do not go anywhere. Chief Investment Officer, strategist, and portfolio manager, High Tower Advisors, as well as senior trader. What was the big surprise on that list for you? And are you going to follow anybody, if you will? Are you gonna follow anybody into these stocks?
I think Ulta. Ulta is, I can't believe how cheap Ulta has gotten. And this is a company that's growing revenues in the 20% range and earnings also in the 25%. And it's just had a bit of a stumble. And I think the fact that the stock is down about 30% in the past year, I think that's really super interesting to me. I've never been able to own Ulta because it's always been so expensive, but it has really derated. And so I think that's sort of interesting.
What about Nike?
So I think Nike is a bet on what just happened to Starbucks because the management really has disappointed and the innovation has been lacking. So to me, it's like, okay, you can own Nike if you think they're going to be able to innovate, right? And I think they will, but there's so much competition, Andrew, at this point. From Hoka, from On, Semi. So they really do have to innovate. But I think that's a play on, there's going to be a management change. And if there is a management change, obviously the stock certainly could re-rate. But I think the current management has a lot to prove. And it's expensive, by the way.
You think that there's a management change coming at Nike?
I think for the stock to work, you do need a management, some sort of change to happen.
But is there any do you
So
think
we'll
that's
see.
happening? Do you think activists are showing up? What do you think is going to happen that's going to create this moment?
The stock has been a disappointment for a couple of years. And as I said, the stock is actually quite expensive. And the numbers have been coming down and they're losing market share. So something has to happen. Now, I do think you had Mary Dillon on at Foot Locker a couple of weeks ago, maybe a couple months ago. And she was
Former
super
Ulta.
excited about the innovation, right? So maybe there's more innovation coming, but at the same time, you have all kinds of competition, kind of hitting them at all different angles at this point in time. So I don't know. We'll see about a management change. I don't know, but I think for the stock to really work, you're going to need to have some change and some sense of urgency. And I just don't think you have it there right now.
What do you think about Warren Buffett buying more Chubb? Would you buy Chubb?
I think the insurance companies, they continue to have pricing power. You're seeing it across the board. You saw it in the CPI number yesterday, right? So Chubb is awfully cheap. Chubb is awfully cheap, but Allstate is cheap and Progressive is cheap. They're all cheap and they have pricing power. So yeah, I think you can pick one
And
or
the
two
thing-
names.
And the
certainly.
thing about Chubb, if I can just jump in, is that, and we just heard this on the earnings call, Evan Greenberg says if consumers and their customers are looking for the cheapest insurance, it's not Chubb.
Definitely.
He said we're the luxury brand of insurance. And so speaking of pricing power, Chubb really has it because they just say, if you can afford us, we're the best and you should go with it.
And then maybe we can show the multiples because Stephanie, it's fascinating. You see that these are still cheap stocks after. And the consumer are you telling me you don't think Kamala Harris is out there talking about food prices and insurance costs are up like 50% for people in a couple of years' time? And I don't know if that's an overhang for these stocks, but I can't imagine that regulators are going to leave this space alone.
No, they might not, Kelly. I think that's a good point. But the fact is that these insurance companies, they're leaving certain markets. So there's less of a choice for consumers. That's what gives them the pricing power.
True.
And I don't think that's going to change anytime soon.
And remember that the rates are just now catching up to what the loss costs were over the last few years. I mean, you saw
Because
inflation.
home prices are up and auto prices are up and it's all up.
Materials,
You're absolutely
labor.
right. Yeah.
And so what was happening is that
And social inflation because of all of these settlements.
the litigation is an incredible cost headwind. And it's not just the litigation itself, it's that the verdicts have become bigger and they set the standard across the board. And that hits across different lines of insurance and it hits throughout multiple states.
That's why I can't believe it. Steph, do you know the multiple offhand for like Progressive? I would have thought these were like trading at 30 times.
Chubb's 12 and 13. Yeah, I mean
Wow.
the market is assuming these are not peak earnings, but that
close.
they're not going to double from.
I hope for the consumer's sake, I hope they are. Maybe not for the investors.
But 13 times earnings for the very best player in the industry with pricing power, and oh, by the way, the best management team. That's kind of compelling.
Yeah.
I understand why Buffett is adding to it. It makes 100% sense.
Stephanie, we got to leave it there. It's great to see you as always.
Thank you. Good to see you.
Thank you.
And coming up, and Contessa, thank you as well, Contessa Brewer.
Yes.
The Taylor Swift effect.
As
Gotta talk Taylor. The NFL's Kansas City Chiefs putting numbers to the bump in the fan base they got from the pop star's appearance at the games last year. We'll have those this year. We'll have those details next. And later we'll talk to Gary Vaynerchuk about the impact of social media on the 2024 presidential race and a whole lot more. Squawk Box will be right back.
Welcome back to Squawk Box. Alaska Airlines flight attendants rejecting a new labor deal that would have raised pay by an average of 32% over 3 years. The union and the company reached that tentative deal in June, but the rank and file members failed to ratify it. The union says it's going to survey its members to determine key issues and then try to return to the negotiating tables to address them.
A U.S. judge said yesterday he's planning to issue an order that would force Alphabet's Google to give Android users more ways to download apps. The judge heard from technology experts and lawyers for Epic Games and Google about proposed reforms in the Blockbuster antitrust case. The judge said Google foreclosed competition for years and years and years. We're opening the gate now and letting competitors come in. Epic's lawsuit accused Google of monopolizing how consumers access apps on Android devices and how they pay for in-app transactions.
And Kansas City Chiefs CEO Clark Hunt says the Taylor Swift craze helped fuel a 30% increase in the team's fan base amid its Super Bowl winning season. Swift began dating Chiefs tight end Travis Kelce last year and made frequent appearances at the games. Hunt said her impact stunned the league, which confirmed that 30% metric without disclosing how exactly it measured the fan base.
Right. High stakes in that relationship,
Yes.
apparently, here. Yeah.
Well, yes, but also, I don't know.
Are you saying it's a loose definition of fan?
Yeah, are you possibly suggesting that this might not
perhaps
be
he may not have too many years
left?
left. Yeah, we'll see. All right, check out shares of Deere jumping after quarterly results. Earnings of $6.29 a share. That is better than the $5.63 a share that the street was looking for. That's on net sales of $11.39 billion, also topping expectations. The company said in response to weak market conditions, it has taken steps to reduce costs and strategically align our production with customer needs. Pretty common theme in the results this week. The stock up about 5%. Coming up, former President Trump making his economic pitch to voters. We'll show you what he said and talk about a coming proposal from Vice President Harris to crack down on alleged price gouging at the grocery store. And as we head to a break, a look at yesterday's S&P 500 winners and losers.
morning and welcome back to Squawk Box right here on CNBC. We are live at the NASDAQ market site in Times Square. Futures right now are up, Dow up about 85 points, NASDAQ looking to open higher, about 21 points higher, and the S&P 500 up about 2 points.
It has been quiet, but to
Yes.
that, what, as you see there, 5-day win streak we're stringing together here, maybe longer. Former President Trump is making his economic pitch at a speech in Asheville, North Carolina yesterday. Take a listen.
Vote Trump and your incomes will soar, your savings will grow, young people will be able to afford a home, and we will bring back the American dream bigger, better, and stronger than ever before.
In that speech, Trump also pledged 10 to 20% tariffs on foreign countries that have, quote, been ripping us off for years. He also pledged to slash energy and electricity prices by at least half within the first 12 to 18 months that he's elected. His comments come ahead of Vice President Harris's rollout of her economic platform. She's expected to begin testing that messaging during a speech tomorrow in Raleigh, North Carolina. Her campaign said yesterday the plan would include raiding in housing costs and prescription drug prices. She also plans to call for a federal ban on corporate price gouging on groceries. Here was Trump's response when asked about that last night.
There's no such thing as her going out and doing that. What you want to do is create the incentives so that people can't cheat, they can't price gouge. And the way you do that is drill for oil and get everything down, and all of a sudden people can't do that.
Now, I haven't seen it. I don't know if anybody has seen the details yet of exactly how she would go after the grocery price gouging question, which,
It's a hard one.
Yeah.
People have talked about doing something for a long time. I don't know what doing something for a long time means. You can
have they
talk
talked
about
about
it.
doing something for a long time? You mean,
Well, I
is this
mean,
post-pandemic or just?
We've been
in general?
hearing about gouging for forever, which is,
Right.
you know, shrinking the bags,
Shrinkflation,
all
yeah.
of that.
Is
But I-
shrinkflation gouging, or is it my expenses went up and therefore I'm trying to pass that along in the best way I can?
Or the markup thing where the prices are faster to go up than to come down. And is there some way to calibrate that? I
Look,
mean,
the interesting part to me has always been you've heard
These people are full of shit.
President
I come back here and listen
himself
for a
go
few
this idea
seconds.
That corporate America is gouging you,
Right.
And then if you talk to his Treasury Secretary, Janet Yellen, and you say
It's all because of government
corporations, if they gouge you,
regulation
this-
and
no, this is
printing a
gonna cost
bunch of
5
money.
grand, and that's sort of where we are.
Did she
right
really
now.
go?
These
Oh,
people-
You get an economist and they're not going to rip.
These idiots ain't going to say it. They're trying to play a thin line here. They know damn good and well what's going on. That we are getting price gouge. It doesn't have to be like this. It never had to be like this. But we had to print trillion upon trillions and trillions of dollars that didn't need to be printed. That boils, and then over the over-regulations, the war on oil. I mean, I've never seen anything like it in my life. And yes, the only way to fix it is to get them Democrats out of office. Because we're going to be looking at another 20% increase in our goods for another next 4 years if we don't do something about it.
Fascinating story. Fascinating how it came together. Set it up for us.
Yeah, Mike, that's right. I mean, first of all, this podcast is now live as of a couple of minutes ago, so you can listen to it on your ride into work this morning. Look, we were working on this project going back to September of last year, and the whole time we were researching the life of this young Russian oligarch named Vladislav Klyushin and his Hack to Trade campaign that hit American shareholders for millions of dollars. We realized that he could be part of a trade, and there you see the video. That's Klyushin in the tan shirt getting a bro hug from Vladimir Putin, and there Klyushin is just behind the flowers on the left-hand side of your screen, among the Russian prisoners released in that prisoner swap on August 1st. We had no idea that was coming exactly when it was coming. We were scheduled to launch on August 2nd with a documentary on this. We scrambled and launched it that same day, as you see that bro hug there being given by Vladimir Putin, to show the life and times of this young oligarch and the scam that he perpetrated on shareholders in American companies. They were stealing, using hacking technology, they were stealing SEC filings from American companies, trading on those in advance. So big stocks like Tesla, they had the earnings reports first, and they were making millions of dollars doing that.
That is fascinating. I mean, it's funny because sometimes you'll hear people on Wall Street say, "Oh, give me tomorrow's newspaper today. Wouldn't even know how to make money on it." But if you have the actual filings and the results, you can make a pretty good bet in that direction. Talk a little bit about, I guess you talked to a former spy involved in all this. What did they have to say about what I guess ultimately were the ends of this whole campaign?
Right. Yeah, the question is, how much are these criminal gangs in Moscow linked to the Putin government, right? I mean, they're kind of operating these cyber scams in Moscow. They were hitting American companies, making tens of millions of dollars. What's the connection to the Russian government? Well, we talked to a former member of the FSB, which is the successor to the KGB. This is a Russian spy who defected to the United States, lives here now under an assumed name. We went to a location inside the United States which we can't disclose to interview this person and get his take on it from the Russian perspective. And what he told us was fascinating. He said, look, the Putin regime authorizes these criminal gangs to go out and disrupt Western financial markets in order to make sure that people who are close to Putin in the intelligence services profit personally, that they get rich themselves, and also that they disrupt Western financial markets. So what he's saying is that there's sort of an organized disorganization around these criminal gangs where Putin kind of directs them what to do and generally tolerates it, doesn't necessarily authorize each individual crime, but wants it all to happen. And that's part of the reason why Putin would want to trade for him back once Vladislav Klyushin found himself in an American prison.
And now that Klyushin is back there, I mean, do we assume that the game goes on, or what do we think he's going to continue to be up to?
Yeah, look, I mean, I asked the FBI that. I mean, one of the guy who worked for Klyushin, who was his right-hand man, was a guy named Ivan Ermakov. Ermakov is a veteran hacker from the GRU, the Russian military intelligence service. There you see Klyushin. Ermakov is a government hacker. There's Ermakov in the jacket there. There's Klyushin and Ermakov with their wife and girlfriend. And this is a person who is extraordinarily well connected to Russian intelligence. If Klyushin is welcomed back, as you seem to get the sense that he was with that bro hug from Putin, there's the possibility that he could just go on engaging in insider trading in Western financial markets for years without being stopped, because he's not in an extradition country. The Russians won't let him go. So he could continue to do this. If he can find a financial institution somewhere in the world that he can execute his trades with, he could probably continue to do this for some unlimited period of time. And the FBI and the Department of Justice are going to have to figure out a way to put a stop to it, as they did initially with this case, arresting him. And the story of how that came to be is in the podcast. But then, of course, he's subject to this trade, and he's a pawn in a much bigger geopolitical game.
Remarkable stuff, Eamon. Thanks very much. Well, there's a sneak peek of the crimes of Putin's traitor out now on the Squawk Pod feed. If you follow Squawk Pod, you already have that. You can listen anytime.
And coming up, we have inflation on the menu. We'll talk to a restaurant operator who's feeling the pinch of rising food costs, which is leading to job cuts. Squawk Box has more when we come back.
Peacock.
Welcome back. According to the latest CPI report yesterday, food prices climbed 0.2 in July. Our next guest owns 4 restaurants in Georgia and says his grocery bill is up 20% due to food inflation. Joining us now is Brian Will Restaurants Investment Group founder and CEO. Brian, it's actually crucial to have you here right now because we're hearing that Kamala Harris might go after groceries for price gouging and so on and so forth. So we're eager to try to figure out what's going on with food prices across the economy. And what's your take?
Good morning, Kelly. Yeah, and it's funny when I hear pricing is only up 2 or 3% on something, because I can tell you in the last 6 months, when we look at our cost of food in February versus our cost of food now, it's more like 20% and as high as 40% on certain items. So I'm not quite sure where they get those measurements from, but it's not what we're seeing out here in what I call the real world.
Sure. Can you be specific about where you're seeing the biggest increases, feeling the most pain?
Yeah, I'll give you a perfect example. The cost of chicken in February was $1.64 a pound. Today, that cost of chicken is $2.27 a pound. That means our cost of chicken has gone up 63 cents a pound, right? That's a 38% increase. And people say, well, 63 cents might not be that much until you think that we buy 62,000 pounds of chicken for our restaurant. So my wholesale cost on chicken for the year went from $100,000 a year to $138,000 a year. That's $38,000 that hits my bottom line.
Right.
Now look at the cost of beef and the cost of cheese and the cost of seafood, and those numbers start adding up very quickly.
How does it compare with a couple of years ago, though? Because my understanding was chicken prices skyrocketed, then they actually came down quite a bit. They've been on a rebound lately, but in other words, we're starting from February through the summer of this year, but put that in the broader context for us. What were you spending on food a year ago, 2 years ago?
Chicken does vary a good bit, but I can tell you that my wholesale cost, when we look at in a restaurant, we look at our food cost. I can tell you 2 years ago, we tried to run a 27-28% food cost across our entire menu. Today, we're running a 32 to 35% food cost. So you're talking about a 5% increase overall on the cost of our wholesale goods. And when you multiply that out across a $5 to $6 million operation, it starts adding up very, very quickly.
Do you think there's price gouging? So when you're with the suppliers that you deal with and the prices that you have to pay, do you feel like that's what's going on?
It's a tough question, and I had this conversation with somebody last night because we buy food at what's called a cost plus. So I pay 6% over theoretically what my supplier pays for it, but I don't really know where they're coming up with their costs. So are they price gouging me? I have no idea, but I'm on this dynamic pricing, so my pricing does change, and there's not a heck of a lot I can do about it.
Right.
Well, what about consumers' response to all this? What are you now finding in terms of their willingness or their ordering patterns, things like that?
You know, we've done 4 price increases in the last 2 years, and at some point you start seeing traffic drop off in the restaurant because people are shocked when they come in. I did a segment about 6 months ago where our bacon, lettuce, and tomato sandwich now costs $17. People come in and they say, oh my gosh, $17. Our average ticket price on a table is now over $50. So how often are you going to come in and sit down for a meal that's $50 or $60 when you can make that same thing at home significantly less? So yeah, we only have so much room to raise prices before people stop coming in.
I thought that was interesting when we looked at results from Chili's yesterday, and some of the restaurant chains, which had been losing to fast casual and fast food, they're clawing share back because they're able to discount now and offer like a $10.99, multi-meal value option and things like that, which I have to imagine puts a lot of pressure on you. Now, I don't know if they're taking margin in order to do so, but I do think, generally speaking, disinflation compared with a couple of years ago is giving them that opening, and they're seizing it.
Well, I think you hit the nail on the head in an earlier segment too. Even we are experiencing what we call shrinkflation by adjusting the ingredients in each one of our hamburgers. They can do it by, instead of 8 ounces in a hamburger, they go to 7. Instead of 6 ounces of chicken, they go to 5. So they can dress it up and make it look the same, but the reality is the core ingredients are shrinking the amount that we're putting in there, which lowers our cost, which allows us to lower the menu prices.
And just in kind of one final question on this, but I've always understood the mix in restaurant world might be half or more is labor, a smaller portion is actual food costs, even if those are up. And we know there's been massive labor inflation. Some of that's policy driven, some of that's shortages and so forth. What are you experiencing, and how does that cost compare with the price of actual food when it comes to what you're charging people?
Yeah, our food cost runs about 32%. Right now, our labor cost is running about 30%. So those are the biggest 2 items in there. And in our case, we're having to cut labor across the board to stay within our 30% labor cost, but have less people doing the same amount of work. So in order to combat the increased price in the food, we've got to cut back on the number of people that we're actually hiring in order to serve that food, to try to keep those costs in line and keep our profits where they need to be.
Indeed. Yep. Inflation's not over for you yet, not over for a lot of people. Brian, thanks for joining us to talk about it.
Kelly, thank you.
Brian Will.
Okay, coming up when we return, Apple may be working on a new device to manage your smart home products. We're going to bring you that news in just a moment. And a reminder, join CNBC in Boardroom's Game Plan Conference. It's happening in LA on September 10th. It's a high-powered event bringing athletes, owners, investors, and innovators together. You can scan the QR code or visit cnbcevents.com/gameplan to register. I will be there along with Kevin Durant, Rob Manfred from Major League Baseball, Rich Paul, and so many others. We're coming right back after this. Welcome back to Squawk Box. Apple reportedly pushing ahead with plans for an iPad-like tabletop device. A Bloomberg report saying it would be mounted on a thin robotic arm and allow the display to tilt up and down and rotate 360 degrees. It could adjust its positions to face users around a room. It's a feature offered now by Amazon's Echo Show 10 and Meta's now discontinued Portal. The Apple device could be used to manage smart home products and for video calls and could be launched as soon as 2026. I was just in somebody's kitchen who had, I guess, one of the Google ones.
What's it called? Do you know? Or what was the calendar one called?
Oh, what's the calendar one called? Hold on.
Because I
guys
didn't
in
realize.
the guys in the
In the back.
In the back. The producers. What's it called? Do you know? Skylight. And I have a whole bunch of friends who have this thing called Skylight. I don't think it's nearly as sophisticated as what Apple's trying to do, but it just shows you the calendar of the whole family. It can be powered by all sorts of different calendars, I think Google and others.
Sure, whatever you...
I'm not here endorsing it. I don't know about it, though we've talked about getting it, and I kind of want one.
Is it like projected on the wall? What
No, it's like looks like a frame. People keep it in their kitchen.
Oh, okay.
You can see the whole family can see exactly what's going on. You know what it's like in the old days. We used to have like a calendar,
A big
with a
paper
magnet
calendar or
We'd have a
on
chalkboard.
the
Yeah.
refrigerator.
Yeah.
And now nobody has a metal facing
Or the
refrigerator.
big pad, you just tear the month off.
Yeah.
Love that pad. Back to school season. I didn't realize that feels like it's been 10 years in coming, this sort of like in the kitchen device. I was a little bit rolling my eyes at the news,
It
but I
might
didn't realize
be.
maybe the moment is here. Maybe
I don't
it's
know,
arrived.
but it's got to come.
Yeah, kitchens are the hive, everyone knows that.
They are, totally.
All right, coming up, the chip wars. NVIDIA is set to report next week. We'll get into the fierce AI competition in the sector next. And we're waiting for retail giant Walmart to report. They'll have the numbers and the instant reaction straight ahead. Squawk Box is coming right back.
Game plan.
Now for a look at the state of the chip sector ahead of NVIDIA's highly anticipated earnings report later this month. Let's bring in Chris Miller, Associate Professor at Tufts Fletcher School and author of Chip War, the fight for the world's most critical technology. Chris, thanks for joining us. And I mean, we constantly go through these rounds of, U.S. government putting on export controls over some class of chips. to China or others. Maybe it hits NVIDIA stock. Maybe people get concerned about the market isn't as big as we thought. And then, of course, there's some kind of response from China to try to do it themselves. Maybe just set it up in terms of what the state of play is. Is this just the world we're going to be living in for a while?
Well, we're almost 2 years into U.S. restrictions on companies like NVIDIA and their ability to sell advanced AI processors into China. And China's, of course, trying to respond to this by building their own high-end AI chips. Right now, China's still meaningfully behind, and we know this because Chinese firms are importing large volumes of the lower-end NVIDIA chips that the company's still allowed to sell into China. But it's widely expected that the U.S. is going to ratchet up the restrictions at some point later this year. And we've just seen reports from the Wall Street Journal that Huawei is readying a new AI chip that's supposed to be better than the previous version and perhaps more able to compete with what NVIDIA can sell. So this is sort of a cat and mouse game. The U.S. ratchets up, China responds, and I think we should expect this to go forward far into the future.
And of course, the stated rationale is to, withhold certain technologies from China that could be used in a way that compromises U.S. national security. Do we have a sense of exactly how effective that is, how much it might restrain capabilities of other countries, how much of a head start it gives the U.S. and its allies?
Well, the difficulty with the national security rationale is that the actual focus is AI, and AI is relevant for the civilian sector. It's also relevant for intelligence agencies and the military. And so the U.S. goal is really to make it harder for China to be a leader in AI. And I think if you look at the landscape right now, it's U.S. firms who are out in front, and you can certainly get some anecdotal evidence from China that lack of access to sufficient computing power, the type of computing power provided by chips like NVIDIA's, is a challenge to China's AI researchers and to Chinese companies that are trying to scale up. And that's exactly why they're pouring billions and billions of dollars into trying to build out their own chip-making ecosystem that can compete with companies like NVIDIA.
Do we have a sense of whether that's effective? I guess I'm trying to figure out on a practical level, what the differential is going to be. And, considering that the Chinese internet is kind of closed to the rest of the world and vice versa, I just don't know exactly what we're fighting over here.
Well, I think the U.S. realizes that China's AI ecosystem will be defined by Chinese firms, but what it wants is in the rest of the world, U.S. AI firms to have a real lead. So the U.S. can set the rules of AI around the world, and so that U.S. firms create the infrastructure that undergirds AI, not just in the United States, but in other countries too. And right now, I think that's more or less playing out. If you ask who's building the data centers that are going to train and deploy AI systems, it's largely U.S. firms, even in third countries. And I think that's what the U.S. hopes to see going forward. And by restricting Chinese firms' access to high-end chips, the U.S. is hoping to keep them behind, make them less competitive in third markets, and therefore provide an advantage for U.S. players.
And Chris, as a sidebar that's not really a sidebar, I know the defense industry in particular is somewhat frustrated that we haven't weaned our defense apparatus reliance on Chinese chips. If nothing else, it feels like maybe that's not the place to be dependent upon that supply.
I think that's right. I think the defense industry uses a wide range of chips, some pretty high end, but a lot much lower end. Some chips that were designed 20, 30, even 40 years ago. And a lot of these lower end chips are produced in large volumes in China. And so it has taken a very long time for defense firms to find alternative sources of supply for some of these lower end chips.
Yeah.
And what about the effort? I mean, it's a multi-year effort to bring more manufacturing back to the U.S. or allied countries. And is that going to really shift the dynamics here? Obviously, you prefer to have things closer, but still it seems like Taiwan Semi and ASML seem to be the gatekeepers for this business.
Yeah, I think that's right. With the CHIPS Act just passed 2 years ago, we've seen a major increase in investment in the U.S., a huge step change relative to the previous levels. But even this big increase with several $100 billion of new chip-making investment in the U.S. expected over the next decade, the reality is that almost all AI processors, like those produced by NVIDIA, are still manufactured in Taiwan and will be for the foreseeable future. So you really can't ignore Taiwan when it comes to the chip industry, because that's where almost all of the cutting-edge processors are actually manufactured.
Yeah, certainly not ignoring it, Chris. Great to have your perspective. Thanks so much.
Thank you.
Okay, it is just past 7 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, along with Kelly Evans and Mike Santoli. Joe and Becky are off today. Among today's top stories, the Biden administration set to announce deals with 10 drug companies to lower the cost of prescription drugs for Medicare. The drugs treat or prevent common ailments like diabetes, stroke, heart disease, and certain cancers. New prices go into effect in 2026. And shares of Cisco are higher, earnings 87 cents per share, beating estimates of 85 cents. Revenue also coming in higher than the street had been expecting. The company announcing a restructuring plan that includes cutting 7% of its global workforce. It is the second major round of layoffs this year. CEO Chuck Robbins is going to be on Squawk on the Street. That's going to happen at 9:30 today in a CNBC exclusive interview. And then there's this: Alaska Airlines flight attendants rejecting a new labor deal that would have raised pay by an average of 32% over 3 years. The union and the company reaching that tentative deal in June, but the rank and file members failed to ratify it. The union saying it's going to survey its members to determine key issues and return to the negotiating table to address them.
All right, Walmart results are just out. Melissa Repko joins us now with the numbers. Melissa.
Hey, Mike, good to see you this morning. Walmart's reporting earnings of 67 cents adjusted. That's higher than the 65 cents analysts expected. The discounter also topped expectations for revenue with $169.34 billion. That's above estimates of $168.63 billion. The company raised its forecast for the year to reflect its strong first half, saying it now expects sales to rise by between 3.75% and 4.75%, and it expects adjusted earnings to come in between $2.35 and $2.43. I spoke to Chief Financial Officer John David Rainey, who told me that Walmart has not seen a change in shopping trends. He said every month of the quarter was relatively consistent. He said, "We see among our members and customers that they remain choiceful, discerning, value-seeking, focusing on things like essentials rather than discretionary items. But importantly, we don't see any additional fraying of consumer health." It also saw strength across stores, clubs, and its website, notably with U.S. e-commerce sales growing 22%. And he said Walmart saw another promising sign. Sales of general merchandise, that's the stuff that's outside of its grocery department, was positive for the first time in 11 quarters, Mike.
That's probably going to be taken as a relief, I would think, by investors, considering that July in particular, I think folks felt was maybe a little bit soft for a lot of the industry.
Yes, John David referred to that, and he also referred to the concerning jobs report that created some concerns. And he said, we are not projecting a recession. He really kept talking about how they've seen consistent behavior even with the start of the quarter. Yes, people are still watching their dollars, but there's no noticeable change, he said, and that's really the key takeaway here.
I don't know if you have the numbers offhand. U.S. comps or like U.S. comps ex fuel. I know some of the street was watching that.
Yes,
kind of core.
U.S. comps were up, and they were up also globally. And one thing that John David Rainey said also is that they are seeing that people are choosing them not just because of price, but also because of convenience. He pointed to that e-commerce growth. And I think one thing that some investors may have been missing is that Walmart's made a lot of strategic plays here. It's been growing its third-party marketplace, growing its advertising dollars. It's launched a new private label brand in grocery, and those types of things are also moving the needle, along with attracting people who are frustrated by inflation.
Seeing U.S. comps at 4.2%.
4.2. Ex-fuel is ex-fuel. They were at 4.2.
Yes.
I think the whisper going into this was more like 3%. That would certainly explain why the shares are up 5.
Yeah, exactly. And the other thing that was interesting that he mentioned is that they are seeing people who are just being a little bit more willing to spend for seasonal items, and so seasons are very important. Back to school, he said, started strong, and generally that's seen as an indicator for the holiday season, so that may be some good news too.
Really interesting. Shares are up almost 5%.
Looks like an all-time high, actually.
Right now.
Yeah.
Here's the only weird thing. Walmart Jim Paulson has the Walmart recession indicator. When Walmart shares do well relative to luxury shares, that's typically a sign of a slowing economy. So we have to read it both ways. Is it good or bad that they're going up? I think they're going up today for the quote-unquote good reason.
Yeah, and it's gotten complicated with the e-commerce side of Walmart, and
because you think
the
it's a more
general
upscale
market
version
share,
of,
and just the market share gains that they've had. It's a little more representative, arguably. I don't
Certainly than 20 years ago.
Yeah.
Absolutely. I completely agree. Much broader swath of the U.S. consumer, or the kind of spending it would capture than in the past. Yeah.
Yes, that's the tricky thing to tease out. How much of this is because of Walmart's own strategic moves versus people trading down? Historically, you're right. When Walmart did well, it was almost seen as a concerning sign. You know, are even upper middle and high income consumers being forced to go to Walmart. But now Walmart's saying, hey, we're getting, you know, a little fancier, or at least, you know, even though like with Better Goods, it's new private label grocery brand, most items are under $5, but it has a lot of flavors that might resemble a Trader Joe's. So it's a little bit more, you know, appealing to a wider variety of consumers.
And perhaps most importantly, especially for equity investors, going back a couple of quarters when they first started to talk about choiceful, you know, it's such an interesting neologism, not choosy, choiceful, but that was the beginning of a sign that stock picking in retail was really going to matter, and boy has it. So they're sticking with that theme without saying that they necessarily see any increase in softening of consumer spend overall.
I also asked him about pricing specifically and inflation, and he said it was flat this quarter. So all the growth that we're seeing Walmart report was from units rather than dollars. And
Nice.
for a long period of time, obviously, that was coming from everything costing more.
Don't tell Kamala Harris. Okay. Melissa, thank you. Appreciate it. But look at Walmart shares now. They're up 7%. Take a look at what that's doing to the Dow. It's certainly lifting futures. It has a relatively big impact there. Dow would open up 88 right now. Let's get to Dom Chu now with a look at more of today's pre-market movers. Hi, Dom.
Hey, Kelly, Mike, Andrew. Well, roughly half of the Dow implied higher move is because of Walmart right now. So it gives you an idea of just how important it is for the Dow's move right now. We'll get you started off with some of the other stories happening right now, including a very big jump in shares of Lumentum, which are right now up nearly 16% after the company's fourth quarter results. Earnings beat forecasts. Revenues fell less than expected, so better than expected overall. This is the provider of optical and photonic products. It says it's expanding its cloud and AI customer base, which should lead to higher growth in the coming year. Investors cheering that on, up about 16%. Next up, you got shares of Robinhood, which are about a couple percent higher this morning after analysts at Deutsche Bank upgraded that stock's rating to a buy. Deutsche Bank also calls Robinhood a best name for both e-brokers in the near and long term, so Robinhood shares up 2.5%. And we'll end with a look at technology overall, because analysts at Bernstein Research saying that volatility is creating an opportunity for names like Uber, Amazon, Dell, and Broadcom, amongst others. They're calling them top picks for the sector. Bernstein is seeing a good amount of upside to those stocks, basing those results on things like earnings performance, AI exposure, also including firms like Broadcom for more defensive play in a more volatile chip space. Those stocks you can see here mostly in the green, fractionally up about 2.5% for Dell Technologies. And by the way, for more on those big calls and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers can get full access to the detail and analysis of those key reports. Kelly, I'll send things back over to you and the positivity around those Walmart earnings. Back over to you guys.
That's a biggie. Dom, thanks very much, Dom Chu.
Okay, coming up on the other side of this, Vice President Harris expected to release her first major economic plan tomorrow. We're going to have a preview of what could be in it and what it could mean for your money. And then later, the impact of social media on the election. Gary Vaynerchuk's going to join us later this hour. Always fun to talk to Gary about all things going on social media, including this election. Squawk Box returning after this.
Welcome back. We've seen a big move in shares of Walmart after those earnings a few moments ago. It's helping futures somewhat. The Dow's up, implied to open higher by 82 right now, NASDAQ 16 and S&P by 2. Let's bring in Mona Mahajan, Senior Investment Strategist at Edward Jones, for a little bit more. Mona, good morning to you. Do you want to dwell, if all, on what we just heard from Walmart? I mean, I think this is really important. They're out there with a nice U.S. comp, even without the help of a lot of price inflation. The shares are up 7% last check.
Yeah, thanks, Kelly. Look, we liked what we heard this morning from Walmart. It does seem to align with the broader narrative of a soft landing and a consumer that may be cooling, but certainly not collapsing. In particular, I think the call out that this quarter has not really shifted in any notable trends, meaning the consumer has not seen a notable leg lower at the start of this quarter. That is a positive sign as well. So, of course, we'll be watching retail sales this morning, as well as that jobless claims number to reaffirm some of what Walmart is saying. But thus far, it does seem to confirm a soft landing narrative, which is great.
Yeah, no, you're brave for coming on to give an opinion. When an hour from now, we're going to learn, so many key data points. But I agree with you. I don't know how much they're going to move the needle now. Even the increase in jobless claims this summer is reminiscent of what happened last year. It doesn't seem like it's necessarily the kind where it starts to accelerate and then keeps going. But don't you agree that's probably, other than the jobs report, the main economic data point right now?
Yeah, it certainly seems like the other side of the Fed's dual mandate has now come under the spotlight. So, of course, this week we got the inflation narrative that was also reaffirmed. It seems like we're moving in the right direction there. So now all eyes are on that labor market. And we'll get, of course, the ongoing jobless claim series. We will get on September 6th, the next non-farm jobs report. That'll be the last one before the Fed meeting on September 18th. So, of course, what we're seeing in the jobs market broadly, that unemployment rate has ticked up to 4.3%. That's above the Fed's kind of target of 4%. So we're in a position on both sides of the dual mandate where they're probably poised to move here.
Do you think CPI yesterday makes them go just a quarter point next month instead of a half point?
Yeah, I think CPI probably didn't move the needle all that much. We liked seeing that two handle. We liked the 2.9%. We're moving in the right direction. What we didn't like was seeing the stickier shelter and rent part of the equation. We think that does still have room to move lower, especially as the shelter and rent catches up with some of the real-time data we're seeing, and we know that acts with a lag. We'd also like to see services broadly. It's been a little bit stickier than we'd like to see, but I think as wage gains start to cool, we'll start to see that come through as well. So in our view, the 25 basis point rate cut in September was probably baked in. I know there was some chatter about a 50 basis point rate cut. That to us, we didn't see any urgency for that in the economic data. So we think the base case remains at 25, and we probably see at least 2 to 3 cuts this year.
Mona, whatever specifically was driving this pullback we got starting in mid-July, it definitely reset, I guess, some valuations. It took some of the steam out of the biggest index weights, the mega cap growth stocks, and then, of course, also interrupted what seemed like it might be an attempted rotation into the rest of the market. I guess, where would you look to try and gain or add exposure, if anywhere, within the market?
Yeah, we think the broadening theme probably still has legs here. What we'd say is we still prefer the large cap and mid cap space to play that broadening theme. We still remain a little bit cautious on the small cap space. It's more leveraged than average, and it does have less positive earners, more quote unquote zombie companies. So we'd still say stay in that large and mid cap space. What we'd say more broadly is, the theme of the last 6 months and really the last 18 months has been, if you had a narrow portfolio, you were doing well. If you were overweight technology, mega cap, tech in particular, that was a way to really generate positive alpha. As we think about the next kind of 12 to 18 months, we think the theme will really be you need to have that diversification in your portfolio. And that could include a complement of your mega cap AI portfolio, but really you need to see other parts of the market in there as well, cyclical and value parts of the market, some large and mid cap, and even a little bit of international. And we think that diverse portfolio will be the way to kind of win in the next several months ahead.
And it's interesting to see a lot of the 13F filings reflect that as well. A lot of big movers moving out of those kind of sure thing big tech stocks and looking elsewhere. Mona, thanks. Appreciate it.
Thank you, guys.
All right, still to come, the first built-from-scratch nuclear reactor in the U.S. in 30 years, now up and running. We'll head to Georgia for a look at what it could mean for the industry. Squawk Box will be right back.
Time now for today's Aflac trivia question. What brand of bottled water has the largest global market share? The answer when Squawk Box returns. Now the answer to today's Aflac trivia question. What brand of bottled water has the largest global market share? The answer, Dasani. Launched in 1999 by Coca-Cola, the brand has 12% global market share, followed by Evian with 9%.
Welcome back to Squawk Box. Nuclear energy at a turning point, seeing momentum as power demand jumps from electrification and data centers, but the industry's traditionally steep price tag threatening U.S. goals to triple nuclear power by 2050. Pippa Stevens is in Waynesboro, Georgia, where the first U.S. reactor built in years now is operational. Pippa.
Good morning, Andrew. I'm here at Southern Company's plant Vogtle beneath this massive 600-foot cooling tower. And in the background, you can see nuclear reactor 4, which recently connected to the grid, together with reactor 3, which came online last year. They're the first newly built reactors in the U.S. in 30 years. Now, they set beside 2 reactors that booted up in the late 80s, meaning this plant now provides power for more than 2 million homes, making it the largest clean energy source in the U.S. Nuclear makes up roughly 20% of the U.S. electric grid, but new builds have stalled. The meltdowns at Chernobyl and Fukushima shifted the public discourse on nuclear power. The industry also has a history of being over budget and behind schedule. This plant is no exception. It was 7 years late and more than double the estimated cost, some of which falls on Georgia's residents. Southern Environmental Law Center called the price tag astronomical, estimating that a third of next year's rate hikes are because of Vogtle 3 and 4. Southern Company CEO Chris Womack told me that the cost overruns are because the U.S. hadn't built a reactor in so long, and that to meet surging power demand, we need an all-of-the-above energy approach, including nuclear.
We see an economy, we see a state that is growing. We see usage that is also increasing. There's not a better investment from an energy standpoint than nuclear power in terms of where we are today and the fact that these units are going to run some 60 to 80 years.
Now that these plants are online, there are no new commercial reactors under construction in the U.S. And Andrew, I got to tell you, this really only scratches the surface. We got an inside look yesterday at this very finely tuned operation. There are miles and miles of pipes beneath me, miles and miles of cable, and even enough cement, I'm told, to pave a sidewalk all the way from Seattle to Miami.
It was what, 20? I mean, Pippa, how many years did this take to come to fruition? I can't even. This is such. To the fact that you're finally standing there, could it be 20 years? I mean, how long has this taken? I hope, like you're right, the next generation, we talked about the one out in the Midwest, are people going to try to stick with this scope of project, or to try to do something a little bit more, affordable and doable from now on?
So this was started in 2009, and so the company notes that there were a lot of hurdles that led to it being behind schedule and the cost overruns. Of course, the financial crisis, and then we had COVID. Their supplier Westinghouse even went bankrupt at one point. And then, but more importantly, they said it was simply because the U.S. had lost the know-how for how to build one of these. I got to tell you, it is really, really finely tuned in there. We saw the steam turbine room, and this just takes an enormous amount of manpower to get one of these off the ground. Also, the NRC, this industry is highly, highly regulated. They changed some of the regulations when this plant had already started construction, leading them to have to rethink how these would operate. But this new AP1000, they are the first of their kind in the U.S., and they're now being built around the world, just not here. However, there is a lot of hope that other companies can take away some of the insights that Southern Company learned here and then apply those to other reactors. But in the meantime, Kelly, as you noted, there is a lot of momentum behind SMRs, those smaller modular reactors.
Yeah, no, and it'd be great if we can export this know-how, especially so other parts of the world don't have to go elsewhere. Pippa, really appreciate it. Thank you on a big day. Pippa Stevens. Coming up, the Harris-Walz economic game plan. The vice president expected to unveil her policies tomorrow. A preview of what's coming straight ahead. And as we head to a break, take a look at this morning's leaders and laggards in the S&P 500. Walmart up there, but look at Ulta as well on the news of a Berkshire's position. Squawk Box will be right back.
Walmart.com/hire.
Welcome back. A slew of retail earnings this morning. We already heard from Walmart. And here's a look at Alibaba, which is falling after reporting mixed quarterly results. The earnings did top estimates, but the revenue was short of street expectation. E-commerce sales were under pressure from cautious spending by Chinese consumers, and the shares, Mike, are down nearly 4%.
Meanwhile, shares of Tapestry moving higher. Earnings of 92 cents a share came in 4 cents better than the street had expected. Revenue of $1.59 billion, also topping estimates. Company noting momentum at Coach, driving handbag revenue growth. Shares up 5.4%, though it's been a little bit of a rough go since March for that stock.
Okay, coming up on the other side of this, the economic issues impacting life and investments. A look at how Kamala Harris planning to tackle inflation and her ideas, and how they may compare to former President Donald Trump's, and maybe even to her current boss, President Biden. As we head to a break, quick check on Walmart after the company's quarterly report. You're looking at that stock on the move this morning, higher, up to about 7%. We're going to talk retail and the consumer in just a bit. Don't go anywhere. Squawk Box returning after this.
Former President Trump making his economic pitch at a speech in Asheville, North Carolina yesterday. Here's a listen.
Vote Trump and your incomes will soar, your savings will grow, young people will be able to afford a home, and we will bring back the American dream bigger, better, and stronger than ever before.
In that speech, Trump also pledged 10 to 20% tariffs on foreign countries that he says have been, quote, ripping us off for years. He also pledged to slash energy and electricity prices by at least half within the first 12 to 18 months if he's elected.
Meantime, Kamala Harris's economic agenda is starting to take shape. The vice president's team reportedly working on making housing more affordable, lowering costs for families, adjusting corporate taxes, and more. Doing this right now, former White House Chief of Staff under Donald Trump, Mick Mulvaney. He's co-chair of Acton Strategic Advisors. Also, John Hope Bryan, founder CEO of Operation Hope. He's also a CNBC contributor. Good morning, gentlemen. But, we have not heard in any real specificity exactly what Vice President Harris's economic policies are going to be and how they may differ from President Biden. Do you want to give us a preview to the extent you understand it, John O'Brien?
I think you've seen a sense of that, actually, when you looked at the medical debt, where she took medical debt and made sure that for all Americans it didn't count against your credit score, and that because if you have something that is really a one-time event like that you had no control of, you cannot get a mortgage, you cannot get a home, you can stop your whole life. A little thing like that goes a long way to understanding her mindset. I think the economic opportunity tour she just did, which we participated in, is also a set. I think she understands this is the aspiration generation. That's what I've told her people, and they didn't disagree, that this is about grow and repairing the ladder of growth for all Americans. I really think it resembles a lot of what I heard and saw in the Bill Clinton administration, the President Bill Clinton, which is the last time we had a balanced budget and growth at the same time. I don't think there's anything to fear here. I think there's a lot to be optimistic about. It seems pretty centric to me.
Hey, John, real quick before we get to Mick, I think one of the things we're going to hear is this idea of price gouging and corporations needing to be, quote, more responsible and things like that. We've heard that kind of language from President Biden and others before. Having said that, we've also talked to people like their own Treasury Secretary, Janet Yellen, who would say that corporations are not gouging, that there's a supply and demand imbalance, and that this is what happens in a capitalistic society.
Yes, again, I think that she understands the market economy. There's a difference between her and President Biden that I've noticed. President Biden really is sort of for the worker guy. I mean, he grew up in that whole ethos, and I think that I don't know if it's generational or what it is, but the vice president seems to be more about growing the pie versus cutting it up, or protecting you by giving you more pie to share. And I think that you're going to see an expansion, a desire to expand the market opportunities, including housing. Again, I don't know, but we'll find out from her very shortly. But right. That's my sense of things. Is it's not going to be yes, or anybody. If there's some bad guys out there, she's a prosecutor. She's coming after you. But I don't think that the focus is on prosecution. It's on prosperity.
Hey, Mick, there hasn't been enough details, I imagine, for the Republican Party to fully take on her economic policies, and I imagine you are waiting to hear them and get them in stark relief so you can. But what are you expecting?
Yeah, which is exactly why we don't expect any details. Look, there's a basic rule in law, it's a basic rule in politics. When you're winning, sit down and shut up. And right now, she's sort of moving in the right direction. So I do not expect any more specifics than we've got already. I expect a lot of aspirational language, a little bit of hope, a little bit of change, a little bit of, win the future, maybe a couple things on specific provisions. But why give details when all that's going to do is allow people to attack you? By the way, this is the first I've heard anybody ever equate her economic policy to Bill Clinton. I do not expect her to come out and say that the age of big government is over. What I expect is the same thing you've got before, which is it's going to be generalities. There's no reason for her to do anything more than that. So I'm not optimistic about what we're going to hear in the next couple of days. In fact, what I think you're going to hear after her presentation tomorrow, assuming it happens, is her not giving details. And then when her supporters and surrogates are asked, well, what about the details? They're going to say, well, you just heard the details. And they're going to move on to the next topic. So listen, if you hear anything other than aspirational language, abortion, and Trump is the devil, then she's off message.
Mick, let me just drill down on that for 1 second, which is to say, do you believe that she can pursue this sort of vaguer strategy, which I understand you think is the politically astute approach to this, and I'm sure that will frustrate others. But if that is the approach, can you get from here to November without details, or are you just suggesting over the next couple of days you don't need to do details, but maybe once you get to the convention you have to provide some more details, or maybe post-convention once you get into a debate period you have to provide some details?
No, I think you play it out as long as you possibly can and hope that you can get to November. Here's why. A couple different things. First of all, this is a very unique election. It's only going to be, what, 82 days or something like that left? So it's not the 2-year campaign. There's not the pressure to sort of continue to feed information to the media. She's riding a honeymoon period right now, and she might be able to ride that the next 82 days. Plus, there's the other opportunities you get to sort of to offer details that won't be there. My guess, listen, I'd be surprised if there's might be a debate. You hear talk about 3 debates. I don't understand why she would debate if she's winning. So no, I think you can ride this out. The last issue would be this. The folks who have undecided, and there's fewer and fewer of those every single day, are the folks who are undecided for a reason, which is they don't pay attention and they're not driven by the specifics of policies. They're driven more by personalities. So it's a unique situation with a short period of time, a small number of undecideds where you might be actually able to run for and win the presidency without offering any specifics.
John, you agree with that?
Yeah, I don't know whether to love what Mick's saying right now or to hate it. I mean, I agree with what he's saying about if you're winning, if it ain't broke, don't fix it. And I think she's got a movement here, not just a campaign. But I disagree if that is for any reason that she doesn't have a plan. I think, again, what America needs right now is a balm. They need healing. Like, we've been separated. We've been told that this person is that person's fault, or this problem is that person's fault, and you're my enemy, and calling this person a name. And I think that people are exhausted. They're absolutely worn out by all of this, right. And they want to feel that we're better together. So if that's what Mick is saying, yes, I agree with that. That we actually that's not a cover. That's essential, because this country is not a country. She's an idea. And the idea is that we're better together, and that's how you grow our economy, because the people at the bottom who look very different than folks at the top.
I think one of the fundamental questions is, are we going to learn, for example, are we going to learn, and I think a lot of viewers would want to know, I would want to know, this is a curious person, what's her tax policy? What's that going to look like come 2025? What should the rate for ordinary income be for individuals? What happens to SALT under her, in her view of the world? What happens to the corporate rate, right? These are fundamental questions. What kind of regulators would you like to have at the FTC, at the Department of Justice? How do you think about cryptocurrencies and the like? The question is whether she needs to describe in any detail how she feels about those things. And then, of course, and I imagine Mick is just getting ready, he's just getting ready to run the ads on the other side of it, but, to the extent that she says anything different than she had said a year or 2 or 3 or 4 ago, then there's going to be the critique that, she's changing her position, right?
I think that, first of all, you're not dealing with an unknown here. She has been vice president for 4 years. She did help the administration come out of the pandemic, the worst pandemic since the Spanish flu. The reason we have inflation, which is now becoming baked in, unfortunately, in some regards, with price increases, which I think she did a battle. The reason we have that is because we had all this stimulus that had to batter the COVID situation, which shut down the economy. So she did help manage a crisis. The policies, I think, have grown the economy. I think it has grown the economy when I think it could have imploded, frankly. The Fed has lowered interest rates, and the economy still has raised interest rates. The economy still is held together. So you've seen what she's done as a co-pilot. I think you're about to see what she does potentially as a pilot. My conversations with her have been conversations that are rational and reasonable and down the middle. I would call them, again, it reminds me of talking to President Bill Clinton. What she's going to do and how she's going to govern versus how she's going to run for office might be slightly different. Again, I'm saying the country needs healing right now. Look at how the excitement of women, look at the excitement of young people, look at the excitement of people on the edges and the margins. They're like, okay, finally a breath of fresh air. I'm just saying that there's a time for everything. This might not be a time where you're going to get all that detail you want, but I think that the writing is somewhat on the wall, and I don't hear her say anything crazy. She knows we need to grow the economy, and she doesn't hate rich people. Let me make that very clear. I know that for sure. She doesn't hate rich people. She thinks that prosperity is a good thing, which means she likes me.
Yeah, Andrew, here's what you're going to hear. You're going to hear make the rich pay their fair share. no taxes over on anybody making under $400,000 a year. You're not going to hear a word about how to balance the federal budget or how to deal with Social Security or Medicare. But I'm agreeing with John, by the way. That's the smart play at this point. His message about people want healing is probably correct. That's the winning message right now, not economic policy. But if you're an informed voter, and there's not that many of those left who are undecided, you're not going to know what you're voting for when you go to the ballot box, but fewer and fewer people seem to care right now. The election looks like it's turning into a personality contest as opposed to policies. And as a Republican, it's very frustrating because I feel like our policies are better right now than the Democrats, but that's not where the voters seem to want to be today.
Mick, real quick before you go, what do you think of the polls? And the reason I ask is it does appear that there's a movement afoot that would put Vice President Harris in the driver's seat at this moment, though I know there are others, especially inside the party close to Trump, who would say, look, these polls are undercounting Trump voters.
Yeah, there's all sorts of details and so forth. The bottom line is this: it's still a 50-50 race, and you may feel the pendulum swing 2 or 3 more times in the next 80-some days. So it's going to be very, very close, regardless of what polls you're looking at.
Mick Mulvaney, John Hope, Brian, always great to see you both, gentlemen. Thank you.
Thanks, y'all.
And coming up, more reaction to Walmart's results, which came out top of the hour and have the stock on the move big time. It's influencing the Dow as well. There it is, up about $4, 6.5%. Plus, VaynerMedia founder and investor Gary Vaynerchuk joins us to discuss social media and the election, the impact that will have on this very tight race. Squawk Box will be right back.
Walmart reported results earlier this hour, earnings of 67 cents a share. That was 2 cents better than estimates, and that's on revenue that also topped expectations. Walmart U.S. comps ex-fuel came in at 4.2% year-over-year, better than the 3.4% the street was looking for. CFO David Rainey said the company has not seen a change in consumer behavior and shopping trends. Joining us now to break down those numbers, Chuck Grom, Gordon Haskett, senior analyst. Chuck, great to have you here. I mean, obviously the street's embracing these numbers. It's a little bit of a different tone than what a lot of companies have offered in terms of the consumer condition and fatigue. Do we extrapolate from what Walmart is saying here to the overall economy?
We'll find over the next couple of weeks when we get retail earnings. But I think Walmart really is probably going to be more the exception than the norm here. I think retail sales in July, we're going to find those out in about 30 minutes. I think we'll be weak. I think the consumer is under a lot of stress, and I think what we're starting to see here is a lot of market share between three big companies in this country, Walmart, Costco, and Amazon. And Walmart's results today on the surface are good, but when you dig into the details, they're tremendous across gross margins, across membership, across advertising. They basically checked almost every single box we were expecting this morning.
And so that tells you what? I mean, they're tremendous. Walmart's executing. It's in the right place for this economy.
Yeah.
I mean, does the stock account for that at this point? We're at all-time highs, stock up 6%.
I think the stock's going a lot higher over the next couple of years. We're just starting to see the flex of their second P&L into the margin structure, which means earnings are going higher. Yeah, the stock's expensive, but so is Costco, and Costco's hitting 52-week highs as we're seeing. I think to your first point of your question, Mike, on the consumer is I think the consumer's extremely focused on value. Our price work shows Walmart's price gaps are at an all-time high, and that's leading. But value is also coming through convenience, and given Walmart's digital move and their Walmart Plus, which we saw today in their membership numbers, we're starting to see that strength as well there too.
So it's interesting because it does allow us to look at other companies and saying, yeah, maybe a tougher environment, but also you're just losing to Walmart. And I wonder what that says about the overall economy and whether, a little bit of Fed rate cutting is going to help anything in terms of refreshing consumer energy.
Yeah, the one thing I didn't point out, and we saw in the release today, and I think this is the lateral across other companies that you're asking about, is Walmart's general merchandise business was flat in the second quarter, which doesn't sound heroic on the surface, but that's a big improvement after probably over 2 years of seeing declines in general merch. So we're starting to see that part of their business stabilize, which would be good for companies like Target and some of the other discretionary names we see. There's short cycle categories that are doing better, apparel and home. There's long cycle categories that are doing softer, like CE and office supplies and some of the bigger ticket furniture. So again, we'll find over the next couple of weeks. But on the surface, this is a good number by Walmart. It's probably an indirectly good trend for retail.
Yeah, I'll note that Target shares in the pre-market are up about 3.5% as well. Chuck, great to talk to you. Thanks so much.
All right, thank you very much.
All right, coming up, the creator economy and the election. Gary Vaynerchuk joins to talk about social media's role, how AI could impact voters, and much more. Futures ahead of a flood of economic data due out are positive. The S&P 500 up, not quite 1/4%. The Dow up 134, thanks largely to that big pop in Walmart. NASDAQ ahead by 50 points. We'll be right back.
Welcome back to Squawk Box. President Biden hosting 100 creators and influencers at the White House yesterday. It's the first creator economy conference. Both the administration, the Trump and Harris campaigns have tapped into social media to spread their message. Joining us right now is an expert, the expert, I will say, in social media messaging. Gary Vaynerchuk is here, VaynerX chairman. Good morning to you.
Morning.
So, how do you think this election is going to play out on social? Who's winning right now?
I mean, look, America's 50-50. Who's winning? Both, neither. Depends how you want to look at it. I think what's most important is when you think about what they did yesterday, I think for the people that are watching this program, I'm stunned that Washington, D.C. is sometimes ahead of Madison Avenue. I think the real punchline is that Fortune 500 companies are grossly under-investing in influencer marketing, and it's wild to see that the candidates are starting to, and the White House is starting to understand the power of it, because these humans are media outlets, no different than CNBC. Right. You know, your platform, my platform, your platform. So I think, how is it going to play out? I think it's going to play out. I think we're so polarized. People are going to vote the way they're going to vote. They're not going to have an influencer change their mind. But I think the business impact is huge.
But what do you think of the idea of a campaign reaching out to influencers to use them and to leverage them, if you will, in these campaigns, including potentially, and I don't know the truth of it, you may actually know more about it, there's some sort of, it's almost an accusation or speculation among some influencers that some of these campaigns are going to start paying the influencers on their behalf.
I mean, as long as they're disclosing that, like they're supposed to do on everything, right? If this water pays an influencer, they're putting hashtag ad. Right. FTC's pretty clear on this. Again,
and I don't know if that's happening. You're starting to see some
it'd be crazy
influencers
if
talk
they
about
weren't.
that.
I mean, wouldn't it be worse if they didn't pay them in a weird way, or if they wouldn't?
I don't know. It's a very interesting issue.
I think it's less of an issue and more of a dawn of starting to understand that at the end of the day, attention is the punchline. Back to the format we're on now and presidential elections. If you go into your history books, kids, the JFK-Nixon debate played out very differently on radio than it did on television. Right. I don't know how people don't get this. The Obama win and the Trump win, 8 years apart, happened because of social media. The reason that people continue to be confused...
But not the Obama win, but the Trump win.
Oh,
Do we have
Obama,
social media?
Of course. If you go break down...
Barely, I mean...
Not barely. The 2008 Facebook execution that the Obama campaign did is historic, and the preview to 2016 Trump Twitter. Social media has the attention of the end consumer at a scale that our society continues even now to underestimate, and those who know how to create, communicate, and execute on it win.
Which platforms do you think are winning? Meaning, so Donald Trump going on X the other night with Musk. How much influence does that have versus whatever you think he's doing or she's doing now on TikTok or Instagram?
I think both campaigns are grossly under-executing on LinkedIn and Facebook.
Interesting.
LinkedIn.
TikTok, as we all know, kids talk but don't vote. I'm a businessman. This is just practical to me. I think both campaigns are getting caught up in the same thing that Fortune 500 companies are getting caught up in. They're going to the cool place.
But wait a minute, you just said that Facebook in 08 and 20, you could have said at the time, it's just the kids votes don't matter, but they evidently mattered. So shouldn't you go to the hot new thing now?
There's some good validity to what you're saying there, but in 08, it was such momentum and such a different time, such a unique campaign. Plus, kids only vote during times of hope. Kids vote when there's hope and optimism. There's no hope and optimism in the air right now. Let there be no confusion. There is nothing but fear being weaponized. There's no hope in here. So that's one.
I think Harris is trying to be a candidate. I think even
the problem is, I respect that, and that's a great call, but I think it's got to be contextual. If you look at 2024's version of hope, it looks very different than 16 years ago, and definitely different than Clinton and JFK. We're in a very different place. But I do want to say this: Facebook is grossly underpriced organic reach. That's the other thing. Unlike spending a fortune on a television commercial or a billboard, when you know how to do content on social as a business, as an entrepreneur, and as a candidate, You get reach for free.
Well, it's expensive now. I mean,
No,
if you do organically, but if you do ads, it's really gotten expensive.
It's dramatically cheaper than every other medium in the world. Google, AdWords, television, print. It's not. It's more than free, but the price of the CPMs is dramatically underpriced. And there's another thing. All of this is based on reach. How many people can you reach? Social media, because of the way the news feed works, you don't know that the next picture or video is an ad. When I watch CNBC, when you're like, all right, we'll see you after this, I know an ad's coming. When I look at, I'm in my phone when I'm in a car, I don't see the billboard. More social media ads are actually consumed on their reach than the potential reach of every other medium, and their CPMs are lower. So I would argue it's underpriced. That's above and beyond the fact that organic reach is free.
Can I ask you just a different question about this hope idea for a second?
Yeah, please.
Does hope work on social?
Of course it does. How do you think I have 40 million followers?
No, I think it does.
Me too. There's only two extremes. There's hope, which is hard.
Right.
Love and hope and optimism is hard. Fear and negativity and cynicism is easy and lazy. Yes, hope works. The problem is most people aren't talented enough for hope.
Well, but that's what I was going to say. So it becomes this sort of, train wreck, everybody's, rubbernecking, and that seems to work.
That becomes societal accountability. Before we blame the candidates and social media and our parents, I actually think it's time for everyone to, instead of pointing fingers, to point thumbs. If you are leaning into cynicism and negativity, that's your fault.
That's an awesome message. Before we let you go, you're heading over. I'm going tomorrow, dressed in full gear as my Jordan uniform from the old days.
Well, I don't like that because I'm a diehard Knicks fan and I hate Michael Jordan.
I get it. I, by the way, grew up in New York, and I was a self-loathing Knicks fan for the last 20 years. But back in the day, we're supposed to go.
No,
grows up in New York.
No, Knicks fan.
I understand.
We talked about a lot of important stuff. This is the most important. You were not allowed to be a Michael Jordan fan if you were an over 35-year-old Knicks fan.
It's a Birmingham Barons Michael Jordan jersey.
All right, fair.
So my question.
Anyway, yes.
So you're going to be there.
I will be there. Fanatics Fest is going to be.
And you just did VCon.
I just did VCon. I just did the National Sports Card Convention. I am on the road this summer.
So what are you doing tomorrow?
Tomorrow I'm setting up the VFriends booth. I'm building a Pokemon meets Marvel IP. And so we have a very substantial setup next to MLB and WWE. So 10-year-old me is pumped. But I'm also speaking on a keynote panel on Sunday about the state of the hobby. So like the business of collectabilities. And I'm going to be mingling and shaking hands and kissing babies.
What's the state of NFTs?
Like I said, in the hype of it, 99% went to zero.
Right.
Just like 99% of sneakers and watches and trading card and art is worth zero. And right now the 1% continue to hold, but the macro brand is in the garbage. Just like in 2000, the web brand was in the garbage because all the stocks collapsed. But the macro technology of the blockchain is profound, and actually right now is the time to be very thoughtful.
But is there like a value play to buy the apes now?
Yeah, what's the 1%?
If apes is Nike, if apes is Lacoste, no. And that becomes the question of like, who's the CEO? You look at what Starbucks.
You've been right about a lot of this stuff, so.
I feel very right about, I think most
What would you be buying right now?
Honestly, I don't want to guess and be wrong.
Right.
One of the reasons I tend to be right is I don't like guessing. I think a lot of people misunderstood the NFT market. Again, which is why I was saying 99% are going to zero, 99%, but nobody hears that when things are hyped. Nobody hears like, be careful about inflation coming on the back of us printing unlimited money. They just go buy Dom Perignon and LVMH products.
Gary Vaynerchuk, thank you for bringing us some hope this morning.
Thank you.
It's just after 8 a.m. this morning right here on the East Coast. You're watching Squawk on CNBC. Got a couple of big stories to tell you about. Some key earnings reports coming in. Walmart topping second quarter profit. Revenue expectations beating as well. The retailer also raising its forecast for the year. Sales of general merchandise at Walmart positive for the first time in 11 quarters. Take a look at the stock up over 6.5% in the pre-market. But then take a look at this, folks. The flip side, Alibaba falling short of analyst earnings and revenue projections in its June quarter. The internet giant facing headwinds in its core e-commerce business. That's thanks to rising competition and a cautious Chinese consumer. And Cisco saying it's going to be cutting 7% of its global workforce, the second set of mass layoffs at that company in the past year. Back in February, Cisco saying it would cut 5% of the positions. The company also posting better than expected fiscal fourth quarter results. both on the top and bottom lines. And don't miss, Cisco CEO Chuck Robbins is going to hang out with the gang on Squawk on the Street and explain what's going on at that company at 9:30 a.m. Eastern Time this morning.
And let's get a look at futures, which have been helped by those positive Walmart results. So the stock last check up $4. That's 30 points or so. It doesn't hurt. The futures say the Dow would open up 131, NASDAQ 45, S&P 10. Michael, 90 minutes until the opening bell. What are you watching?
Well, we're obviously going to be watching retail sales, how it affects the bond market calculus of how the economy is hanging in there. But we are at an interesting spot going into that news in terms of the S&P 500, this rebound we've gotten over the last 7 trading days. Look at where it's taken the S&P to, right to its 50-day average. Wow. Sometimes that's a logical place for a relief rally to take a pause or reset. It's where relief rally would have to give way to a true resumption of the uptrend at this point. And again, we're 4% away from the all-time highs. That was only a few weeks ago, about a month ago. So it's not as if this has been a severe correction, but the velocity of it on that Monday with that unwind, that 3% down day really did, I think, purge a lot of optimistic sentiment. We'll see if that benefits us. Take a look at over the last 6 months, the NASDAQ 100 and the equal-weighted S&P 500. They look pretty similar. Obviously, the mega tech growth stocks have come in a lot now over the last year. NASDAQ 100 up 28%, equal-weighted S&P up more like 12. So it's still not an all-inclusive market, but you've taken care of a little bit of that over-concentration that you had a while back, even though small caps have not kept pace in this rebound rally. And then finally, take a look at the volatility index. It's the fastest ever decline from above 35 as a close to under 17 as a close, which is like the long-term average is like 17.5. That shows you that it was this kind of mechanical concentrated panic on that day. It did not seem as if, people are even calling it kind of a mini flash crash.
Or like the Volmageddon or whatever.
Yeah, exactly. And so it did obviously create this big pulse of panic, and we've receded from there.
All right. Mystery broker still.
Meantime, when it gets caught up on some stocks making some moves in the pre-market this morning, shares of farm equipment maker Deere rising, the company topping analyst profit forecasts with help from stronger pricing and cost control efforts. Those helping preserve Deere's margins despite what appears to be a weaker demand for heavy machinery. Looking at that stock up a little bit over 2% this morning. Chinese e-commerce giant JD.com also rising, profit coming in above estimates. That's thanks in part to a mid-year sale and aggressive price cut by that platform. And take a look at an assortment of names. We've talked about these: Ulta Beauty, Nike, and Apple. What do they have in common? They were favored by some of the biggest investors in the world last quarter. New 13F filings revealing what we call the whales. Warren Buffett's Berkshire Hathaway taking a new stake in Ulta. I don't know if he's by the one who took it himself.
Yeah, there's no way.
It's unlikely because it's also such a small position. It looks like. Hedge fund manager Bill Ackman buying Nike. Interestingly, you made the point. When did he buy Nike? Yeah. Did he buy before the fall, or did he buy right after the fall?
Second quarter, right?
So is he buying as the knife was falling? We don't know. Dan Loeb from Third Point building a stake in Apple, so taking the opposite tack that Warren Buffett was taking.
True. Indeed. Coming up, the White House out this morning with the first results of Medicare's negotiation on the price of some key medications. We'll have those details after the break and speak with the administrator of the Centers for Medicare and Medicaid Services. Stay tuned. Squawk Box will be right back.
insurance.
We got some news out this morning from the White House. The result of the first Medicare drug price negotiation. Bertha Coombs is here with a look at how drug price plans will change next year for beneficiaries and also insurers. Bertha.
That's right, Andrew. Big changes coming. You know, the administration is touting $6 billion in savings when those new negotiated prices go into effect. But that's not until 2026. There are some fundamental changes to Medicare Part D under the IRA that could actually raise costs in the near term. Next year, out-of-pocket costs for Part D beneficiaries will be capped at $2,000, which HHS estimates will save patients $7.4 billion next year. Under a new program, they'll also be able to smooth out their drug costs over time, kind of like buy now, pay later. That extra coverage is going to mean higher Part D premiums, but those premium increases will be capped at 6%, which means that insurers will face higher costs after patients reach that $2,000 cap, because the government is also scaling back its share of payments or reinsurance for brand names from 80% to 20% of the cost, and for generics from 80% down to 40%. Now, CMS says initial 2025 Part D premium bids from insurers more than doubled as a result, but they are offering insurers the option of subsidies for the first 3 years to help stabilize premiums during this transition. And as a result, CMS tells me for patients, base premiums for Part D will go up about $2 next year. Nonetheless, it's going to be a big shift for patients in terms of what they're going to be responsible for these drugs.
What are you hearing from the drug makers?
The drug makers have said, as they've reported their earnings, that these prices, if you take a look at some of the prices, Imbruvica, that's a huge one. It's a big cancer drug. The IRA price is going to be $9,300, just over $9,300. Drug makers have been complaining that some of these, discounts are going to be huge, but that's about a 38% discount according to CMS. We don't know what the apples to apples are in terms of what the PBMs that negotiate for each of these plans have actually be getting as a discount. But if you look at the out-of-pocket for patients, according to drug channels, the average out-of-pocket for patients on Imbruvica is about $6,500 a year. Next year, it'll be $2,000.
Right. And that's what I'm just curious what, if they think that'll disincentive, whatever. We'll get into that.
We're going to get into all of it. Bertha, don't go anywhere because you've got to be part of this conversation. Chiquita Brooks-LaCure, administrator of the Centers for Medicare and Medicaid Services, joins us this morning. You just heard the report that Bertha provided. I don't know if you have any context or thing you want to add to it, but I do think there is this question really underlying what you were just suggesting, which is the incentives here, and what do you think ultimately happens? There's a lot of good that comes out of it in the short term, but what are the impacts in the long term?
I did hear the report, and let me just start by saying thank you for having me. This is a historic day that we are so excited about, that thanks to the President Biden, Vice President Harris, that for the first time, Medicare is able to negotiate the price of drugs. And I just want to say how important this is, how life-changing this has been to the millions of seniors that I have been talking to over the last 2 years, how much relief there is in this country that the president and the vice president have taken on drug pricing. There are people across this country who are choosing between living and dying, whether or not to put food on the table, whether or not to see their grandkids. And I think it's really important as we talk about all of these issues, about what prices are going to be like, what innovation is going to happen, that we really keep at the core of that this country is full of drug companies that are making the most innovative drugs. But if people don't have access to them, it doesn't matter. And what we did in negotiation, what we did in the overall law, is make it more possible for people to be able to get access to. We started with these 10 drugs, but even more than that, this out-of-pocket cap, it is a game changer for our economy, for not just for the seniors and the people who depend on this program, but for their children, for my children and our future children. So I just want to make sure we don't lose track of that.
No, and as you say, it's a life or death issue if you can afford these medicines, but it's also a life or death issue if they will exist in the future. And companies from Roche to Bristol Myers to others are saying this will disincentivize the development. It's billions of dollars, high stakes development for things, especially for rare diseases and cancer. And yes, rare diseases are exempted, but they might not be if they have other uses, and then therefore that disincentivizes their development. Are you sure that this is going to make sure that cures like cancer, which is he keeps saying this is the most important objective for him, that this incentivizes those cures to continue to be developed and available in the marketplace?
There are so many factors that go into a drug company's decision. And I have worked in the industry, I understand, and we have thought about that when we talked with the companies and worked on negotiation. We all are committed to making sure that drug companies will continue to want to innovate. It is crucial that we have a strong market, and we included that in our process. That was baked into the law to include things like research and development costs, to include things like how much does it cost. We thought about things like, are you saving money to the Medicare program overall? So I don't want to leave the impression that by allowing Medicare to negotiate, just like everybody else does, just like your employer insurance does, just like the VA does, that we are not going to allow innovation to continue. It absolutely will continue.
Administrator, I want to pick up on that point in terms of others negotiating. There are concerns from people that the law doesn't really address what the pharmacy benefit managers, what the plans do in terms of their negotiations. And even if you have these prices, that might not necessarily be the preferred drug. There are some people who are concerned that you still might have these drugs on a different tier. What sort of moves are you going to make sure that patients get this price and that they are actually paying their copays based on this price in the plans?
Certainly, this is an issue that we are thinking we are monitoring very closely. And I would say a couple of things. The law clearly outlines that PBMs and health plans that provide coverage for these drugs need to put them on the formulary. We will be monitoring and making sure that plans are not playing games with the drugs that we have negotiated prices for. We take very seriously both parts of it. Getting a deal for Medicare, getting a good deal for the Medicare beneficiaries, but also making sure they get access, because as we are talking about, making sure that there is access. It's important. It's important to the people. It's also important to the drug companies.
Administrator, I want to thank you for joining us on this important day. Appreciate it very, very much.
Thank you.
And thank you for bringing us the news.
All right, coming up, breaking jobless claims and retail sales data. But before that, a take on the state of the American consumer with BCI Brands Chairman Manny Chirico. He's the former CEO of Tommy Hilfiger parent PVH. Stay tuned. Squawk Box will be right back.
Welcome back. Walmart's results have the consumer back in focus today, and we'll learn more from monthly retail sales out in just a couple of minutes' time. Joining us now to talk more about this, Manny Chirico is chairman of BCI Brands, which owns Vince Camuto, Cece, I think I said it correctly, and others. It's great to have you here, and it's a little bit of a sigh of relief with Walmart. Maybe retail sales won't be quite so ebullient. Manny, what do you think is going on, broadly speaking?
Look, I think the consumer continues to be under pressure. As much as we're seeing a bit of an easing on inflation, I think that's going to take a little bit of a while to work through the system. I think consumers are still looking at higher prices than what we were looking at a year or two ago, and that's just putting pressure on top of the election. So I think the consumer's under stress, but continuing to selectively spend. And you could see that with Walmart. Value is really winning the day.
Yeah.
They're really delivering on the grocery side of the business in a big way. And I think you'll probably see really strong results coming out of Costco and particularly Target as they start to anniversary some weaker comps.
Target is higher, and a little bit of the halo effect from what Walmart just reported this morning. You mentioned the election, and it started with Amazon, but other retailers and analysts have said it is a real thing that during election years, consumers tend to get a little bit more cautious and pull back. Did you experience that yourself?
Yes, just about all the time. This is also, I don't want to play political scientist, but this is also an election that's pretty negative. We have had some elections that have been more about hope and the future, and I think right now it's really puts a pall on the consumer, particularly as we're going into back to school and start to move in that direction.
Yeah, Gary Vee was interestingly enough just saying the same thing, so you're echoing that as well. Back to school, holiday, what would you do if you were a retailer here? Do they're trying, they have to order early. We know July shipments were way up still because of that. They don't want to be stuck with a lot of product. They're going to have to discount. What would you do?
Well, I think the best thing that most retailers are doing is they're really managing inventory. And I think the second half, I think if you listen to what the retailers and some of the big brands are talking about, they're really talking about margin recovery. And I think if you remember this time last year as we went into back to school, business was pretty good, but as we got into the holiday season, sales really did soften. A lot had to do with weather. It was a very mild winter, so it required significant promotional activity last year. I think we're still very promotional today, but just inventories are just so much cleaner, and I think that should position a number of the retailers and brands to really deliver better profitability as we go into the second half of the year.
Yeah, we're certainly maybe seeing something of a sigh of relief after Walmart's results this morning, that maybe it won't be worse in the back half than that earlier trajectory might have suggested, but time will tell. Manny, thanks. We appreciate your time today.
All right, it was great talking to you. Take care.
You too.
Okay, coming up next, breaking economic data, jobless claims, retail sales, and more. Squawk Box returning after this.
under 2 minutes away from some new economic data, an important initial jobless claims report, July retail sales, import prices, and more. Jobless claims especially have been in focus for investors the last couple of weeks as they try to divine what the Fed is going to do next, what the underlying strength of the labor market might be after that soft June or July jobs report. Take a look at the futures setup right here. You have the S&P 500 up only about 10 points, about 1/5 of 1% leading into this. The Dow up 135, trying to follow through on the recent several days worth of gains. NASDAQ up 44 points as well. Treasury market, these yields are firm, but at relatively low levels after the big declines, big rally in treasuries, as we know, over the last few weeks. See the 10-year at 385 at this point. What was the low around 380?
Yeah, and so go back 2 weeks or so. That's when we got the big spike in jobless claims to 250. I believe that might have come right before the bad jobs report.
That's right.
So that had people in big panic mode. The fact that it's come in a little bit last week is a nice development. You want to see it keep dropping. The same pattern happened last summer. It went way up and then it came down. Let's see what Rick Santelli thinks about all this, though. Numbers not out yet, Rick, but give us a little bit of staging, please.
Well, of course, we know that it's now a handoff from inflation concerns to slowing labor market, but with the inflation numbers yesterday perceived to be continued cooling, although you had to squint to really see it, retail sales almost takes on added significance to see if the consumer, like the labor market, as another valuation of the economy, is holding up or not. And of course, claims, well, the big move last week was because initial claims moved from 250 to 233,000. That was huge, and it had an impact on the market like I haven't seen in years. And everything is hitting the wire. Empire Manufacturing for the month of August down 4.7%, and that follows down 6.6%. We have had a lot of negative numbers. Matter of fact, every number this year has been negative. Now let's look at retail sales. Headline number, 1%, double plus expectations. 1% on a headline number. That's the best going back to April of 22. April of 22. Let's strip out autos, shall we? It diminishes, but still much better than the up 0.1% we were looking for. It comes in at up 0.4. Strip out autos and gas, still up 0.4. The control group, or what we call core retail sales, that is up 0.3. That's a pretty good number, 0.3, and it follows up 0.9. I don't see any revisions yet on the retail sales, but it may be forthcoming. Now let's look at Philly Fed. This is an August number, like Empire. Philly Fed comes in at -7. We're expecting a positive number, -7. Well, we were at -10.6 at the beginning of the year. That is your comp. Now, let's look at initial claims. Initial claims, 227,000. That's definitely below the 235 we're looking for. A slight revision to 234,000 for last month. So that means we are down 7,000, and that is something to watch. It's probably why yields are moving up a bit, because, of course, this demonstrates the economy might not be slowing as much, and the labor market actually might not be diminishing as much as the jobs report demonstrated. Now let's look at continuing claims. Are we going to have the 10th consecutive month over 1.8 million? Indeed we are. 1,864,000. And finally, a lot of prices coming in. These are July import prices, month over month, up 0.1. We're expecting a down number, up 0.1. That's the biggest positive month over month since April of last year. Strip out petroleum, and it is now up 0.2. Up 0.2. Follows up 0.2. And if we look at year over year, those are month over month. Now let's go year over year to import prices, expecting up 1.5%, comes in a bit higher, up 1.6. That equals right now a revision. Last month's 1.6 now becomes up 1.5. But these are some of the juiciest numbers going back to the end of 22. Let's look at export prices month over month, expecting the goose egg comes in higher at 0.7. 0.7 equals April of last year. To find a higher, you have to go back to August of 23. And finally, export prices year over year expected up 1.10. Buckle up, 1.4%. 1.4% is the hottest since January of last year. Now we see that yields pretty much up, and Equity's up. Good news is good news. Some of these, of course, are showing the economy is doing better. Labor market not deteriorating as much, but it is a split decision. Claims on the initial side going down, continuing claims hanging tough. Santoli, back to you.
Yes, sir. All right, Rick, thank you. Yeah, continuing claims hanging tough, maybe slightly below forecast. Stay with us for more on all the new data. Let's bring in Michael Strain, American Enterprise Institute Director of Economic Policy Studies, Kitty Richards, Senior Fellow at Groundwork Collaborative, and our own Steve Leisman. And Steve, what jumps out to you here?
You know, Mike, I don't often do this, but I am going to quote myself from earlier this week saying rumors of the consumer's demise were premature. We had our CNBC NRF retail monitor showing some strength. A lot of things have now pointed to the idea that the July jobs number that spooked everybody about growth was maybe an outlier in terms of how much weakness there was. Obviously, we'll see what happens. But this number here, it shows strength. Maybe one of the things leading to the strength was some catch up to the auto sales that were down in June, but came back in July. I don't see a whole lot of weakness here. Some in clothing, some in sporting goods. That's about it. But really, this is a story that says the consumer is relatively strong, and we don't have underlying weakness in the jobs market. Just because the idea is shifting that we're focusing less on inflation and more on growth doesn't mean the growth story is all that weak. I'll leave it there, Mike.
No, I guess certainly not. We were clenched up for something worse, and we've been hearing from companies anecdotally about July being weak, and there's been an uptrend in the unemployment rate. So I guess that all built to some concern here. Kitty, I guess I'd ask for your response to these firmer numbers, because you, I think, were believing that maybe the Fed should have cut rates in July and looks behind the curve. Does this make you reassess at all?
I'm really glad to see that the American consumer hasn't pulled back yet. But I think it's really important to zoom out and say, what is the Fed trying to do? We're supposed to be getting to a place of normal interest rates for the long run and battling inflation. It's great news if we have managed to bring down inflation as supply chains have eased over the course of the pandemic without seeing a bottoming out in the labor market or in retail sales. The Fed should not wait for that bottoming out to happen in order to bring interest rates back to a normal level. And the fact is, what we've seen is month after month of falling and stabilizing inflation. And, it's really important to pull back the curtain. We got CPI data earlier this week, and what we saw was not only continued cooling in inflation, but yet again, about 90% of the inflation that we did see was in the housing market. And the Fed's high interest rates are actually making housing directly more expensive. So this doesn't make me reevaluate what the Fed should be doing, because the Fed should be looking at the actual data, comparing it to what they thought was going to happen, and assessing whether high interest rates are necessary or even counterproductive at this point. And I think it's quite clear that they are. And we shouldn't take some good news in retail sales and unemployment claims and assume that there's no softening in the labor market. There's been a significant uptick in unemployment, and perhaps that does not indicate that we're about to enter a deeper problem in the labor market, but it's a real risk. And at this point, the Fed's high interest rates are really doing more harm than good, and it's been true for several months. So I continue to think that the Fed should have cut in July. They should be cutting aggressively the next time they meet in order to make up for being behind the curve. And I'll remind everyone that 2 years ago, the Fed actually raised interest rates at 75 basis points a pop, month after month after month. And I'd like to see some symmetry in their approach here.
Michael, Fed officials have acknowledged that, the risks now seem pretty balanced between a weakening in growth and a rekindling of inflation. The data maybe are falling in line with that. And so I guess arguably the data-dependent approach with 5 weeks to the next Fed meeting is not necessarily looking too far off. What's your thought on some of the growth numbers we got here for July coming after yesterday's CPI?
Yeah, I agree with that. I think we should wait to see for what the next labor market report tells us before coming to a conclusion about September. I certainly don't think the Fed should have cut in July. I'm not convinced the Fed should cut in September. If the next jobs report is weak, then that might indicate that a cut is appropriate, but we don't know that's going to happen. I'm with Steve. I think the death of the American consumer was called a little prematurely. To me, consumer spending looks strong. That's not a surprise because income growth is still strong. That's not a surprise because if you look at nowcasts for third quarter overall GDP growth, you're talking about forecasts that are above 2.5%, above the economy's underlying potential. And that kind of brings us to the labor market. The reason we have this strong income and growth, the reason we have strong consumer spending is because I don't see the labor market softening that everybody else seems to see. Yes, the unemployment rate went up. The labor force expanded by 420,000 workers last month, and unemployment went up by about 350,000. And so, maybe it'll take those workers a little bit of time to find a job, but the unemployment rate going up because labor force participation, because the size of the workforce goes up, is a different kind of problem than if a bunch of people are being laid off. In fact, layoffs are currently below their pre-pandemic average. So businesses are not laying workers off. We're seeing a growing labor force. We're seeing the economy adding 150, 200,000 jobs a month. And if I'm the Fed, I still think there's a chance that inflation gets stuck above the target.
They're not hiring enough to absorb the labor force. What would incentivize hiring? Probably lower interest rates.
But Kelly, just FYI, we've seen this before. Michael is really onto the story, which is one that tells people to chill out a little bit. We've seen this influx into the workforce before, the pop of the unemployment rate, and then a decline as people find jobs. We have to have this influx of immigrants into the workforce. Not everybody finds a job right away. Kitty is right, there has been this creep up, but I think the message is to find some space between Michael and Kitty here is don't get freaked out by it, it's something to watch, but we've had this pattern before that's worth watching. That people come in.
Michael's point is he thinks the Fed should not be cutting rates.
I think it's
so again. Go ahead.
I think it's premature. I think calls for July rate cuts were misplaced. I think it is premature to say whether the Fed should cut in September or not. If the August jobs report shows an increase in the unemployment rate, if the August jobs report shows a lot more unemployed workers in the month of August, then I think a rate cut could be quite reasonable. I just don't think we know that that's going to happen. I think
I'd love to respond to that.
Exactly right. Big increase in the size of the workforce takes a little while for those workers to find jobs, especially.
So what's behind the influx? What's behind the influx? Isn't that what we should be asking? Because if what's behind the influx is that the consumer needs to lock and reload, that does have consequences. It doesn't mean we're not slowing. It just might mean we have a longer runway to the type of slowing that really would trigger an ease, right? Yeah, the equity markets are suffering. I don't think so. And we're approaching $2 trillion in budget deficits. Maybe the only way to stop spending is for the Fed to make extra spending that you borrow really expensive.
Kitty, I know you wanted to get in here, and I guess it's also worth kind of raising that if you go back a few months, the idea behind the Fed pivoting toward easing was just that inflation had come down appreciably, not necessarily they were waiting for the economy to slow very much.
Exactly. I think it's really important to refocus. Is the job of the Fed to soften the labor market and potentially bring on a recession? I don't think that that's what the Fed thinks their job is. The job of the Fed over the past couple of years has been to set interest rate policy to respond to inflation. And inflation is down dramatically. It is on a downward course. And I want to reiterate, the inflation that remains is actually being made worse by high interest rates. The data-driven approach is not to wait and see until the labor market crashes. It's to wait and see until you think that interest rate policy is no longer serving the American people, and then start bringing interest rates back into normal. And I do want to emphasize that the Fed's own projections when they began their interest rate hiking had inflation higher right now than it is, dramatically higher, and had interest rates lower. Their data-driven approach was to have started cutting interest rates quite some time ago and to be living with slightly higher inflation. I think a data-driven approach is to look back at that and say, we have vanquished inflation. It is time to bring interest rates back down to normal so that people
First
can
of
afford
all,
to
we all
buy
have a darn
homes.
short memory. The mission of the Fed wasn't to take over the economy. It wasn't to usurp the markets and have interest rates be their main monster of the universe menu. And it wasn't to have a balance sheet that never is going to get under $7 trillion. No, I think if you look at the Fed has made some serious blunders, keeping interest rates too low for too long. This is the comeuppance, okay? We shouldn't be lowering
Look at the
interest
market,
rates.
Rick, look at the market.
Right,
You said look at the market. The market has taken.
Let it breathe.
The market has taken 100 basis points of tightening out of the economy. Have you not seen what's happened to the 2-year? Have you seen what's happened to the outlook for the futures? The market is easing. The Fed would simply be following the market. Why wouldn't you be happy about that?
They're higher today than they closed last year. They're higher today than they closed last year.
But look,
Additionally, I think it's important to remember, if you think that the Fed has been too interventionist through its interest rate policy, then you should be clamoring for the Fed to bring interest rates down to the long-term normal rate.
Island for crying out loud.
Then you should be right with me that the Fed should be bringing interest rates down quickly to what they think the long-term normal rate is.
It's about spending, not lingering supply issues. That's a political statement.
Michael, quick final word.
Look at the data.
Steve's point is exactly right. The market
Please
is doing
do look at the
job
data.
for it. If you think that monetary policy should be in an easier position than it was a few months ago, good news. The market is doing the Fed's job for it by loosening overall financial conditions. I disagree with Kitty. The Fed's job was explicitly to soften the labor market, not to cause a crash, but to soften the labor market. The labor market has been softening. Inflation has been softening. The risks are starting to become more balanced. I still see a risk that inflation gets stuck above 2.5% for the rest of the year. And today's data make me more worried about that than I was before. That makes me a little more skeptical about whether the Fed should cut rates in September.
All right, we'll be debating it for a few weeks more. Thanks, guys. Michael, Kitty, Rick, and Steve.
Coming up on the other side of this, we're going to speak with former federal vice chair Roger Ferguson on all of the new data the Fed has now to consider as it weighs a potential interest rate cut from inflation numbers earlier this week now to today's jobless claims that just crossed. We're going to talk to the one man who's gotten it right thus far. You're watching Squawk Box on CNBC.
Welcome back. Joining us now to talk about what this big week of data could mean for the Fed and the thinking of central bankers is former Fed Vice Chairman Roger Ferguson. He's the former president and CEO of TIAA. He's now the Vice Chair of the Business Council and a CNBC contributor. And you, sir, welcome. Hopefully can help answer this rollicking debate we were just having. Should they or shouldn't they be cutting now? Welcome.
Well, thanks. Pleasure to be here. Let's start with the data. I would describe the data that we've seen thus far as good in the sense that it validates the thought that inflation is coming down, but it is not concerning. So it doesn't, play into the concerns that we had, after the labor market report that showed unexpected weakness and got, a lot of excitement in the market. I think all of this data thus far for a data-dependent Fed is consistent with an expectation that's building in a market of a cut in September. But I would say the cut, which should probably be more 25 basis points as opposed to 50.
Got it. And why do you say that? So there are some who would say, 5.5% is just way too high. Why not kind of cut more quickly in order to get back to something that could prolong the expansion? I'm curious what you think about that.
So look, the argument is certainly that they should be cutting. Why do I think 25 versus 50? Let's be fair, it's a close call, but let's recognize that what we've seen is some data that shows the economy is holding up quite well. It's consistent with a soft landing. There's something called the Fed Now, or the GDP Nowcast from the Atlanta Fed that shows, based on all the incoming data, expectations of growth in the third quarter of 2.9%, which is probably somewhat above potential. We just saw the retail sales data, which certainly belies the thought that consumers are collapsing. And so the Fed needs to think about both sides of its mandate. And I think right now they want to move cautiously to make sure that inflation indeed is coming down and still give them room to move much more quickly if it looks as though they're falling behind the curve. But I think the data right now don't support a rapid move. It supports a more cautious move because inflation, while coming down, is still higher than it should be. And they want to make sure that it's going to be firmly on that downward trajectory. So I think a slower, more cautious move right now is what's called for, because I don't think the evidence is that they're far behind the curve just yet.
Yeah, Roger, you say that the data are consistent with a soft landing, which certainly seems true, but it's also, I guess, always worth reminding folks that on the way to a soft landing, you always have a lot of conflicting mixed messaging, right? So you're going to have a little bit of a growth scare followed by some comforting numbers like we just got on retail sales. Does the Fed, do you think, look at the two-year note yield at 4.09? It's up quite a bit this morning, and say, well, that's a big gap between where the Fed funds rate is above 5.25 and that's a market telling us we have to get moving, or are they just going to, strictly look at the data flow?
Look, as you heard Chair Powell said, they are data dependent but not data point dependent. And certainly they always get a briefing on financial conditions, which will talk about some of the things that you've just raised. So all of that needs to be taken into consideration. The Fed, the market is doing some of the Fed's work for it out at the longer end of the yield curve, not so much at the shorter end. So I think in order for the 2-year to move in a direction that's consistent with the Fed wants, the Fed has got to itself move and validate expectations of a cut without appearing to be panicked. Because as you say, there's always conflicting data, particularly on the way to what we hope for, and fingers crossed will become a soft landing.
You don't think the market's doing the work for them, Roger, by taking rates down?
No, as I said, they're doing the work for it at the long end, where the rates have certainly come down. I think a 2-year at 4 is not consistent with doing the Fed's work. So, we see some still a little bit of an inverted yield curve, and I think the Fed needs to work on messaging clearly what it expects to do in order to validate the rate cut expectations at the long end, but also get the short end to cooperate.
Yeah, well, I don't know if we should call you the whisperer, the Fed whisperer. So you're sort of, writing the song for them almost. It's been great to have you here, and thanks for your time today. We really appreciate it.
And I whispered to anyone, I'm speaking out pretty loudly, so thank you.
Exactly.
There it is.
He hears the whispers.
He hears the whispers. It brings it to us.
All right, up next, a wrap-up of key results this morning from retail giant Walmart. Squawk Box will be right back.
Squawk Box. Walmart reporting better than expected results last hour, raising its forecast for the year. Joining us right now to go inside the second quarter is Richa Kodaly, Forrester Research retail analyst. Stock up, by the way, on the back of this news is really the guidance, I think, up over 8% right now. What do you make of it? Is it idiosyncratic, and what does it say about the larger economy?
Well, Walmart had another great quarter. It's been trending really, really well for the last year. But the question is this at the expense of other retailers or in line with other retailers? I really think it's at the expense of other retailers. Yes, the retail numbers were strong, but the strength is being driven essentially by two companies, Amazon and Walmart. When we look at other retailers, they are much, much more challenged. Target's numbers are expected to be out next week. It's been a company that's been actually declining in its revenues for several quarters. So I think that Walmart's numbers are a bit of an anomaly. It suggests that the consumer is really challenged, and the consumer is it's a flight to value. It's a flight to inexpensive goods. It's a flight to kind of wherever they can find private label and great prices.
So you're looking at this and saying this is bad news, larger picture.
Well, I think that there are definitely challenges that are being overlooked with the consumer. When we look at the retail numbers, non-store retailers, which are essentially the e-commerce numbers, are the lowest that we've seen them in years, and perhaps in decades. So I think that suggests that the consumer is definitely pulling back. You look at the restaurant sector, which has been doing very, very well for the last several years. It too has experienced the softest numbers that I've seen in a long time. So I think that definitely there are suggestions that the consumer is finally not spending anymore. They've spent through all of the excess savings from the pandemic, and really they're just more financially challenged now. And you're seeing the results of the fact that prices now are more than 20% than they were prior to the pandemic.
Okay, real quick, because we're going to have to go. Is there any company right now, besides Amazon and Walmart, that you like?
Well, there are, kind of the typical retailers that have been trending pretty well, like a Lululemon. But for the most part, I think that retail in Q4 is going to be pretty challenged. There is going to be heavy promotional activity, and I think that retailers are definitely going to be challenged to comp their numbers from 2023.
Right. So, Trey, I want to thank you for joining us. Good news for Walmart, maybe bad news for the rest of the economy. That seems to be the message of the morning. I don't know if you think that's right or wrong, guys.
I think the data proved that that's wrong this time. Even though Walmart's doing well, it can be the good kind of doing well and not the bad kind.
You can hope.
I mean, the market is, I thought it was going to be hard for the retail sales number to surprise to the downside because we were clenched up for something pretty rough, but it's obviously pleasantly surprised.
Yeah, it was a strong number. Core was strong too, and Dow's up 388 points now.
Kelly Evans, Mike Santilli, thank you for hanging out this morning.
Thanks for having us.
Make sure you join us tomorrow. Squawk on the Street begins right now.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures firming up here as last week's growth scare fades further into view, with Walmart raising guidance, retail sales doubling estimates, best headline print in more than 2 years, 10 years back above 3.9. Our roadmap begins with that consumer strength and Walmart's big beat. Stock is surging pre-market, all-time highs as they raise the outlook, says they see a stable consumer health.
Another big earnings name to watch, Cisco. Those shares are up this after the company did top earnings and revenue estimates, even though they were both down. We're going to discuss the quarter with CEO Chuck Robbins. That'll be later this hour. And Warren Buffett's Berkshire Hathaway builds a new stake in Ulta Beauty. That stock up double digits on that 13F-related news.
Let's begin with the consumer. Wow, bunch of names today. July retail sales blows out expectations. Walmart jumps on this quarterly beat and guidance. Jim, comps 4.2. Sam's Club 5.2.
Look, the electronics on this number up 1.6. Building materials up. You wouldn't have gotten that from Home Depot yesterday. The assemblage, the mosaic of what's going on at Walmart is extraordinary. You've got overall boxes now deflated. The food's been rolled back, so I know that there's a big move in Washington. Let's go up to price counters. Well, it certainly is at Walmart. Frozen veggies for $1, selling really well. David, listen to this. Reebok, free assembly. Chaps, Polo USA, all showing strength. It's not just about the basics anymore. If you didn't know anything, David, we were coming out of a recession, coming out of one.
I know the way that reads, and yet I think the question was asked and answered by the analyst just on the end of squawk there, which is it a sign of broad strength, or is it coming at the expense of other retailers? And she seemed to believe that it was coming at the expense of
Although Target's up huge, it's not coming at the expense of Costco, so check there. It's not. You're getting the same kind of thing in Costco as Walmart. I will say this, if anyone's been to Walmart lately, it's not the old Walmart. The fashion side is designed by people from Fashion Avenue here.
You've been saying this for more than a year.
Like my daughter and I go there, and it's like the most fun place because the basket of what you buy. I mean, and she's a vegan. They have I know this sounds strange, but they're they cater to vegans. I mean, they cater to anybody, frankly. But their stores are so attractive that they're taking people from Dollar. They're taking people from literally any mom and pop. And this is a very strong show. The .com, their e-commerce is really strong.
Digital up 22.
Yeah,
general
really
merchandise positive after 11 quarters. Jim,
that's very significant.
I know. And the other side is that we now have Ulta, Berkshire, Pershing, Nike. That's why a bunch of these names are up today.
Well, I mean, look, Ulta, the numbers are too high, and it's been a terrible moment for Dave Kimball, who's a really good operator, but it doesn't matter if it's Ulta, it doesn't matter if it's Elf, doesn't matter if it's Ralph, it doesn't matter if it's Estee Lauder. They're all bad. That category is bad. It's got a lot of China exposure. This is one. You're buying Ulta because of Buffett here. Okay, so what happens on Monday? You buy it again? I mean, think about it. People are buying this up 40, and there's nothing to sustain it.
No.
I mean, Nike, I don't know whether he's in or out.
We can talk about Apple and Nike later. Okay. I mean, I want to come back to the consumer because,
let's do that.
When Walmart says we're not seeing any sign of a weaker consumer, none. I mean, they make it very clear. We aren't experiencing a weaker consumer overall. And then they go on to talk about, of course, the four things that their customer wants, which is value, broad assortment, convenience. They want enjoyment buying them.
I told you.
I know you did. You told me, yes. And they say that's a constant, but it is interesting, and then slightly deflationary overall. Again, these are the broader takeaways for what is still, with Amazon, the most important retailer in the country.
Well, don't forget Costco because they all rolled back prices.
Yeah, I won't forget Costco. Very important, but I mean, Walmart sells a lot more than Costco. No offense to Costco, sales-wise.
Well, Walmart does more than anybody. I'm just saying that Walmart, Costco, and Amazon, that's the country.
We're talking about $170 billion in a quarter of sales.
So I'm just saying that, Carl, I think you're having some growth with lessening inflation, and that's good. We don't want no growth, okay, because then we already know that the Fed's behind. But some growth with declining inflation is nirvana. That's as good as it gets. Now, I spoke to a couple large investors today who were miserable. And I told them, one of them, I said, listen, this is your own fault. You're miserable, you're rich. Stop it. There's lots to buy. It was a kind of dispiriting.
They didn't agree.
What were they miserable about?
Yeah, what are they miserable about?
The market's already too expensive given what the strategy I just laid out, which is that Fed's going to cut, whatever. No, the market's already moved. I mean, in other words, Walmart, thanks for nothing. And that kind of thing. And I come back and I say, you could have bought Walmart yesterday. You could have bought Starbucks on Monday. You could have bought Best Buy. I mean, don't give me that it's it's expensive. Because what's happened is since the yen carry trade that David is nonstop talking about, what's happened is that there were great buys. And Jeremy Siegel came on and he did the 5-alarm fire, or 10-alarm fire. I don't know how many alarms it takes to get a lot of people over. But we had an opportunity, okay? There was a window. And it was created by people who didn't have enough money, who were very complacent. And look what you got.
By the way, odds of a 50 in September now, I think around 20%.
Oh, who was the 50?
Although J.P. Morgan's still calling for 50 in September. As to David's point about Walmart's commentary about whether there's further degradation in the consumer, take a listen to the call.
In the U.S., for both Walmart and Sam's Club, comp sales were fairly consistent throughout the quarter. Food continues to be strong, and it's encouraging to see improvements in general merchandise. And our U.S. health and wellness business in Walmart and Sam's Club, primarily due to sales of GLP-1 drugs, is contributing to our strong comp sales. So far, we aren't experiencing a weaker consumer overall.
And by the way, Jim, some of their inventory levels seem quite manageable going into the rest of the year.
Down 2%.
Yeah.
If you're in retail and you're doing this, this is about as good as you can get. I mean, Macmillan, this is just what a retailer has to do. It's extraordinary. David, this is extraordinary.
And they have built e-commerce, as we know, and we've talked about it. That was up 21%. You know, obviously you can fulfill by picking up at the store as well. And it is worth going back and taking a look at the performance of the stock over time here. I've made this point any number of times through the years. You know, Macmillan inherited a company that was in need of new direction, of tough decision making. And it's very helpful when you have a shareholder, so to speak. It's really Walton Enterprises LLC and the Walton Trust or the Walton Foundation. I don't know if our viewers are aware of what their percentage ownership is of this company right now. Do you know?
10?
46%,
They
Jim.
still own that much?
46% of this company is controlled by the Waltons.
Well, I'll tell you,
and so that helps.
Okay,
when
so
you're
what-
Doug McMillan, you're taking
What
this
was
is
the
years
bottom?
ago.
What was the bottom? You remember?
It was when
When
they
you
had that
raised
blowout
the
quarter.
wages.
That
They were right
upstairs.
upstairs.
They were
Down
upstairs.
here going,
Yeah.
what's
going on?
Yeah, but they raised wages, made everybody pretty happy. Then they started broadening the food. Then they took the price of food down. See, one of the things that bothers me about Washington, I'm not going to say which party, is those like say, look, food prices are inflated. Okay, well, if you go to Walmart or you go to Costco, they're not inflated. They've been rolled back. Have they gotten them to 2019 prices? That's very hard to do. But they've rolled back prices. You just have to go to them. Now, Dollar Tree? Not really. Dollar General, I don't see a big rollback. Some of these supermarkets that, you know, they're just, like, I think Kroger's trying, but they don't have the scale.
But you would agree that some retailers use the last few years to build margin.
And I hate
That's what
that.
this is all about.
And I hate that. And these guys are rolling back margins. I mean, look, David, I know that you're a big, I know you drink Camus. Okay, you do.
I do like it, especially at parties that you throw, and I can drink.
No, that was the Camus special 40-year event. 40
really
year.
prefer.
I had to buy everything from Boston to Baltimore to get that. David, they've got a bottle of Camus now, cab.
Yeah.
$69.
Is that a good price, Jim?
What am I going to do with him?
Asking. Is that a good price? I don't know.
Educate him? I don't know.
Is that
$120?
Oh, so it's a good price.
Yeah.
Okay, great.
That's
Should
what
we
they do.
buy it there and resell it somewhere else?
I'm not going to tell you where it is because I'm going to buy every single bottle. I don't need you. I got rich people talking about buying every single NFL team. Can't I go buy this Camus?
That's probably why transactions were up, what, 3.6, I think? Yeah, transactions up 3.6 with the average ticket positive.
This is incredible. Now, look, I mean, I don't want to just sit here and just say this is the most amazing number. I am saying that we have this confluence, inflation coming down, and store sales like Walmart being so perfect that it might not stop up this much. It might not, because it's kind of exactly what you want. And I think a lot of it is they want you to go to the stores. They want people who do what we do go to the stores, because the stores are not what you think. They're not. I mean, they have things that they, once again, like the old days when Sam Walton was still in 46, but when Sam Walton was there, they used to sell. I remember going once, and they had Rubbermaid. I mean, you know, these Rubbermaid coolers that you have when you were like you were coaching soccer.
Yeah.
And winning.
Yeah.
Winning every game because it was necessary.
Yeah.
And I had it, and it was like $28. And I went. I said, "How do you make money on that?" I said, "We don't make money here at all.
Right.
It costs us $30."
Gets people in the store.
Yeah, you got it. That's Costco.
Loss
still.
leader.
Yeah, but I didn't. But win leader when it came to soccer.
Merchandising important. It's always important. And you want them to be all the way at the back straight. Yeah.
Yeah.
These are simple lessons of retail. If you'd know that if you.
Super funny. Yeah. Laugh you on the inside.
Let's get to Cisco up in the pre-market as well. The networking giant announces another round of layoffs as it looks to cut costs and focus on some growth areas, including AI. The restructuring is expected to impact thousands of employees, about 7% of the company's workforce. Also, a quarterly beat issues revenue guidance above consensus, and we are going to check in with Chuck Robbins right here at Post 9 in about 20 minutes.
This is a great quarter for Chuck. Orders are good. I think he's going to tell us a story of great strength. I think there were some people on the call who were saying, listen, if it's so strong, why are you laying people off? And the answer to that we have to ask again, because I did not get a satisfactory answer. Not because Chuck dodged, it just was not done right on the conference call. But I will say this, Carl, business is surprisingly strong again for if things, it's another one where if things are so weak, why is business so strong? And the orders, it's across the board. The Splunk acquisition is looking really fabulous now. Fabulous. And gross gross margins better. He has a lot of exciting things to say. It was a very, very good. Orders moving in the right direction.
Well, you mentioned how it came up on the call. He did sort of address what's happening here. You want to take a quick listen?
Yeah, let's do that.
Here's Chuck Robbins.
We actually are shifting hundreds of millions of dollars into AI networking for cloud, into AI infrastructure, silicon, and cyber. So it's a meaningful shift. But we feel like the market's moving so quickly, we have to do that. On the restructuring, the answer to that is no. There's nothing else out there. We had tremendous demand across the portfolio. It was very broad based and it was very consistent. It really is about ensuring in a rapidly moving markets that we serve that we're able to shift resources into the most important areas.
And what he's saying is, look, we can be meaner. We don't need as many people. Obviously, when you merge with Splunk, you can take the best salesperson that you want on different things. Splunk turned out to be much better. Look, I like Gary Steele. I think it was a really good acquisition. I will say that I never heard Chuck. No, it's been years since I've heard Chuck excited about where he is. And by the way, he's talking about AI. We like to talk about AI. It's $1 billion in AI. And yet he said to Ben Righteous, listen, it's not our partnership with NVIDIA yet. But NVIDIA's moving up. But David, everything's moving up.
Yeah, I mean, to be fair, though, listen, I mean, you still have a 12% down top-line quarter. That was better than anticipated.
No, you're right.
It's the order numbers. That's the order numbers that are playing positive here, up 14%, which did exceed many of the analysts who follow the company's estimates. You can go back, though, 5 years. It's not been a great run. You haven't wanted to own the stock, Jim.
No. And look, what am I saying? Chuck is. I mean, look, I like Chuck very much.
You've got a 5.7% return.
Look. The one to own has been Arista, the competitor. Arista's killed it. Jayshree Ullal is an amazing CEO.
Has a tenure.
But what am I going to say? I don't want that history to cloud what I think might be the beginning of a big move.
Of a big move.
Yeah, I think so. Because if the stuff with Chuck and Jensen, NVIDIA hasn't hit yet, well, it could be really exciting. What he says is, this is what he says in answer to Ben Rich's question from Melius. He goes, I'd say the NVIDIA partnership, it's too early. We're not even in early field trials yet with that solution, so I don't think there's a lot to share. Of course, we have to ask him because we're trying to get him to share more than he shared on this call, because this is a private conversation among us. But I do think that if you're just now having $1 billion in AI, we have to, David, that means that there's a future for AI away from just Jensen.
Yep.
And ServiceNow, I gotta say ServiceNow because Bill watches and I want to say ServiceNow. There you go. I did it.
Orders up 6x Splunk. I think it's UBS today. Investors were short here, so the squeeze makes sense.
Wow, they were short. What were they shorting down at 45? What a bunch of idiots.
Might have been a fear that they'd put an even higher layoff number that would have sent a bad signal rather than a good one.
I think that one of the things that Chuck has been trying to do is get leverage. If they get a series of orders like they should, this thing's going to have much bigger gross margins, and people are going to say, why didn't I buy it at 48? The problem is it's been 2 steps forward and then 2.5 back, and that's how you get the stock where it is. But I like, look, short term, you have to like it. What do I say?
Big morning for macro prints. We got Philly, Empire, retail sales, and now IP and NAHB. Let's get to Rick Santelli. Hey, Rick.
Yes, industrial production expected to be down for the month of July in the vicinity of down 0.3%, doubles that, down 0.6%. Down 0.6%. That's the weakest level in industrial production since January, second weakest of the year. And if we look at utilization rates, expecting 78.5, big miss here. 77.8, 77.8, and 77.8 is the lightest going back to April. And there are some revisions. Last month's industrial production gets shaved from 0.6 to 0.3. So not good news here on the manufacturing front by any means, and capacity utilization also diminished from 78.8 to 78.4 last month. So weak numbers this month, bigger negative revisions, and get this, a 2-year note yield right now is up 14 basis points higher than before the 8:30 Eastern data. The 10s are up 10 basis points basically since then. They were both hovering right around unchanged at 8:30 Eastern. Drop in claims, strong retail sales, and squawk on the street will return after a short break.
I heard about hands-free Skechers slip-ins from my mate Snoop Dogg.
Harry, you gotta get your hands-free Skechers slip-in. That's money I have to spend. Alien Butler, demonstrate slip-in.
I just step in and there aren't no bending down, no touching my shoe.
Man.
Try Skechers slip-ins. Neuropathic corneal pain is caused by damage to ocular nerves. The pain can be excruciating, and there is no FDA-approved treatment for this disease. Now, Okio Pharma is the first biotech to have an investigational new drug application approved for NCP. Okio Pharma is now preparing for a phase 2 clinical trial in patients with NCP. Okio Pharma's drug would be the first ever approved for NCP, and that could be worth a fortune. Okio Pharma, simple OKYO.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job, you immediately get your short list of quality candidates whose resumes on Indeed match your job criteria. Visit Indeed.com/hire and get started today.
I strive to be intellectually ambitious. I want to be making connections, finding the right data so I can help our viewers see around corners. I'm based in Los Angeles, and talking to VC investors or Hollywood executives, I have a unique perspective on what's going on in this incredibly fast-changing world. I love being a business reporter. In covering technology, I'm reporting on change. Ambition can create change.
Introducing Mando, the whole body deodorant that I created with all body odor in mind. I'm Dr. Shannon Klingman, and I'm the inventor of whole body deodorant. It's like body odor never even happens, and you're gonna be exceptionally stink-free and smell as good as humanly possible.
We're happiest when our pups are happy, and we're not satisfied until they're satisfied.
No, you're right.
With Ollie, you never have to sacrifice happiness for healthiness again. It's not just good food, it's the right food. Save on your first box at ollie.com.
Every home tells a story. These aren't just any Centene products, these are Hotel Collections cold air diffusers. From the living room to the bedroom, this is the touch that truly sets it apart. Now available for you at hotelcollection.com.
So that's how they're so productive. They use Fiverr. Look how quickly they find freelancers. So simple.
Yeah, but why are they working in the dark?
Grow your business easily with freelancers. Fiverr.
Pretty nice run here for the market. It's going to continue today with the S&P futures up almost to some 46 points. A lot more Squawk of the Street when we come back, and Kramer's Man Dash as well as we count down to the opening bell. Don't go anywhere.
DC.
All right, let's get to a mad dash. We've got an opening bell about 7 minutes from now. Got a little bit of time here. Let's talk Brinker. We talked about the decline in the stock yesterday after earnings. The CEO joined you on Mad Money last evening. What do we make of this?
Okay, so he had the best comp store sales number of anyone, okay? And one of the things that Kevin Hochman is trying to do is get away from the episodic nature of good times for Chili's. What he's saying is, you know what? I'm going to spend a lot more than people think in order to create, and he used this word, a dynasty. And in order to get a dynasty, you got to hire more people, you got to refurbish. I wanted to put up many more stores. He won't do that yet. But he said that if he just kept things the same, he would not be able to handle all the people who come in, and there would start being one of these problems where, not a Yogi Berra problem, it's so crowded nobody goes, but where he would disappoint people. And he said he wasn't going to do that, and he didn't care that Wall Street didn't care for the fact that he's spending. That's what you do in order to become a great company. And I listened to him, and I just said, it's a clinic. He put me through a clinic of what to do when you have a successful restaurant chain, which is you've got to take a hit and make it bigger and better, because then you've got so many people coming, you don't want to screw it up. And he has that $10.99 meal, that's the smash burger.
Yes.
I just say, listen to this soft-spoken gentleman who knows how to run a company. He's not, Brian Nichol is not the only one, although I actually think Brian's great.
Yes. So you're a believer in the strategy,
Very much
not
so.
a concern about the move down yesterday with that increased investment. You think it's going to pay for itself?
Absolutely. He has to do that in order to create a dynasty.
And obviously the stock has had a very good move.
Right, it's been the best in the group. And he's been the best group because he offers real value. But what really matters is that he doesn't want the customer to start having a big line and therefore being unhappy. So you got to redesign. You got to make things bigger. You got to hire more people. And everybody treated him like he was like, are you kidding me? No, he doesn't want to become one of these stores, one of these restaurants where the service is bad and people don't really care to go. He has to build something bigger and better, and he's doing it. He's a great CEO.
All right. Keep an eye on shares of Brinker. We're also going to keep an eye on shares of Cisco. Why? Well, Chuck Robbins is going to join us right here at Post 9. He is the company's CEO. Don't go anywhere.
Make sure you put your kids to sleep. I went out and bought me a new watch, 'cause I wanna be here on time. Let's have a great day today. I'm ready Good morning, retail traders.
China's economy is in focus today.
China.
Retail sales up 2.7 was
China. Well, 547.21 is now our new support. That's for sure. Let me see. We got a 1, 2, 3 resistance line to break. This is all done on the 1 hour. Extend it to the right. So the new resistance is 551.34 for today. 531 with a confirmation 26. So we had a nice little breakout on something here, some kind of news. Philadelphia Fed Manufacturing Index -7 versus 5.4 estimate. Fuck, that ain't good. I don't think. U.S. retail sales 1% versus 4% estimate. That ain't good. And the market's popping. That's not good at all. Jobs claims down. That's not good. Well, that's good. Rate cuts hopes grow stronger. Again, they keep saying this every frickin' time for almost a year. It's this time. No, it's going to be this time. Oh, it's this time. These guys have been wrong from day one. They could be right, you know. Every once in a while you get something right. But their track record sucks. So that's my opinion of that. S&P's eyes 6 straight win streak after a huge bad Black Friday, Monday. That's really nothing big. Okay, here we go. Nvidia's down. Oh, I gotta get my platforms up. Blah, 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 blah. Okay, get ready for 117.16 for Nvidia. See what price they are here tomorrow. Well, shit. I'm gonna scout Friday. $120 strike. $120 strike for Friday. August 16th. Strike 120 at a buck. So a minute a buck. This is scalp. This is the first trade of the day. I get it in and I get out as soon as I can. 116, 18, take it. Straight to the 63. We got a head and shoulders resistance on the 1 minute. Take it to, okay, 127. Now, get out of there. I'll see y'all at the beach, man. I'll see you at the beach. Look, at 135, 137. We nailed the target. You understand what we did here? We had a breakout, right? Take and set your fibbies up. We came back right here to the highest level of this old resistance channel right here. This previous high. I mean, that's a nice trade. I'm not even in the trade for 2-3 minutes, and I'm out of here with $370 to go to the beach. I'm done. I mean, that's, you know, $270. The way to start the day off. We got positive divergence here on the SPY. Higher price level, lower volume squeeze. See, when the volume starts to move down, you're at the point of squeeze right now, so it's either going to break out, have a new high, or it's going to drop. $551.26, and we'll look at puts. We got an inverted hammer. God, them things are 47. Oh, that's NVIDIA. $545 puts. 10 of them. for tomorrow. So we just failed the 1, 2, 3. These are August 16th. 545 puts. Not in yet. It's kind of a risky. Volume's real slow right here. $0.86, and I'm going to put a stop on this. $94. Target. See this right in here? Take that body of that candle and extend it to the right. I'm up $100. 50 SMA. Let's take it to the 63. Boom. Get out. Get out. 102. Done. See you later. I'm off to the beach. Fuck, I'm hot today, boys. Out at 102, in at 86. $160. Old MacDonald had a farm. Me-I-oh. And on this farm, he caught a catfish. Yeah. To the 63. So that's, you know, we're going to balance out here now. 3 black crows. Somebody's trying to control the market. The fat cats are. The retail traders ain't doing nothing here. Retail trader comes in and takes profit. Plays the dip. Fat cats are still in the trade. That's what they say. Oh, we swing. Oh. We're swing traders. They are not. They're lying to you. Buffett buys puts. I guarantee it. He went against the market when he sold all them stocks. But he ain't going to tell nobody that. These are all bullish, except that one. And that ain't bad. maintaining the 50 SMA. Let's see if we can find a support. Yeah, we got a support right here off of Head and Shoulders. I think we're going to come down. These are all bullish. Get ready. We're going to hit the right shoulder. We want it to pull back and hit the right shoulder. We're predicting the next move. We see a chart pattern. We see an inverse head and shoulders. So we're predicting what's going to happen next. We're going to come down and touch this right shoulder one more time. And where in the hell's my alert? We're going to put another alert right here off the 200. That didn't work. That will. So I'm done with that. Move on to another one. Here's a triple top resistance. Overhead resistance. Maybe to catch the reversal. See how we touched that right there? I'm using the bodies on the 1 minute. Now, if it was a daily or a weekly, I'd maybe use the wicks, but still, I'd still have the bodies on there. So if the SPY doesn't hold this 63, I'm going to get puts and run it down to the 200. I'm going to set an alert off the 200. We can't make it as easy as this can be for these fat cats. We got to toughen them up. Just like the IRS toughened me up yesterday or the other day.
And small.
So we took the calls and the video, and now we're going to they keep asking the investors if they're going to keep on investing in AI. I thought that was a stupid question. The 117 puts. Ten of them. My goal here is to wait, see if it touches the top and retest a 1, 2, 3, and buy the put if it doesn't break. It's that inverted hammer right there. That was a signal for that little sell-off right there. This is the SPY. And that's the 5 minute. Right there to my support level. Okay, here we go. Okay, just 74 cents. I thought I had that on here. This is kind of risky right here. Could have waited just a little bit longer.
So companies like Snowflake are very well aligned, in that environment.
What about all these hyperscalers that are basically competing with each other to like build out the fastest? Then the government comes and says maybe we're going to.
Oh, 117. What the hell?
That race.
How about NVIDIA? Damn it.
Margin or room for error here, Tim? Because if anything happens, it feels like we could have a massive oversupply.
Well, Alphabet's
about
an
NVIDIA?
interesting one right now, and I would anticipate that investors are going to get a little bit spooked here in the short term.
I haven't done that in a while.
With all the antitrust news that's floating around, the issues that they're facing there. But when I take a step back,
That wasn't smart.
Alphabet trading at 18, 19 times.
Okay, let me figure it out here.
It's pretty cheap for what they're doing. It's.
About NVIDIA. Shit. What did I do? Okay. All of a sudden, I just broke out in a sweat. This is not smart. 16,000 sold here. Fuck. I'm gonna hold it. Dadgummit, you dumb moron. Shit. See if we get back down to this trend line, and I'll be green, I think. Damn. It's probably triple top. Don't take this trade, whatever you do. Do not take it. I gotta work my way out of it here. Right now I'm going to add on. Okay, I got 63. I got to try to get out of this trade. Also, I'm a master at fucking up. Got an average of 69, and I'm down $80. My fingers are crossed. Oh no. Schneider, man, I'm sorry I got you in that trade. You're going to tell who? Hunter? Man? Whatever you say, Brandon. I mean, Snyder. Bye-bye. Oh, shit. Okay. Well. You're definitely pumping it up. My number one stock. I put my number one stock. Ba-da-ba-da-ba. Measure twice, cut once. If I fail the 9, I think I can get out of it even. I'm thinking that we're going to retest this resistance line here and then continue the rest of the day. But we have to break that 9. That 9's a real strong support level when you're bullish. As long as you stay above the 9, you're still in the trade. Now, if you were going to, let's say you were in calls and you wanted to sell it, you'd put your stop just a little bit under that 9. So we're going to move on. I'm going to put an alert right here off the 21, and I'll know that it pulled back. I don't want to focus on the same stock all day. I'm still in it to win it. Now raise this support up to the top of that channel to the 63. That's perfect right there. 119.32. But I'm fighting. Yeah, we go new high. I can't believe I did that. Ooh. 3 white soldiers with a dragonfly. I'm glad you typed that in the room because I probably wouldn't even saw it for 3 or 4 minutes. I mean, in the YouTube channel. I should grab some more, but I don't want to put too much money in this. Right now we're around 1,200. I could put $2,000 in it, but Tesla's up $10. Walmart had the earnings coming out. Looks like Walmart, they were kind of downgrading Walmart yesterday, and I said, not during a recession. I talked about that yesterday, that we were going to break out. We're at 61. I think I'm going to get out even. for being stupid. I could get out right here at 63 and only be out down 120. There's a triple bottom on 1 minute, 5 minute candles. There we go. 69. My favorite number. Drop some more. Man, if this thing drops more, I'm going to suck Mike's toe. NVIDIA stock slips its reign as king of all chip AI chips look assured as rivals falter according to Barron's. We break below the 21, we'll get out of it right here. I can't get in there. Yeah, I can. And it could drop down to the 63, and that'd be a real nice tritz. Tritz, if you're curious what that means, it's a word I made up. It's called treat. Tritz. Beppy, you want a tritz? His eyes are just below. Tritz? Serum? I'd like to have a tritz, miss. Can I have a tritz? Come on, do it, do it, do it, do it. I'll definitely get lucky on this one if it drops. I should get out here, I mean, fuck. Jim, this is the IRS. We realized you had a confrontation with one of our employees, and we have red flagged you. You're on our terrorist watch list. Five minutes at this support level. We got to break it. I mean, they're probably going to start buying it here. Bullish, bullish, bearish. We've been sitting here for 6 minutes now. It's almost too long. Ah, damn. Starbucks down 84 cents. Okay, here we go. Magnificent, give me a good grade for an F. I want a good grade out of this trade. Especially if it hits that 21. I mean the 63 EMA. But this was not a good idea, that's for sure. Why do I? Okay. Not bad. I mean, I've recovered. I think I should get a call here. Damn, there's my put on SPY. I'm so pissed off. I call the SPY perfect. Rub it in. Oh, Kamala plans to shake up housing market? Boy, she gonna fix all of her fuck-ups, huh? She's all of a sudden turned into be a centrist. I have NVIDIA flip. You didn't take the trade, I hope. You couldn't have. I don't want DIMS to fix anything. They fixed enough. I heard there's 88,000 kids missing. Illegal immigrants. Missing. So the calls back up to resistance. If we break here, we'll definitely start to break out new higher highs. I saved my ass on the video, that's for sure. I can't believe that. I'm going to say my streak still goes on, even if I'd made that mess up. I know I'm the only one that took that trade. I hope. Official FU Money Club, did you see what I did? Who's the one that pointed that out? Johnny Blaze? Anybody take this trade? The NVIDIA puts? I hope not. You haven't got stopped out yet? Yeah, that was my mistake. We'll keep raising it up to that 63. What, 119.60 now. But this could break out here. It's getting a little bit later in the day, so it might cool off some. $119.60, buddy. Yeah, I was looking at the SPY chart, so yeah, you don't. We got head and shoulders on the SPY. We just hit the right shoulder. We don't want it to break, or we're going to drop more. I'll be right back. Deodorant, where are you? I worked up a sweat. What's your average, Flip? Or you just what's your score right now? There's a descending flag. Or no, it could be a fallen bull flag. It's 119.75. If it come down for the third time, now you're getting ready to come up for the fourth, so you do not want it to break here. Or we'll go higher. You don't want it to break that line, not at all. If it does, 120.53 for a triple top. So I think we're to the point where we're squeezing right now. Let me get my other chart up here. This is TTM. God, I can't believe I did that. I was doing so good. Boeing seals deal with Israel Airlines for 737 jets. Israel National Airlines says it'll spend $2.5 billion to buy 31 planes from Boeing. The DOJ reportedly defends plea deal with Boeing amid contention with the 737 crash victim families. Well, there you go. She broke out. God. It has to do it on that fourth time. Damn. SPX had a huge pop. Don't tell Vegas this. I'll never hear the end of it. Dumbass. Flip, how you doing? How much of a loss did you take? You stopped out early when I said I was in the wrong end? You didn't take a big loss? Okay. It's my fault. We'll get it back here.
Key reasons why we're growing our
I got out a little bit even,
than most people had expected is that our
but I had to work on it.
is the best it's ever been. A key
I knew I was,
reason
I mean, I made a point to say, man, this is not good. Because I'm very bullish on NVIDIA. If I go to buy a put on NVIDIA, I mean, I'm going to say it out loud. I thought I was buying a put on SPY, and I just wasn't watching. I had my mind, I guess, in the gutter, thinking about Nancy. She was great last night. Yep, Jackson Hole will be bullish. Called the calls. The reversal. So I'm going to bring up I haven't talked about this in a long time, and I'm going to talk about it right now before I get back into trading. Give me a second here. And I think it's a perfect time to talk about it. Think quality. Measure twice, cut once. I learned this also in baseball. Never take your eye off the ball. So I got really, I'm hyped up. I did 2 trades. I'm up $500 first thing this morning. 12 minutes. So I'm getting ready, man. I'm all hyped up. I'm ready to do it again. I got 2 platforms up to trade. I was watching NVIDIA because I traded the NVIDIA calls already. And I had the SPY to the right. So I just started typing. I didn't even look at what I was looking at. I didn't look at the ticker, the symbol, or nothing. I always look at the ticker twice, 3 times, maybe 4. When I get ready to hit that buy button, I'm looking to see what I'm in. But I wanted to hurry up and get in that trade because I thought we were going to have a reversal on the SPY. And I jumped into Nvidia. Once I realized it, I knew I was in trouble because I'm very bullish. That's my bull. I'm the number one stock. I'm bullish on Nvidia all the time, no matter where it is. No matter what. I mean, my mind is bullish, and that's how I'm going to trade it. So measure twice, cut once, and you'll save a lot of agony. I haven't gave that speech in a year. I think it's been that long since I made a mistake. But I used to, when I go into a streak, people see me trade, I can do that 2 or 3 times in a week because I ain't focused. Okay, I'm done. Measure twice, cut once. I was also learned that in baseball, never take your eye off the ball, and I also learned it when I owned a picture frame shop, because you can spend $200 to $300 on a 10-foot stick of molding, and you got to have that thing precise, or you're going to spend another $200 or $300 on another stick of molding. And you always got to get the same stick because they're not always milled perfectly. They're not always milled the same. So I always cut that one 10-foot stick would fit one frame and one frame only, or as many frames as I could get out of it, which was usually a 16 by 20 or a 20 by 24, and then maybe a 5 by 7. But I always had to measure twice. I cut over 2 million picture frames. Every time I'd go into a frame shop, I'd put my fist down and I said, I'm a damn good measurer. You won't have to worry about loss with me, buddy. I hate to look at these calls right now. Okay, we're double topping up here. I think we could maybe a put if we hit the double top. Let me go through my watch list and get this off my mind.
Robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
Tesla up another $4. God. Tesla supercharger network outranks competition in customer satisfaction. Both Tesla as well as a non-Tesla EV owners find it most satisfying. Tesla 100K Cybertruck and price adjustments. Former Tesla executive says Democratic Party's IRA disproportionately served Tesla, but Elon Musk is all for Donald Trump. That's because he's smart. Trump says electric cars are fantastic after Tesla CEO Elon Musk's endorsement. Oh, Musk is getting into it with Mark Cuban again. Cuban slams Elon. I don't know if that was a good move. I never did like that Cuban guy. Cuban. Amazon up $5. Everything had a nice breakout today. This can go a lot more. We're actually hit a pivot point right now. Broke the pivot point. God damn, Jim. Stupid. If you ever hear me buying a put on in the video, shoot me. We're at a double top right now. On 1 hour. I'm gonna go against the odds. Just look at this. Or the SPX. And this SPY. We're getting into lunchtime, 9:37. So SPY puts August 16th. $5.48. Thinking dip time. Sorry about that flip. Mark Cuban sucks. Is Johnny here? Mark Cuban is great. Johnny. QQQ had a beautiful breakout. It's getting close to that time. I think we have to rely on the 9 being support, or the 21. I think if we don't hold the 21, we'll play puts. Now the IWM can pull back. Okay, 548s. We're looking at the SPY right now. Should get 106. There it is. We're going to find out right now if we're good or not. $106. I got the right one this time. He's mega big time. Head and shoulders forming on the IWM. Let me look. Right now, I'm going to keep a good eye on this. Yep. On the 1 minute. So it can, this is how you want to look at this. It can come down and touch it one more time. If it don't break, then it'll drop to the 200. Yeah, I like this extension out. I'm glad somebody showed me how to do that. Starbucks corrected a little bit and pulled back. Still in her. I don't have the 63 on here. Yeah, I do. Oh, duh. The 9. Market's very bullish right now. Starbucks holding up pretty well on that pump. Citibank broke out. NFLX, haven't seen in a while. God. Netflix hit my resistance to the penny. Drop, SPY. Drop. Mara, 16 up 86 cents. AMD's a doozy. All of them are up nice, man. Upstart, even up. And what's that? CMG. CMG. 106. Come on, baby. Break. Put. If you're in this trade with me, okay. We're definitely getting ready to squeeze. You got an inverted hammer at the top. Some would call that a shooting star. Ah, there we go. Drop. Now I'm out of that trend line. That's good news. It's going to be hard, though. Bat's edge. Pretty mixed feelings about resistance on that. Support, I mean. Resistance. 550.92. There, they went away real fast. Somebody sold them, or they bought the dip. $9:52 right now, so we got 8 minutes to lunch. Man, the other day, CMG had a good sale on. I would have ate that up. Starbucks new CEO Brian Nicole boost company valuation by over $15 billion in a day. Pawn's up today. Here's another good one. We're double topping on PANW. McDonald's up 34 cents. Target's up. Nice. Target still faces difficult discretionary backdrop. Oppenheimer maintains outperform on target, lowers price target to 180 from 200. Got a shoulder line resistance that we're hitting on Tesla right now off of inverse head and shoulders on the way back up. Cisco post upbeat earnings. That was good news for that one. Waiting for the VWAP on the SPY to retest during lunch. We're at 104. I want to get at least 116 if I can. 120 out of the option. Put 548 tomorrow. I can't believe I did that today. I was on such a good roll. I haven't done that in, I can't remember the last time I did it. It had to have been a year. Well, them liberals, they know that the Democrats have the money, and their Kubin's won. YouTube, you have any questions? You can extend it more if you like. It allows you to see those sweet spots easier. You might do that. And it also allows you to draw out where you think it's going, which I like. I don't really care about the come on, spy, die. Yep, we're after 3 minutes of red here. We don't need this thing to pop right now. Here in a little bit, after I get out of this trade, I'm going to go make me a lunch and start fresh. Call up AOC and see if we can have a little moo-moo tonight. She likes it when I say moo-moo. That girl is fun. AMD pulled back to the 50 SMA on the minute. Okay, 1 minute and fat cats go to lunch. Always clean. This is James. May I help you? Nancy, please. I'm at work. How dare you? Cannabis had a little move this morning. Well, that'd be nice if Pow Pow would throw them a curveball. But they could be right this time. That first interest rate cut's going to really excite this market, because they've been talking about it day after day after day after day after day after day. And they want to be right, and they're not been right at all when it comes to this. But every month passes, and then a little bit more momentum gets into the market. And I think we're going to be in the biggest bubble that you've ever seen in your lifetime. Tempted to go ahead and add my other half right here at 90 cents. $5.51. Oop. Right there. $5.51.40. .87. Average 97 cents.
There's no subjectivity. There's no random guesswork about what we.
No random guesswork. Oh, Kathy Wood. Yeah. Yeah. I mean, this is a really bullish day today. God darn it. Fuckers.
Is a sharp rebound in global growth, or quickly accelerating global growth. Think of kind of the V environments that we've gotten coming out of recessions in the past 20 or 30 years. We don't see that happening because we don't see the big growth slowdown coming. So we see modestly improving growth, but not a sharp uptick in global growth, especially here in the U.S. And so in that environment, those things should do fine. But it's not one that you want to get over your skis on, because we think that a lot higher quality names are going to continue to win in an environment where you get good growth, but you still have some growth scares occasionally. You don't get the obvious straight up, sharply accelerating growth story that really benefits those kind of junkier small caps and deep value cyclical plays.
So now, look, the Dow's at 450 points basically at this time on a stronger than expected retail sales we got today. We had jobless claims, fewer claims than expected. This shows a stronger economy. A week and a half ago, we were worried about a terrible recession after a weak labor report. So now, is there anything that tells you that maybe the Fed doesn't cut because they're worried that the economy is still in this inflationary environment?
That's right.
No, not really, Nicole. I mean,
Bullshit.
You know, the Fed has been pretty clear about the fact that inflation is headed the right way, and they just need to see it more heading the right way. And the data we got this week continues that narrative, continues that story. So the data that we've gotten this week and from PPI and CPI have all been supportive of inflation that continues to normalize. We'd be worried if we were getting like deflationary prints. That'd be a growth problem. But in terms of getting extra inflationary prints, we just haven't seen any of it for like 6 months now. And so that's just not a.
But the prices haven't dropped, and they won't. We're stuck with these. We're stuck with these high prices, and it's just going to stay that way.
The 4.25 range, pretty much across the curve, is where we see rates. Now
They don't talk about that though. They.
That signals inflation, which is under control, but not threatening deflation. That is a growth, kind of a growth narrative and a growth set of interest rates, which is fine but not robust. And that's kind of where we think we are. This 3.5, 4.25 range in rates is we think we found a happy place.
Yeah, good to see you, Scott Ladner of Horizon Investments. Thank you.
Thanks.
Plenty more to come here on Trading 360. Up next is the big trade. 3 stocks, 3 charts, 3 trades. But Liechtenstein goes to the
Yeah, we're just fucked
takes us through the trades
on this
for
one here too.
Nike, Shopify, Fortinet. Next here on Trading 360, the Dow is up 449 points. We'll be right back.
Wish I still had those NVIDIA calls. I mean, from last week, I sold 2 days ago. $106s are now at $1,600.
Ameritrade is now part of Schwab.
Oh.
An elevated experience tailor-made for trader minds.
Yeah, this ain't good for me.
Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk.
Damn.
Our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. It's time for the Big Three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Scott Bowers, CEO of Prosper Trading Academy. Live at the SIBO, a lot of action there. How are you feeling? What's the vibe of folks today, Scott?
The vibe is a little bit of a surprise, I think.
Me too.
Given the rally that we have had, and then, the eco data that came out this morning, and seeing, 80, I'm looking up here, an 80-point move in the S&Ps right now, I think caught a lot of people by surprise.
Yeah, look, right? I mean, it is a pretty big day today. I don't disagree. That being said, let's take a look, and it really tacks on to the other days. Sometimes after a lot of up days, you'll have a pullback day, right? But not today.
Yep.
Let's get to the first name. You're looking at Nike first up. Why is that?
Well, a couple things. First, this stock has kind of been left for dead for a long time. And, the Elliott stake, the Elliott news that came out obviously was, massive shot in the arm for this stock here. So with this recent move here, we're up through some really big resistance that had been out there. And that could really turn the tide for Nike here. And
I'm still in them.
really, in my opinion, possibly on a trajectory.
But it's caught me by surprise big time.
90s or so, where there is a big gap fill. Obviously, the market rallies.
Nike, I do love.
Well, the news from that caused Starbucks to run, and then Nike right afterwards is very beneficial as well. But
Especially after that on report.
here, and we get up towards that gap fill, Nike could be back. So because of this, because I see an upward trajectory, I'm buying a September call spread, the 82.5, 87.5 call spread, and I think we continue to run here.
I see. Let's see what Ben thinks about the technicals, if that's a possibility here, in his opinion. Ben?
Nicole, they definitely have the shoes laced up. They've at the starting block. I'm not sure if
Use shoes laced up.
but I would agree with Scott in terms of that mid-90
That's
level being
funny.
significant. Let's take a look first and foremost at the rally that we have seen. I guess one could argue they've been on a bit of a run. Nice move up throughout the week from, around that $74 level all the way up to just shy of 83. This is a textbook example of what I like to look for. 5-minute candle chart. We see migration of value, 3 separate areas. And at every $4 increment, 74, 78, 82, the market's kind of paused and regained composure. The bulls are looking for another breakout to the upside, a new area of value to form at a higher level. Now, and this is about as good as it gets in some ways. Scott mentioned the significance associated with the mid-$90 level. I like that, right? 93 is what the bulls need to get up above before they can really declare a victory here. But he also mentioned how we've taken out some key resistance. Those July highs were kind of stacked up around this $76, $77, $78 level. So big move up here into this elevator shaft we saw in reaction to earnings. This is the first indication that they're trying to turn something around. And at a key level, Nicole, we're right back down to nearing those pandemic lows, testing a lower extreme of the range we've been in, going all the way back to, we're talking 2010. 2018, 2019, pre-pandemic, and you can see again, just coming off the lower extreme. Still some heavy lifting to do for the bulls here, though. As I mentioned on that 4-hour candle chart, 93 is the big level. Here on this weekly, they need to get up above 130, but potentially they started something big here, that's for sure, as we're seeing a little bit of a turnaround over the last few days.
All right, let's see what levels they can actually hit. So some heavy lifting to get some of those upper levels. Scott?
Yeah, I agree with everything Ben said here, and with the position that I'm putting on, I don't need it to get all the way up to that gap fill around 93, 94, but if it does fill up there and it holds and it continues with some momentum here, then yeah, we're going to see 100 pretty quick if it does get up there and continue through.
All right, next up, Shopify. What do you think of that one? That's been doing well.
Boy, this thing's been on a tear since earnings and just closed above the 200-day moving average for the first time since back in May. So this is now pointing technically to another gap fill, just like we talked about in Nike, but another gap fill, which here is right around 77, and there's not much technical, resistance all the way up until there. So I think if Shop can hold above 70 here, which would be critical for me, then yeah, we're going to shoot right for that
Yep.
gap fill here. Also, because implied volume,
I agree. That thing goes $79, easy.
Premium is so inexpensive right now. I'm just going to buy some naked calls here. I'm going to buy the September 80s. You can do that for right around $1 or so, and I think that is a really inexpensive play for the upside here.
Yeah. Let's see what the charts say here, because we have had that recent move up. Some of your thoughts, Ben?
Nicole, I can understand the a little bit more aggressive approach towards this one, because in our last example, we were talking about Nike still needing to get above 93, that key level on the intermediate time frame. In this example, you're going to see Shop is right at that, potentially taking that level out as we speak. It coincides with the $73, $74 level, but kind of in line with our normal way of working through the charts. I just wanted to start with a more granular time frame, a 5-minute, and a look at some of the price activity we've seen this week. Much like Nike rallying, a big move top left.
That's a gap fill right there. And a gap fill right there. It's 75.
Enjoying some gains here. Let's just move away from the 5-minute candle chart to show you what's going on in terms of the intermediate, the 4-hour, because you can see again we've been in a bit of a downward trend, 92 all the way to the recent lows around 48, 49, but starting to reverse that, a V bottom, which is encouraging. That communicates again that they've rejected that lower level, simply put.
72.84, inverse head and shoulders at 20.74.55.
68 to 70, and now we're really trying to
That's a pivot point area for sure right there.
Reversing this bearish pattern that's been playing out. So definitely some green.
I'm still in the
shades here.
SPY.
Let's take a look. Shopify. Scott mentioned
Not looking good.
and through this mid-$70 level, some room to run here. I would completely agree, because then you open up a door for, again, similarly as we just talked about, some room to the upside, simply put, as we could retest that $90 level if we continue to see energy above 65 here. The other thing I will point to, while this, I think on this longer-term daily candle chart, still a bit of a bearish pattern, again, with some kind of wiggle room, is I guess the best way of putting it, before we reverse that pattern and the bears have to declare that they've lost control. But at this point,
I think I have.
We are seeing a little bit of a big comeback into play here. So higher lows, also a nice move off the October 2022 low. You can see that the bulls have been trying to get something going here, and again, starting to above the 65 level.
All right. Any final thoughts on this one here, Scott?
No, agreed. And what I really like about this one, and Ben alluded to it being more aggressive, it allows me to be more aggressive because option premium is so cheap.
All right, next up we have Fortinet in a very hot sector. Some of your thoughts on Fortinet?
Yes, and I'm going to go with the trifecta on the bullish side here today. Fortinet has really been one of the leaders in cybersecurity recently. Now, it is at a make or break level. This one is, to me, a little bit dicier, if you will, than Nike and Shopify to the upside. It's at a make or break level, and that 74 range has been real difficult to crack in Fortinet.
Yeah, FTFT. I'm not all game on that one.
Is, outperforming in the sector. If it can break through there, that is a clear path to me.
Oh, God.
83 area.
Are we looking at the same stock?
I do think there's some really nice upside here, but it is a little bit more of a make or break to me. So that
FTNT. Oh, that's different.
Trade here. I'm only going out a couple weeks to the end of the month, the August.
Jesus.
Options, because like I said, it's going to be
That's nuts.
It's going to happen or it's not going to happen real quickly. So I like buying the 75 calls that expire on August 30th here. They're really cheap. If we get
It hit the 200. I mean, it was a buy signal.
Ceiling around 74, this thing's going to pay off handsomely.
Understood. So a little maybe more risk or uncertainty here, but you're going to find out pretty fast, to your point. Let's see what Ben says about the technicals. Ben?
Nicole, looks to me like a stock that's making it rather than looking like it's going to break it at this point.
Apple did good.
Thoughts there. at a key area of resistance right now. So again, has some
From that dip
proving
last
still
week.
to do, but look at this rally. We'll break it down in a similar fashion as we have the other two names. And Scott,
Nile
we're
at
gonna go 3 for 3 here,
379.
but no balloon drop today. We've had a problem with the whole thing that lets them go.
Zoom's at a
I'm
bottom.
not sure what's going on. We got some technical difficulties with it. Hopefully, we'll be able to
Apple.
resolve that. But hey, just taking a look at the trend up, you can see on the 15-minute candle charts, migration of value, simply put.
MU's at a pivot
65,
point.
70, 73, moving away from that and into a longer term. I always talk about this, a wide range balance. So there's not a lot of conviction here, right? You see very random type price activity, but through the middle often opens up a door for a retest of that $78 level. Upper extreme, we're talking about highs from earlier this year back in February. And this is right here as we move into a longer term chart. Nicola daily candle chart is a very bullish pattern. High conviction into the middle of this longer term chart, and then this consolidation that's occurred since. It's just value that's forming at this upper level. 16, 23, 60, you can see the areas where the market's paused and gone a bit sideways relative to this high conviction move we saw throughout the beginning of 2021 and into the beginning of 2022. Again, where we've gone more sideways around 60, but energy, momentum, conviction, participation, and all the TION.
We're still holding CRM.
Retest this $81 level. I'd agree with Scott right now. And I would even, again, further it and say that they're in the process of making it and avoiding the ladder of that make or break type scenario he talked about.
All right, Scott, any final thoughts?
Well, you know, it's. I think you have to be cautiously optimistic in this marketplace. You know, there's nobody I know of, Nicole, not an analyst, not a trader out here that
We nailed that one, mannequin.
this run in
The Nikes.
7 or 8 trading days, whatever it is. Since
We got them at the same time, didn't we?
be where we are right now, and another day today. I'm looking up here again with S&P's up 78 points. So, you know, is the eco data that good where it just lets the market continue like this? I'm not sure, but I am cautiously optimistic, and with volatility way back down from where we saw it early last week here, I think it's another really good opportunity to buy some protection.
Okay, good to see you. Nice to see some
Okay,
action
we're pulling
there.
back some now. Let's get serum here.
Thank you both, Scott Bauer of Prosper.
I'll tell you my strategy on this here in a second. We're at 84. We'd have to drop down here for me to get a couple $100 out of the trade. Another $1.30. $86. I got a little bit of money in this, I hope. get my coffee going and I'll be right back. NVIDIA is no longer making someone just want to see a good drop on the SPY. Jimmy will be very happy. I'm a huge bull when it comes to NVIDIA. Baba. Baba had a nice setup this morning. Microsoft flagging. Microsoft flagging. I got 86 cents. $0.86 average on the SPY. $86. If it did nice to the 200, that'd be so much of a gift. I'd get out right now and be $90 down. Well, I could have. Not now. We got lower highs and a solid low. So, no, we got, yeah, descending flag. What do you think about that, Mark Cuban? Come on, Jim. Think. 554 next. You did better than I did there, Rob. R. Do. I don't want this to be my first red one in a few months, 3 or 4 months, so I'm definitely seeing that they don't want to bring this down. Still buying it. Now that was weird. What's this here? Why does that keep moving around? I want 86 cents. Tempted to go in there and get me a salad made and come back. Walk away from this thing, but let's see if I can get calls. Boom. This is nuts. Well, I'm about ready to say goodbye. A whole bunch went through there all at once. The market makers are definitely pumping this market up. That's a lot of shares that went through there just like in a minute. That's half a second. Okay. If I get down to 80, I'll be down $180. If I get back to 80. No, it's less than, more than that. Damn. That's the first good sign I've seen here. Got a red inverted hammer. The market's very bullish. Okay, come on, baby. Drop. I think if it breaches this trend line, we could see that a triple bottom around 551.42. That ain't much. 26 cents, 24 cents. What time is it? 10:46, 11:46. Do. And we could see, 554.87 before we start to get bearish. That's on a 10-day time frame. That'd be a double top. That would destroy me if I held them calls at that long. But not today. I mean, we could see that. This double top right here. Come on, Nancy. I need a Valium. So I'm going to go on with my saga here about the IRS. I went and spoke to my accountant. And they do not electronically file my quarterly taxes. I found that out yesterday. All this time, for 20 some years, I thought they turned them in. So the IRS is now, I heard, fired a bunch of old people and put in a bunch of new. Is what I was told. And my accountant didn't know what a disclosure form was. The guys upstairs didn't know what a disclosure form was. Nobody knew what a disclosure form was. Neither do I. I still don't know what it is. I was called an idiot by the IRS. The worstest phone call I've ever had my whole entire life. Dealing with customer service. Here we go, new high. There just ain't no room for pullback on it today. I went ahead and paid the frickin' fine of $120. But it just bothers me. I really want to call them up and find out what a fucking disclosure is. Nobody knows what it is. Nobody from the IRS. I'm talking about the investigators to the... None of them. And she just carried on about, I ain't helping you until you give me your disclosure. And I don't know what the fuck you're talking about. I don't. I've looked it up. I have no clue what you're saying. And she just, I'm going to hang up on you. And I said, you're a nut. I said, you're just nothing but a fucking nut. That's what I told her. I said, I've argued with you for 10 minutes. I don't know what it is. I still don't know what it is. So I don't know if I should call her up again, call them up and say, I got a major complaint that I was treated like crap from you Biden associates. Same thing happened during the Obama years. I got screwed during the Obama years too. Probably because they knew I went to church at the Sneaky Snake Academy. So from now on, if you don't get that in there on time, that payment, they'll fine you 5% every month for 5 months. This is what happens when you increase the IRS by so many thousand employees. They have a change of attitude. I mean, they're very, very liberal at the IRS building. If you're conservative and you talk up, you don't do that. So I asked her, I said, are you giving me shit because I'm a white single male? Because this makes no sense, woman. My pronoun, male. White male. And they don't have a pronoun for white males anymore. It's either you're a him, hin, or her, or him, him, hin, him, his. So I have a feeling I'm going to be probably close my business down if I have to deal with this anymore. We'll see who gets elected. But it's just like the DOJ now. They're using it.
Yeah, I mean, I think self-driving is going to be an area that's going to be...
I think I've been a sole proprietor ever since I was 30 years old. I've been in business for 34 years.
Applied Materials is in a great position if they can be forward-looking and really, start to create the backbone for that, self-driving tech.
Yeah, I mean, I'm looking throughout your node here, and overall, when we take a look, William, final quick thought.
Yeah, on Applied Materials, we think the story is positive over the next 2 years. Again, it's something that we're looking for. Maybe the stock pulling back in the future is a better.
If we break out of here, I'm just going to go ahead and sell it.
Strong company, and we just think the shares look a little rich.
Yeah, it's great to see you both, William and Matt. Thank you so much, William Kerwin.
I know I'll regret it. Once I sell it, I'll go, fuck. I could have got out at least 80 cents.
Thank you for being with us, friends, here on Trading 360. Download our free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. I'm Nicole Penelides. I see you every day at 11 a.m. and 2 p.m. here on the Schwab Network. So I'll see you at 2 for the watch list. Dow's up 4.
I mean, I'll make this back in my next trade, but... NVIDIA saved my life. I mean, I got out of it, but we'll see. I do not want
Investor Checking.
this to break.
Built for investors, named highest in client satisfaction by J.D. Power.
So if this breaks, I'm taking a loss.
Investor Checking, you get the award-winning.
So I can get this off my mind.
Plus, cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide. No
Don't feel down.
And enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Down $300.
Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided...
I even called the boss here in Springfield, IRS. I said, do you know what a disclosure is? No. I said, what? I don't know. I gave her everything I needed. The only thing I didn't give her was my dick size. And she would have probably dropped all charges then. Damn. You don't know a dime, baby. Come on over and have some breakfast. Oh, wow, Tesla. Bull flag on Tesla. Tesla stock is rising. Here's what's moving it by Barron's. Let's see what Barron's has to say. We're at 80 cents now, folks. Come on, baby. I promise, if you get back and drop a little bit more, I can get out here. I can sell it here, but I don't want to. I want to make money on this fucking trade. But this is it. I mean, this is where I got to get out. But we'll just wait. I still got an hour and a half before the fat cats get back. Okay, I gotta put on an easy song here. This goes to all the ladies out there. This one here goes to all the ladies. When I was 16, I had an album by Exile. So I recorded this cassette, and it played the same song over and over and over and over again on each side of the cassette. So I went to pick up my date, my girl, and we went over to Horton Smith Golf Course. And the moon was about to rise, a full moon. My car was parked up in a field looking over a pond. So I told this girl, I said, will you be my girlfriend? She thought about it. And I said, maybe this might convince you.
But boy, almost straight up all day. And you made...
I want it to drop. Wanna kiss you all over and over again. Wanna kiss you all over. I'm about ready to break out of this trade. Don't break. Don't do it. Yeah. Night closes in. Ooh. Didn't break yet. This is a very important number for me right now. You'd sell at 82? Well, it's not really a good... Yeah, this is just ain't working out too good. Here we are at that point again. 1, 2, 3. It seems like it's waiting for something here. See, it's just nothing but a guessing game in here until we break a major support, and that'd be the 63. And these tape just keeps looking stronger and stronger. To that support right there, 551 at the lowest. So we got we hit twice up there with the body of the candle. So we still got another chance to come back up and retest. But, I could count that, but I'm not going to yet. Target's pulled back. Home Depot. pulled back. PayPal's up 137. God. 63 to 68. And we're at 75 cents. Yeah, that girl, she accepted. So we broke up, and I went to a bar, and she's sitting over there at a table by herself. She's, Jim! This was 15 years later. I had seen her since. So I'm sitting down next to her, and first thing she does is spill a beer on me. I said, God. So I buy her another beer. She spills it too, because she was so excited to see me. She said. And then we ended up living together for about 10 years. Jimmy, still at that dang threshold. I've been sitting here, what, 15, 20 fucking minutes waiting for this thing to dip. And the tape's real strong. So there's nothing really going my way right here. We're back up at resistance. Now that I can call for the third time legally. So it has to break here or drop back down to support. If we hit 80 again, I'm going to get out of this trade. Maybe. I wouldn't be adding on here, that's for sure. I just play it out, or you might lose more money. We're right there. I mean, this is it. If it's going to break out, it's going to do it now. There it goes. Yesterday, someone was in a trade that we averaged in, and we had that great run to the upside. This is definitely a different scenario right now. I don't feel as comfortable as I did in that one yesterday when we took that big nosedive and I added on. I mean, I could have had a $50,000 day yesterday if I'd traded it right. That last one, $10,000, $12,000 at the end of the day. So we didn't break it yet. I got to have a body above that candle, above this trend line. Nancy.
The overall, like if you look at Amazon up over 3%. Nvidia up
Down 360.
17% so far this
Now
week.
through 120.
Yeah, that was an area of resistance. S&P 500 back above its 50-day moving average. So it seems like the momentum. It's hard to stop momentum, and I think that's what.
I think I'm gonna make a fast lunch.
Momentum trading.
And now, like I said,
I'm gonna go turn on my George Foreman.
Nathan mentioned August 23rd. I think it's August 23rd.
I'm gonna hold on and be patient with this thing. Move on.
I think it's Friday the 23rd is when he's going to speak, but it's not confirmed.
Right.
And then you've got NVIDIA and CrowdStrike on the 28th. Those are a couple of big
ones
on the calendar coming up, and they're getting closer now. I mean, it's less than 2 weeks to NVIDIA's and CrowdStrike's earnings, and let's see how that stock starts to trade, because it's
CrowdStrike's took a big beating.
You know, from the lows where it traded 90 and change, it's come back over $30 now, and it sits, about 122.
Right. Yeah. Remember, 91 it got down to, or just
right. But $90 and change, I think, was the low.
Yeah, it's hard. It's hard to go against the market when you've got all these stocks up doing well, and they're big components within the major indices. All right, guys, let's take a quick break. When we come back, we're going to discuss Starbucks. Coffee giant stock is up over 20% this week after the CEO change announcement earlier. Now, what's he going to do for this company? Because sales have been decreasing the last few quarters. We'll talk about that when we come back right here on Fast Market.
Doo-doo. We'll be right back. Well, every time I want to leave.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're going to discuss Starbucks. It's been in the news all week since the CEO change announcement. As I mentioned,
damn.
Just so far this week. Still negative on the year, just slightly. Let's bring in Diane King Hall.
I knew it was coming.
Correspondent here. Diane, now I think this is going to be a show me story moving forward. And one of the concerns I have is he did really well at Taco Bell initially, then Chipotle, right? These are smaller based changes maybe to Chipotle. He did really well, but now the new CEO, he's got a show me story going on with nearly 40,000 stores. He's got a lot of work to do.
It's true, because look, Starbucks does have a bigger footprint, but he has a track record to support the view that he's the right leader for the challenge of turning the issues that we've seen with Starbucks around, the slowing demand, including, also concerns about its relevance with younger consumers, because younger consumers haven't been as on board with Starbucks.
Starbucks' biggest issue was catering to these protesters, the younger youth that has no money. They allowed themselves to be a target of stereotyping people. More or less marketed 30 years on down bracket. They're going to have a real hard time changing people's perspective on it. Plus, we've got, how much does a coffee, how many calories are in one of their coffees, mocha or whatever you call them. So they have a problem there. And they gone woke, so they have to change the whole, get away from politics. They brought that one guy back thinking that, and he's the one that was going to run for president, so that wasn't too bright. I'm still in this thing. I'm about ready to take a lick, so I can just not worry about it and move on. But we could hit 4-4, like I said, 54, and then I'd be down a lot. Right now I'm down $300, $600. 89. No, I'm down 400. I can take a $400 lick, but Jimmy doesn't want to. The IRS lady would love that. So I think I'm going to call them up tonight. I know I'm a red flag and they're going to put me on the terrorist watch list. I'll be right back. Down 260. Almost 300. 400, I mean. Back. Morgan Stanley. Oh, JP Morgan also. From yesterday. Damn, it had a pop too. So the market liked the news. Said the economy's roaring. The feds want to make a decision to slow the economy down, and it didn't work. So I'm telling you, they did not have to raise these rates. I think there have been a lot better ways to take care of the situation. Like not give them money. Big corporations. We gave them $6 trillion here since Biden's been in office. Corporations. Not counting the $2 trillion that's over budget, which is $6 trillion every year. So it's 24 trillion plus 6 trillion, or 2 trillion. That's 8 trillion plus 6, which makes 14 trillion printed dollars in 4 years, 3 years. JP Morgan. Well. We are now at 69. So I'm down 400. 380. I could load the boat and give it a real big shot. Add another 20 contracts. That'd bring me up to 50. It's not a bad idea. Maybe earlier I should have done it. Well. IWM had a new high. The 200 SMA for Sava. That's one heck of a bounce back up. Neutral rating on Sava. Neutral means don't buy it. Rodman says buy. They maintains a $107 price target on Sava. My God. 400% increase.
The stake in this company.
It's quite hard on my ego right now, so I'm trying to be good.
Lows, so good purchase this past quarter by him. Fast Market's coming right back.
And if it flops back up to 87 cents, I'm going to be a very happy person. But I don't know. I'm just wishing now.
Wrap up the trading day with me, Oliver Rennick, for the biggest
Oliver.
coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of think or swim. The award-winning trading platform.
I'll be right back. I'm going to get my lunch prepared and come back here. It only take a few seconds. I'm going to look at my chart over here so I can see where I am.
Tailor the platforms to your unique needs with nearly endless customization. And track market trends.
Slash ES is about to hit a resistance.
Trade brilliantly with Schwab.
I don't know what this price is, but definitely know what that one is. We get 55, 88, 90, 55, 89, 88, 55, 88. That's a huge breakout.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
VWAP is at 550, so that's only a $2 dip. I'm going to stick with it.
And invest and trade on my own?
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
I've made up my mind.
Have a choice in how you invest with Schwab.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
Drop.
Vanguard is saying, oh wait, off with their heads.
So we're retesting support again.
Who's going crazy?
So what does all of this mean for the market?
As long as people want to buy.
Retesting support one more time here. We're at 72, looking better, but
Instead of taking cues, set the cues.
I don't want to trade calls. Not right now. Not while I'm in this.
Stock, no more than 20% in any one sector.
Now there's a market for every single one. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Have a choice in how you invest with Schwab.
Ethan, how's my favorite client?
Great! I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends?
All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Market here on the Schwab Network. It's time for cash tags.
Got an hour before fat cats get back.
Folio, welcome back to the show, Landon. Do we have Landon? Okay, well, yeah,
Landon. A big part of Landon Swan today is Seven Inks.
So 13F comes out. You know, and people look at them. It's interesting, right? But it's lagging, right? And a perfect example is Ulta. Berkshire Hathaway takes a small stake in the shares. Stock's popping 12% today. I get that.
Yep.
It just hit 3-year lows this week. And if you look back at the quarter, that stock traded from $529 all the way down to $364 over that 3-month period. We're just basically back to maybe the end of July prices for this stock. So, hey, he's probably still not a winner on his investment at this point, even with the pop today.
The problems with Ulta is the growth is slowed.
Right.
However, they still do a lot of business. Yeah. They still, they still have a great business going forward. And here's the thing, Tom, that I think probably attracted Warren Buffett to this name. The PE's never been low. I went back to 2010. It's never been a 14. So, the PE ratio. It's got, now it's a 14.4, but it was slightly below 14, right at 14. So it's, from a valuation standpoint, it's never been cheaper than it is right now. So it starts to recover. Yes, absolutely. This is an inexpensive name.
Yep. Now we've got our guest here. That's Landon Swan, co-founder of Washboardjim. Landon, give me your take here, because Kevin and I just kind of went over, the fact that the stock is still falling. They gave an update in early April that kind of sent the shares spiraling down. But are you seeing any positive data on Ulta that makes Buffett buy the stock?
Yeah, I mean, well, let's talk a little bit about Warren Buffett. I mean, it's interesting that the stock goes down 40%, something like 35%, and everyone's wondering if it's too cheap. But then you find out he gets in, and you're like, oh well, I want to get in too, right? It's just amazing that the following nature of the market. Doing a little back to the nets and math based on the amount that he's got in it and the number of shares.
Same as here. I get into SPY. People get in it, and
I'm sure he's happy today.
I get phone calls saying I'm going to assassinate you.
Like that, but yeah, when you look at some of the data, the daily active users on their website's up significantly. It's over doubled year over year, and in fact, when you look at how they're doing versus Sephora, they're clearly the leader here, and it's starting to become, or maybe it's extending, where Ulta is not quite as high end as Sephora, right? They're getting out more locations.
Do it, King Kong.
The quantity as opposed to the quality. Not that they're low quality, but Sephora is definitely higher end. And you look at one of the things that tells me that is Ulta's level of happiness is at 70%. It's lower than Helen of Troy, Estee Lauder, Elf, Sephora, all of those. So, it's more of a, masses play, volume play. But you can see here their daily active users on the app are just incredible here. I mean, the back-to-school shopping here in July was the highest that they've ever seen. This is the highest month that they've ever had on record. So they're definitely doing things right when it comes to that strategy. It's just, going for the volume play. And, when you look at how they're, even just their website traffic, the visits, are increasing about 20 to 30% higher, or faster than the segment overall, than all of their competition combined on a
The video broke that resistance.
Website traffic is growing faster than the segment, so definitely some strong signals coming out of them. And of course, you talk about the downside. Last quarter, they talked about how there was, a lot.
We're 73 now. Keep going.
Competition could buy. I think they said
King Kong, I'm thinking 550 at the lowest.
different types of products that compete with Ulta, and of course online.
If we break this support level, 552.09.
Year over year, even though the revenue was up year over year. So, there's pros and cons here, but eventually it becomes a question of value. And I think that, the Warren Buffett investment kind of answered that question. Like, when is too low? When is blowing up too low, right? And I think 318 was too low. And so now we pop back up to near 370. And obviously that, investors are happy there. But Ulta's doing well. And I think that it's just, you're going to have to consider the buy low, sell high strategy, which I'm not normally a big fan of. But eventually when it goes from 575 to getting close to 300,
Steaks. That's the kind of the personality of this market, right? If they
This is a major support, the 63.
and if they hate you, they destroy you down to levels never seen before. And that's why you're seeing Nike now has an activist investor, Starbucks, right before they hired Brian Nickel, now Ulta. It's kind of spreading throughout all these beat up names. And then the question is, that's the first part of my question to you. And the second part, how much we were so in tune with the Ulta Target partnership. And remember, we thought Sephora and its matchup wasn't as good. And
79.
how much is Target to blame for Ulta struggling? Because it's them that seems to be failing, not Ulta.
Right. I think that maybe mentally, I don't know, I can't get inside the boardroom over at Ulta, but I think for investors mentally, that matchup was like the golden ticket, right? It's just going to solve all the problems. It's going to be unbelievable. We're going to, go multiples up because
81. Oh, come on, baby.
but that's just not the case. And so
I'm going to make money on this.
getting their distribution into other channels. And so I think that
Now, I'm even.
this Target partnership, and it, I can't say that it was a complete failure, but they definitely are spreading themselves out more and getting their product out there more. And I think that just
I was.
the website and the app usage is being up kind of shows that direct to consumer is definitely a viable option for them. They want to get eyeballs on them out in Target and various stores, but they want to get the sales direct. And I think you can actually.
I got to clean this up.
Program to look at that. I mean, they've got 44 million users, and those users account for 95% of their sales. So they have a very, very loyal fan base, and they're doing a great job of selling direct to consumer. They just have to, again, continue to spread out, get that distribution down, so that people can find their products, try them, get addicted, get on the app, become reward users, and then just get them direct. I think that's the play for them, and so far, I think they're executing fairly well.
Yeah, this is just not right.
% pop land in there. You guys, going into earnings at the end of this month, what kind of earnings score would you guys have on this, even with the pop?
Yeah, so that's funny.
551. It's dead.
I looked at the earnings score yesterday, and I think it was plus 45, and today it's like plus 25. So we value the stock move into that score. Big move against it. So we'd still be slightly bullish here. Remember, 20 is kind of our cutoff. So we were a little bit excited before this move. We thought it was a bit oversold, especially with a lot of the data coming out positive.
551.14.
It's definitely
Come on.
taking away a lot of the appeal. However, it's enough to still have a bullish slant on this one going into earnings. If they report it tomorrow, we still got to wait 2 weeks, so we'll see how things shake up. But that's where we're at right now.
All right, great stuff. As always, Landon, appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder at Likefolio, breaking down Ulta data up 12%. Cav, how are we going to look at this one? Because we're basically back to the 50-day moving average on the stock.
Yeah, but look where it's caught. I mean, it's hard. I don't think you fade it here because what Warren Buffett has shown and Berkshire Hathaway has shown, once they start buying, if it doesn't recover quickly, they keep buying.
Yeah. Dollar cost averaging on the stock.
Remember, Warren Buffett will say, if the stock we like goes down, that's great for us because we buy more of it.
Yeah, and he bought only, I shouldn't say only, 690,000 shares.
$266 million worth 690,000 shares.
Yeah, and it's got a small float.
That's a rounding error.
Yeah, only 47 million shares
Right,
outstanding.
very small.
That's
so
why the
think
stock.
about that long term.
Yeah.
Right? Remember, there's companies that they own outright. We have no knowledge, no information, but it wouldn't cost them that much to buy this whole thing.
Yep.
So now, that being said, the really thing that I look at with this is, number one, it's now turned the momentum game around.
Right.
So the bet is similar to what Nathan did in Starbucks, a more passive, bullish trade where I looked at something like the 400 calendar. Remember, it's got earnings on the 29th of August, so coming up. So I went out and bought the September 6th, and then next week's August 23rd 400 call calendar. Now, it's trading all over the board because remember, what happens when you get low float on a name? The markets get wide.
Yeah.
Right? You have to really do price discovery on this. So I looked at it. I had it between $6 and $6.50.
Yeah,
is
you got
where it was trading.
$6.50 up there.
Yeah, but it's all over the board. So really be patient with entering this name. Work your orders. Don't be afraid to start low and work your order on this. But this is just, remember, the expected move in Ulta for next week is $18. Well, that gets you to about $3.90 almost. The move out to September 6th, $43. That gets you to $4.10.
Right.
So, you know, you're in that range where 400 could be easy. And if you look at the chart, you know, the 200-day moving average is 440.
Yeah, the 100-day moving average is 399.
There you go.
There's a
right on the nose there, 400. Right.
Level at the
So if it
is 50.
Exactly. So, you know, and you do have a chance to extend duration on this.
Talking about playing to the 200 SMA on Ulta.
For what you're doing, but remember, this is almost $370 name, so it's going to be a little more pricey. But this is just a way to play it a little more passive. Stocks, there's big premiums on these names. You got to work your orders. So this is more of just a passive calendar spread, not a diagonal.
All right, yeah, let's break this one down. Call calendar on the 400 strike buying the September 6th weekly 400 call. Sell that same 400 strike in the August 23rd options that expire in 8 days. Paying $650 debit, roughly $650 in risk on it. But look at that nice wide range you've got, probably from about 380 to about 420, where you can remain profitable. Now you do have that roll into the option series that has earnings also, so you pick up a big credit there. Yes. If you do adjust and buy back your short option in the August 23rd and roll it.
84 cents.
You get a big credit for that positive time decay. You've got some time of risk on that short option.
The bottom of this channel right here is 551.
The call calendar here to the upside with that expectation it's going to keep grinding higher over the next several weeks. All right,
there we go.
That's going to do it.
90.
When we come back, though, we're going to talk about an earnings name, Applied Materials, and semiconductor. 29% so far this year into their earnings after the close. Stick around.
Anybody even on this trade, get out. There it is. Boom. Take it. If you're even or above. Don't fuck around with us today.
All your streaming devices.
Take it. 96. Get out even if you can, or get out with a little small loss.
No place better than the Schwab Network.
Out even or small loss. We could hit the VWAP, but I'm telling you, I wouldn't take too many chances with this when you're down so much.
Welcome back to Fast Market here on the Schwab Network. Before we get to our next guest, let's take a look at the major indices. We're off of session highs, but we're still elevated on the day. Broad-based rally across the board. The S&P 500 still up 1.2%.
If this hits $1,
Dow up 1.1%. Nasdaq.
I promise I'll strip down for you
Leading the way,
and show you my naked body.
2.68% now. The Dow and Russell still negative so far this month in August, but now the S&P 500 and Nasdaq 100 are positive for the month of August. So recouping some of those losses that we saw to start out the month. All right, let's bring in our next guest. That's going to be Kevin Green, Senior Markets Correspondent here. KG, we're talking AMAT ahead of earnings, semiconductor manufacturer. They get all the equipment going. It seems like they're in a sweet spot where, maybe they're one of the, firms that's going to take advantage of this big boom and the build out of data centers and everything else because they're manufacturing a lot of the equipment and doing some of the software, right?
They are, but they do have some headwinds too, and we're going to get more information on that at the close here today because of their China exposure. When you're looking at the revenue mix, China's around 60 to 63% of their total overall sales. I'm sorry, 43% of their total overall sales here. We know that there's been a spat back and forth between the United States and China and being able to provide the proper equipment. Now, this is going to be something that could impact them when it comes to the top line, but they also are going to be beneficiaries when it comes to the acceleration within Japan, Korea, and even Taiwan. So I'm not sure if it's going to completely offset, but they do have some tailwinds when it comes to the fabrication side of the business. But I think it's just the outlook going forward, maybe a little bit more murky when it comes to analyst expectations here in the near term because of the geopolitical risk.
Kev, the wafer supplier that you mentioned, what they do, that part of the business, remember, they're one of the largest in the world, and that part of the business is struggling. It's their other businesses that are keeping them, like, doing very well right now. It's called ICAPS. Internet of Things, Communications, Auto, Power, and Sensors. That segment of their business, a newer segment, is the one that's flying, correct?
Yeah, definitely, and there could be some opportunity there. We might have already seen a little bit of a recessionary cycle when it comes to automotive, and especially when we're looking at EVs, and so the expansion of the self-driving technology and things of that nature could also lead to further growth. And then you also have the expansion of 5G and 6G networks, which they could also be a beneficiary of. So they have the longer-term tailwinds to be able to impact the top-line growth and bottom-line growth. I think just in the near term, what are the geopolitical tensions going to mean when it comes to trying to sell these big equipment, and then also if we still have gluts on the PC side, is that going to really impact them in the near term? Now, they do have some competitors out there when you're looking at Lam Research and KLA Core, and so there's probably enough to go around when it comes to market share, but they definitely want to hone in on the AI front and be able to continue to lock down the internet and communication of things industries that are out there, which once again have really good growth as well as good fiscal spending, not only to the United States but around the world.
Yeah, Kev, if you look at some of the earnings results from those competitors, KLAC, Lam Research, kind of a little bit of sell-offs post-earnings on those. Does that put a little bit of worry in investors' minds going into this report because it's bounced back pretty big over the last couple of weeks?
I think so, especially when you have a day like today where pretty much everything in the equity market's moving to the upside. I believe they're up over 4% right now. You're having around a 6% implied move to the upside or downside. So I think even though the metrics might be low when it comes to the bar, I think the price advancement and then also that multiple might be a little bit of a high bar for it to be able to meet. So they're going to have to beat and exceed on the expectations and the guidance moving forward. I think that'll probably drive it to the upside, but once again, they have some headwinds that they're going to have to explain to analysts here on that conference call, and I'm not sure how much clarity we're going to get as far as the export restrictions or any type of export headwinds that could, cause a little bit of a backlog when it comes to their business.
Yeah, watch that China data on that report. $2.4 billion they're expected to get out of China in revenue. All right, great stuff. Thanks to Kevin Green, senior markets correspondent here, breaking down AMAT for us. As you mentioned, Kev, I looked at the stock earlier. The anticipated market maker move was over $11 either way. Now $10.50 either way. And I looked at a couple of the.
We started the initial sell-off, so I'm still thinking we're going to come down and touch this red line one more time. We don't want to break that 63. As long as we stay under the 63, I'm in hope of my moving averages now. I should have sold her right there. But if we get 63, I think we'll hit almost a buck. It did trigger my alert. I just didn't notice it. Okay. I'll be right back. I got to put my chart up so I can see it and run over here if I can have to. so close to that 200 SMA. That's a bull flag. Snake breakout, pull back to the top of the channel right here. Raise that up above that. Yeah, I should have bought them. Man, I just got to thinking about it. 70 cents if I'd have bought them 20. That'd have gave me 50. And that would have brought my price down big time. I wish I could watch my face like you all do. My emotions, and I don't see them because I don't look at myself, only in the morning when I'm putting Dippy Doo in my hair. I went out last night and bought 2 brand new shirts made out of bamboo. You need to pull back before it's going to break out. But SPY acts different than others. Right now I'm only down 150, so you know I should sell probably, but I'm not going to. We got 26 minutes before the idiots come back, and we're breaking resistance. Don't do it. Alex, help me. Say something bad about the market.
A lot worse just a week ago. So really impressive stuff. We'll see if it can continue at this pace, or if we've done sort of the easy part of the recovery in the last week. But one can't help but notice several green bars in a row now, going on 6 straight sessions of potential upside moves. Really impressive rally by the market.
This is when my 5-day rule comes into effect.
It was so quickly dissipated, it feels like. For so long we were talking about, like, you know, one day of an elevated VIX, and everyone seems to say the sky is falling.
Hey, it was two days.
You're right. It still is actually, no, I mean, at this point the VIX is back to 15, which is actually still slightly elevated, but not, of course, the spike we saw last Monday, I believe. But as always in the show, we'll focus on the individual movers. We'll kick things off with upvote and downvote. We'll chart and trade our upvoted names. And for FOMO today, we're talking a nice move to the upside today in Walmart, showing the true resiliency of the U.S. consumer, and that we're still spending. We're just spending a bit more at Walmart with new all-time highs today. Quarter results. We'll also be talking more about overall retail trends later on today to look at that retail sales number, which I will say is seemingly more and more important when you have CPI and PPI moving the markets in the way that they have. And we'll close things out with serious.
Let's go to Walmart, fill up our shopping carts, pinball, bird seeds, and all the things you need. Let's go to Walmart now.
A lot of these SEC filings, the 13F filings, Alex. I have been reading the 13F filings all day long.
Oh yeah, you get to look, see what the Druck's doing. You get to see what Soros is doing. All these big name investors, and it's funny because we're looking back like several months, and some of these guys are relatively short term with their trading. It's like their positioning will be completely different, but we're still excited to look at it. It's always fun to take a look at what some of the big whales in the market are up to. But let's do upvote, downvote, not endorsements, not recommendations. All of these, Jenny.
I saw a toddler eat a cigarette on a cart of Keystone beer. I was eyeing art supply. Some dude named Tanner called me queer. I do not want to go to Walmart today. I saw a woman standing humming to the tune of Delta Dawn on a dead battery scooter with just pajamas on. I do not want to go to Walmart today. To Walmart today, or tomorrow, or the day after that. Don't go misunderstand me for something, go call me rat. I hold close to belief, rising waters raise the ships. I was burying the living, good old Sammy's dying. Wish I saw a 104-year-old woman bolted to a register counting change. Her manager was 10 years old with a smartphone for a brain. I saw a family of 33 red-headed boiling over, pick the clearance aisle apart like some buzzards on the shoulder. I don't want to go to Walmart today, or tomorrow, or the day after that. It's a mirage in a desert of bullshit they created, that's a fact. I also do believe to the victor goes the prize, but to keep a good man down is just something I despise. I saw a serpent in the produce, hissing, coiled, talking smack. He was talking about prices, some shit about rolling back. I do not want to go to Walmart today. This just in, a 5 news forecast, gusting of snow. I need eggs and bread and milk, like I need another hole. I do not want to go Walmart today. To Walmart today.
Let's go to Walmart.
Don't go misunderstand me for something, go call me rat. I hope cause the belief, rising waters raise the ships, but was burying the living, good old Sammy's dying, wish he hard.
Go to Walmart. Fill up them shopping carts, pinball, bird seeds, and all the things you need. Let's go to Walmart now. Still waiting for my pullback. Then I'm going to get out of the trade. Snake breakout, pullback, do it. Change support level. This time I will get out. And then it will drop like a rock to the bottom of the trend line. Right there at the VWAP. This tape is strong. A real strong tape right now. Only down 60 bucks. Going against the tide, that's for sure. 5 minute. 5 minute. We're at support pretty much at the 5 minute. So that's not good. I'd rather look at the 1 minute. We've definitely had to pull back here on the 5 minute. Let's look at the 10 minute, 3 minute. 3 minute we can drop more. Still got a higher low though, so that's a spot. The 1 hour, we're at support on the 1 hour. And the 15 minute, we're at support on the 15 minute. Big time. This is a real strong support right here. If we break this, I think we can drop a lot more to the VWAP just by looking at the 15. And we're going to look at the 5 minute, 2 minute. 2 minutes, still bullish. 88, I can get out here, make 30 bucks. I think I'm going to ask for some advice. Hello, this is Brandon. What the fuck are you bothering me for, Jack? Well, I got in this trade, SPY, and I'm trying to get out of it. I'm up right now, but is there anything you can do to kind of help me here? Can you give a speech? Can you take a shit? Can you start another war? I would give you 3 wars since you've been in office. And my liberals love war. They love wars. They love death. They love genocide. None of them are talking against us at all. All my friends, they're all liberal Democrats. And I'll cross over. I'll be one of them scum buckets if you drop us to the VWAP. They act like there's not even been a genocide happen. Probably 2 million people have died now under his watch. Wish you wouldn't talk to me that way, Jim. I'm gonna have to send Hunter over to kick your ass. Oh, I thought I was talking to my mommy. So, OTA, strong retail sales, equity index, oh, that's Treasury, upbeat earnings, trading at noon, retail sales quell, slow down worries, whatever that means. Quell. I've never seen that word before. Que. Put an end, a rebellion or other disorder, typically by the use of force. Extra police were called to quell disturbance. Spoke again of a quell as a panic among the assembled youngsters. That don't make sense. Hold down and hit that 200. That's probably the time to get out. We'll just give it a little bit more time. That probably was the pullback we were looking for. Damn it, it was. Snake breakout pullback. High or low. Where's the SPX? Tesla's holding up real well. I never did read that article about Tesla. Tesla stock is doing much to start Thursday's trading. Lower rates will help make car purchases more affordable. So the market's convinced they're going to cut rates this time. Steen made headlines in July review. Earlier software version noted that the intervention was required to avoid an accident. I'll never let a car drive me. I'll drive the car. That way I'm to blame. Because I think if they go to blaming the car, they're going to start suing the car companies instead of the people driving them. I wasn't at fault. It was the car. So we're at that 68. Fat Cats will be back in 7 minutes. So we could break out again. Or we'll come back and hit this 1, 2, 3. Check out GME. Oh yeah, GME. There's no news for, okay. AMC Entertainment. GME GameStop short interest. Analyzing short interest on the 8th. Okay, we got I got a pivot point gap. Let's see what this was here. So the support channel to break is 2291. Yep, there it goes. Boy, when you got a lot of contracts, it can really move the price, kid. See, that I didn't want to see. Went right into the next candle, bullish. We're above the 63 now, so if we gain respect above the 63, I think we're moving higher. Yep. We're going higher. 3 white soldiers. 2. Better have this over here just in case I gotta sell this real fast. We get a big fat knife, I'm getting out of this son of a... I gotta keep my eyes on it. I'm sorry, I just gotta focus on this trade. Going up. I knew it was going to. The catalyst right there. Snake, breakout, pull back, boom. I'm getting out of the calls right now. and still in the put, so that kind of helped out a lot. Got out of them real fast.
come in between 223 and 237, so they've increased both the lower end and the higher end of their range of their guidance. So they did well just on a variety of metrics. So you're seeing them be rewarded with this 6.5% gain, hitting all-time highs in trading today. And they're really holding up in the face of this conversation about, is the consumer flagging, right? We've seen some concerns about that. We saw that earlier this week from Home Depot, where they talked about, you know, consumers not taking on as many projects. But for Walmart, it is still holding up in the face of consumers that are being choosy.
No doubt. And if investors are being choosy, you can see why a lot of them might have chose Walmart over the last few years. I look at kind of several time frames, usually just to kind of get a snapshot of how a stock's performed. Amazingly, Walmart has outperformed the S&P 500 on a 1 day, 1 week, 1 month, 3 months, 6 months, 12 months, and 3 years. Any time frame I look at, Walmart is outperforming the market. We're not talking about a semiconductor stock here. We're talking about a consumer staple. It's got defensive elements to it. It's got resilience elements to it, and it's outperforming just the broad-based index. I bet those who you're talking to on Wall Street there have to be excited about Walmart.
You're about to talk to a retail analyst shortly, but here's the other things that stand out for them. They've really mastered the e-commerce space. That's another strength area for Walmart. E-commerce sales rose, double digits rose more than 20% recently. And then they talked about just the diversity they've had and other things they're doing, like the third-party sellers on e-commerce platforms. So they've seen growth there in terms of transactions recently. Those increased, those rose 3.6%. Average ticket prices were up more than 0.5%. So you're just seeing strength when it comes to pricing, and they're not having, they talked about on this, off the back of this most recent earnings, that they won't have to continue to do these rollback prices, because you remember somewhat recently they had talked about, you know, the consumer facing some challenges as well, having to do some rollback prices, but they're not going to have to continue to do that. Now, the CFO, John David Rainey, did talk about what's happening with regard, he highlighted the inflation report that we got out this week and talked about one of the reasons they may be benefiting is because grocery prices are not rising as much as dining out prices, like we saw in that inflation. Grocery prices are up.
They're not rising as much.
A little over 1% year over year. Yes.
It's the cheapest place to buy groceries in town.
You know, and where it's been easing more is within the grocery segment, and Walmart gets more than 50%
I spend,
of revenue from grocery.
when I go grocery shopping,
That's exactly where I said this is like the ultimate.
I could be able to eat real good for a week for $50. Now it's 120 to 150. Always clean. This is Jim. May I help you? Is this the IRS? Did I tell you to fuck off the other day? Goodbye. We're double topping on GME. Well, it's now the fat cats are back, and we're still in this trade. I've got in the calls, and I sold them on the double bottom, high or low, for the snake. Now I got all my moving averages crossing up, so that's not good. Should have got out of that trade. That's well. AMD's double topping. Now Meta's had a good pullback. Meta has. Yeah. Airlines. I haven't looked at them yet. I got to look at my... Okay. I'm still green for the day. I just got to get out of this trade somehow. Should have got out of it. UAL. They were talking about airlines yesterday. Dang, all of them. JETS is an ETF. Bill Elliott raises stake on online dating. Starbucks. Ooh, Bill Elliott. Match. MTCH. Everything I'm looking at's up. 38 to 35, not much of a sell-off. I don't trade this much. I still can't find anything on this disclosure form. The only thing I can do next is call an attorney. Michael, SPY looking like she wants to retest that 552.71. Yes. Mm. $552.39, 53, 60, 71. You're going off each one of these here resistance levels on that there thingamajigger. We still could get a nice little sell-off here. So I'm going to keep holding these, I guess. Just bite it. Oh, it's you, Corporate Hustle? Oh, thank you. I got the calls on the way up. $52. $58. And 70. You got 71, so we're right on spot. You got the wicks, I got the bodies. This one can go down just a little bit. $48. You got 39. Probably got that one right there. No, it's 39. 48. Should I add? If we break below the 9, I'll add on. The market's definitely encouraged right now about this interest rate. They kind of just made a statement today, like they were serious. We can see that guy's 600 guy in another room. Zach's room. I think it was this weekend, posted a $600 resistance on the SPY. By the end of the year. And the way it's acting today, I believe him now. Today, Tesla made a statement too. This will definitely go higher after we consolidate. Ginny.
I mean, why was July strong? July was strong because of the spike of sales, because of the Prime event. June wasn't. So again, we might, in fact, when we look at the forecast for the third quarter, even from Walmart today, Walmart was very conservative when they gave third quarter guidance. But for the full year, they raised based on the first half of the year. But this is in line with our LSEC data, which shows, for the second quarter, yes, retailers are going to see about a 13% growth in earnings. However, that is going to decline to a more modest 2 to 3% for the third quarter. And this is mainly because we don't really have a big promotional event like Prime coming up that will entice shoppers to open. Yes, there's Labor Day weekend, but for the most part, what's driving the consumer to open up to buy those extra discretionary items is a promotional event.
Yeah, and I would say that as far as like the earnings season goes, it feels like we have found the very clear have and have nots of retail, which has been what's been I think kind of fun about the retail earnings season. But
I went to go buy
as far
some.
as, like, trends now going forward. What are you watching into the back half of the?
I was really shocked. I went into health and beauty aids and bought some deodorant. And it's been like, I had a couple of bars that lasted me almost a year. I said, what? These things are $6.67 now? That's like a $2 increase in the deodorant at Walmart. I buy my meat there now because it's so cheaper than it is in my local grocery store, if I want it. I save 40, 50 bucks a week by just buying meat at Walmart, where it used to be real cheap where I used to buy it, but not no more. Not no more at all. Good T-bone will cost you 30 bucks. It used to cost 12. I was paying up to 20 bucks for 2.5 pounds of hamburger. I just figured I'll become a vegetarian. And I've saved a lot of money by doing it. It used to be expensive to be a vegetarian. Now it's not. Okay, I'm not getting anywhere. Randy, you did what now? You got messed up with the IRS? Oh. Geez, that's a good deal. On the IRS, Randy. I was 24,000 behind him with him during the Obama years. I had a horrible time with my business during that period. A horrible time. Because all the closures, nobody wanted that Obamacare, so doctors quit, went out of business. Call centers went out of business. They just couldn't afford it. So I ended up getting $24,000. I got that paid off when I started making money here. But I got a disclosure. I mean, I called her up and she just, disclosure form. You shouldn't be in business if you don't know what a disclosure form is. I said, ma'am, I don't know what it is. I've asked everybody. Nobody knows what it is. Well, I'm hanging up. I said, ma'am, I'm telling you, I don't know what the fuck it is. And she, don't cuss. I said, you're a nut. I'm not giving you any information until you give me a disclosure form. I said, what am I disclosing? I don't know, man. I'm still shook up about it. I don't think I'll ever get it. I got to figure out what it is. Okay. I think I'm going to get me another $10,000 trade here at the end of the day. Yesterday, that thing ran to 10 grand and I sold it for 300. That just made me cry. Well, there's WA used to be a stock. No. Oh, WYNN. Anything I pull up had a big breakout on it. Everything almost. There's 3 white soldiers, or 2 of them, 3 of them. One, two, three, 4. 3 though. On the hour, 90-day has the 200 SMA. 200, 200, 200, 200, 200, 200, 200, 200, 200. So if it breaks the 200, we'll move this up. So I'm going to put an alert right there. Prepare to take that trade if it breaks and swing it. I've always wanted to trade this PANW, but I've never really got a chance. Man, what an opportunity on that dip. That was just a buying opportunity. Big old flush out like that. Things were coming to an end just a couple weeks ago. Now everybody's all strongly bullish. We're double topping. So that's not good. Good morning, Robert.
I'm Nicole Petalides, and I'm comfortable calling this one a comeback rally now. Right up again for the S&P and NASDAQ. The Dow's up 500 points. Right now, it's 2 p.m. Eastern Time. We're live on the floor of the New York Stock Exchange. Glad you're with us. We have a big show for you. Paramount is in focus here. The media company closing linear television studio as part of its cost-cutting efforts ahead of the merger that it has with Skydance. Jeffrey Kleintop standing by with some global market perspectives for us on the rise of consumer spending in Japan, how the markets have shifted to defense in the third quarter, and our panel standing by to talk all about Deere's earnings release this morning as the stock beat estimates despite challenges.
No, Robert, I'm not having a good. I was having a great day this morning.
Taking a look here right now at the market.
And I thought I called the top on the SPY, and then I got stuck in the SPY. So I'm stuck. I made a mistake by buying the SPY today. And then I scalped the calls a little bit on the SPY. Try to get a little bit better. So we're double topping here. We're going to find out what's going to go down. Either we break it or we pull back to the 200 into the close of the day. And this is the time of day where I really like to see it pull back, where things start to get a little bit more relaxed into power hour. We're going to find out real fast right now. There it goes. Man, this market is bullish right now. So yeah, I'm about ready to take my first hit in a while, in about 2 months. Just made a new high. Good call, YouTuber. Broke the double top. AMD new high. We got NVIDIA new high, 123. Make sure you get enough water. They're going to continue working it up until probably right. Just the opposite of what I thought would happen. We did pull back, but I was looking for just to hit the 500. Man, that would have been great. We hit 507. I'm going to go clean my glasses. Let's see here. We got a yabba dabba doo. Go get some more water. I'm drinking a lot of water now. That means I'm nervous. I like to see a little bit more turmoil. Double topped on the Tesla. I should have took that one when I saw it. General Motors, Ford even up today. I bet you Ford's even up. God. The worst stock out there is up today. Somebody put a lot of money in this market. Somebody put a lot of money in it today. Probably this fat cats, the major ones. Michael Burry, a Big Short fame, up his bets on Chinese internet stocks.
getting a recession, the CPI would really start to decline quite sharply. And that's not happening. That's important because if companies can maintain pricing power, just like the Walmart earnings actually showed that, right? They had had some deflation on their shelves, but it drives up sales, and as a result, they're actually not losing really any pure pricing power. Then the economy is not in a recession or near a recession. Now, there's always a recession around the corner, I guess, but it's more about if the economy continues to be above potential at this point, and that's what this, let's say the retail control group showed. The annualized rate of that the control group is 2.5%. That's directly feeding into the GDP now, which is now moving up closer to, again, back to 3%. So I'm more of like the recession isn't here, which also makes me, by the way, of the view that yields, treasury yields, are actually too low at this point here. They should be more above 4%.
Yeah, I mean, now also we have the uncertainty of the election. Just for clarification and confirmation, Citi did say even today, Nathan Sheets of Citi, Fed will cut rates by half point September and November. That's what I read. Talk about the elections and how the market volatility could be more prevalent, less prevalent. What are you thinking?
Yeah, the market volatility, I think, was partly affected by that how quickly we shifted away from the Trump victory and the Trump trade, right, to back to with Harris picking up in the polls really quickly and now basically surpassing Trump in various states. And again, that makes the perception of the election like a very tight race, and probably will cause some level of uncertainty as we go into September, October. You know, who will be ultimately the winner and what does it mean for Congress? That's definitely a narrative that's coming into the market again, I think, in the next week or so, after this rebound sort of maybe fading out a little bit. It's also interesting to note that the Infrastructure Act and Inflation Reduction Act, some of the projects that people were doing on those two acts have been put on hold, in part because of the uncertainty about the outcome of the election. So that's notable because those projects had such an influence, such a, like I say, contribution to growth last year. And it may have explained why we've had a bit of this soft patch over the last couple of months, and some of that infrastructure spending has slowed down. Nonetheless, the consumer isn't stopping, and it seems that the consumer isn't so affected by the uncertainty of the election just yet. Really, I think because we do deal with inflation further moderating, which probably is giving consumers a lot of confidence. So I think the election will play a big role in the question. It will begin to dominate market narrative, and maybe less so the consumers.
If people want to make money, what's a best bet?
I think today, Nicole, that the staples really look attractive now because you get a little confirmation that the staple of staples and Walmart's really done well, so there's maybe more upside. That stock, by the way, is trading 27 times forward earnings, so it's a little on the expensive side, but there's a lot of other staple stocks that like 20 times forward earnings. The same related to consumer discretionary or retail or materials. Those have all been lagging sectors over the last few months. I think that has some upside here because of seeing some confidence back in the markets.
Right. Good to see you, Ben Emmons. Thank you so much. Appreciate
Thank you,
it.
Nicole.
Thank you, Nicole.
Options Corner, Tom Wade is standing by, and he will highlight the unusual options activity we're seeing, how investors are looking to trade.
X has dropped a little bit.
Walmart, Disney, Nvidia. We got you covered. Options Corner is next. We'll be right back.
I haven't looked at UPS today. Looked about at every ticker. UPS popped. FedEx didn't know. It did pop, but it pulled back. Lowered price target to 336, maintains outperformed rating. Do do la 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 la. Oh, Jimmy, you started the day so great. Walmart, McDonald's. I haven't seen McDonald's.
with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. It's time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. We want to welcome in Tom White, host of Fast Market here on Schwab Network. He's always hawking out the big trades, and of course, Walmart making big news of its own, trading at all-time highs today. And you, in fact, found a bullish trade. I was seeing that earlier. I think I quoted an $81 target from Wells Fargo on Walmart, which hits this all-time high. But some of your thoughts on what you're seeing here?
Yeah, you'll probably get a bunch of analyst commentary over the next couple of days, Nicole, as far as price target hikes. I don't think there's going to be any upgrades. Just
Walmart.
People have a buy on the stock, up nearly 40% this year. Pretty good report that they put out there as far as.
They keep talking about Walmart. Okay, we're at the 63.
2%. That's pretty massive for the
Mike.
world's largest retailer in scale. If you look at some of the commentary from the CFO and the CEO, that said that they're seeing growth in all of their consumer segments. So it's not one pulling away from the other. Grocery business has done really well.
This thing jumps back up there again, I'm going to be just a flabbergasted.
In a lot of the other segments that aren't tied to grocery, and that's a positive. And then retail sales on top of it, kind of reflective that
552
for
for SPY. If we pull back here, 552. 552 and 551.61. I'm going to get a good night's sleep tonight. After I get a hold of the IRS again, figure out what a goddamn disclosure form is. Nobody knows what it is. Nobody. Taxpayer. Taxpayers on a tax return preparers use this form to disclose items or positions that are not otherwise adequately disclosed on a tax return to avoid penalties.
Good afternoon, ATMS.
Yeah, this is Jim again with Always Clean.
Yes, how are you doing?
I spoke to you right, Chevy?
Yes, sir.
I've been looking online. They had like a disclosure statement of 8275 form.
Okay.
I don't know what that is. I've asked people up here at the IRS. They don't know what it is. Nobody's ever heard of it.
Okay.
I can't get this off my head until I figure out what she's talking about. That woman that hung up on me. Disclosure.
We will look into like what Form 8275 is.
Yeah.
Whenever I get some answers, I can give you a call back and let you know what that is, what the purpose of it is.
Yeah.
But honestly, just off the top of my head, I've got no idea either.
Me neither. Ask around.
Yeah, I definitely will, because we have no idea what that lady was talking about, and it sounds like nobody else does either.
Well, none of the people up here at the IRS know about it.
Oh, yeah. Okay.
I worked there. I talked to every one of them.
Yeah. I will look into that, see what that form is, and I can give you a call back here later on whenever I got some answers, okay?
Yeah. Thank you very much.
Would that work?
Yeah. Foreign entity. I don't have no foreign entities. So I don't know.
Okay. All right. I've got that.
I might here soon though. I might be going to deposit all my money in Swiss bank accounts.
Yeah, that might be easier.
Good idea. See you later.
I think it is. I'll give you a call here later on, okay?
Yeah.
You have a good day. Bye.
Yep. We're definitely at a support level right now on the SPX. This has had a real good run today. Real good. Too big of a run for a one-day period. For 6 days. Let me look at the... Yeah, we're definitely at resistance. Let me see. I'm trigger scared to buy another put on the SPX. I really am. I was looking at the wrong talk, I think. That's a bear flag. Yes, the IRS really, well, they've never been. I've been in sole proprietor since 1994. And I've never had an issue with them ever. This is kind of strange. If I was an illegal immigrant, I probably haven't made in this country. I think it's going to get a lot worse if this Kamala gets elected. People just aren't aware of it. QQQ's double topping. I mean, this is really a nice recovery. I mean, you think about snake breakout, pullback, boom, to a double top. It's a pivot point, definitely a pivot point area of reflection. It is now 128. So we're still waiting for a little correction, maybe, maybe not. God help us, true. Yeah, I think I'll get another cup of coffee. I'm going to break about even today. SPX bounced off at 63. 51. Mike said the 51. I used to trade with that one all the time. Right on the 51, perfect.
well. So I don't know if I'd say that we're at the finish line in terms of Skydance being the final winner. We'll see what the potential offer could be. At the end of the day, it's difficult to. I mean, look. At the end of the day, Sherry has voting control of this company, and so how they, what choices they make or what choices she makes is really up to her, and obviously to the board. Whether this is the right choice, we're going to have to see longer term. It's certainly harder to get from a regulatory standpoint if it was another strategic, another media company that made an offer.
VWAP Plus.
For example, that faces a lot of regulatory risks that you certainly aren't going to get from this kind of a transaction. So we'll wait and see. Certainly, it's a different management team that's going to come in and run this company. They may have different ideas.
Today's a very convincing day, that's for sure. A lot of people took off surprise for today.
Try to grow the business going forward, and certainly it doesn't help that.
For one, the numbers are too good.
There could be a potential more money coming into this business.
The numbers are too good for one to get a rate cut. Sales up. We didn't get a recession. I don't believe it. I mean, you have to buy these goods, or they're 20% increase on prices. So you have to have your deodorant. You have to have your food. You have to pay your rent. You have to pay utilities. So whatever you get stuck with, that's what you got to pay. I have a real good utility bill here because I live in a basement or bottom store, first floor of a 4-story apartment, deluxe apartment complex. So my utility bills are like $65 a month. Last one was $58. But if I had a house around here, it'd be about $300, $350.
Is the slowing part of the process.
Good point. Good point. So this and the election are two things I'd like to get through. Naveen Sarma, great to see you. Thank you for this conversation. Naveen Sarma, S&P Global Ratings. Thanks for being here on the show. Coming up next, we'll get some global market perspectives. Charles Schwab's Jeffrey Kleintop standing by. So he'll give us all the details. Japan's latest GDP report. What does it signal for the consumer growth we need to see overseas? And what does that mean?
That's a very cheap utility bill.
Kleintop has the answers. We'll be right back.
Oh, we got a new high. Well, we've got 24 more minutes left till power hour. Now, I can't see us having a power hour run. I wish I knew who was that guy in that other room that said 600. I'd give him a compliment. I'm going to see if they got a message in here. I'll message him.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petrolini. Is coming to you live from the New York Stock Exchange. 90 minutes left in the trading day. The Dow right now is at 528 points. We've been climbing higher throughout the day, and it's worth noting. I mean, we're now the S&P erased the August sell-off, and we'll get a market update. Ben Lichtenstein is with us, senior futures contributor. I'll leave it to you because you're watching all of these markets with up arrows. What stands out to you? I think you're looking at the NASDAQ and more.
Yeah, those lows from last week certainly seem like they're in quite the distant past, huh? And we have seen another big day on Wall Street today, Nicole, with green arrows across the board in all four of the major indices. And you've got the Russell, which is leading the way. We're talking another 3% they're tacking on in small caps today, a big move up. But I'm looking at tech. I've got my eye on the NASDAQ, and some of the gains we've seen there this week back above 19,000 with conviction, and in fact today to just shy of 19,500. Look at this really well-defined trend up. This is just today's intraday price activity. Stepping away from the 1-minute candles into a longer-term chart. You talked about, again, reversing that big move lower that we saw into the beginning of August. Here we are. That's right. We're back to the basically July 31st highs here, Nicole, in the NASDAQ. Again, a big move up through 19,000 over the last couple days, and a reflection of what we're seeing. Some of that unease, those concerns, the uncertainty about the economy, as we've seen labor conditions remain strong, but not too strong, right? I feel like we saw retail sales, which kind of hit the mark, and I think Walmart's kind of a pretty good indicator of all of this. New all-time highs. The one sort of standout player, a lot of green arrows in terms of this risk-on sentiment, but Bitcoin's actually lower today, which is kind of interesting, down around 1 3/4%. Not really sure what to make of that, but again, a lot of green arrows across the board. It's not just the indices.
Yeah, without a doubt. I mean, I don't know that I even saw a sector that was lower today. Yeah. I'll double check that while you're telling me about, not even one sector is down. Yields, you're watching that.
Mm-hmm. Yeah. Crude, gold, yields. I mean, one of those odd days where just everything is rallying, Nicole. Take a look at the 10-year up to 3.94. So again, some pretty good data this morning suggesting that the consumer is still on track. We even heard that from Walmart. They said there's very little fraying, I think was the exact word that they used. And so this sort of just green lights things. Expectations are that the Fed's going to cut, but maybe not as much as we thought come September, and maybe even we'll get a little bit of pushback on some of those expectations for the rest of the year. But just taking a look at the dip that we saw down in the 10-year, when we did get below 3.7, down to around 3.65, that had us back to levels we hadn't seen since we're going all the way back to June, May of last year. But again, starting to recover here, still holding well short of that 4% level, but again, kind of back into this range that we've been in, where the market's found comfort and where stocks have been able to rally while we've held within here. So it'll be interesting to see if we get back above 4% over the next couple days, again, and how the market responds to that. But as of today, it seems to be a pretty favorable reaction, again, as it sort of looks at this all, I think, on the bigger picture and kind of with the economy in focus, and not so much these individual markets that sometimes pull the strings of this indices.
All right, Ben, thank you for all of that. Appreciate it. Ben Lichtenstein. One more day.
Lichtenstein.
It's a positive week on Wall Street. We'll see. Thank you. Let's get a global perspective. Another important part of our market discussion. We bring in Jeffrey Kleintop, Chief Global Investment Strategist at Charles Schwab. Thank you, Jeffrey, for being here. So you're watching Japan's second quarter GDP print, which was a surprise, right?
Yeah, blowout number. Today's U.S. retail sales data kind of trimmed the outlook for Fed rate cuts this year, boosted the dollar versus the yen. But that might only be temporary, because today's report showed Japan's GDP grew an annualized 3.1% in the second quarter. Now, That might not blow your mind, Nicole, but remember, this is Japan we're talking about. It's an impressive number for Japan. It's actually 4 times faster than Japan's average pace of GDP growth over the last 20 years. So that rebounding growth in Q2 would appear to fit the Bank of Japan's view that income and spending growth is taking off and bolstering the outlook for more rate hikes. You had tax cuts and large pay increases in this year's spring wage talks is now boosting consumer spending by the most in 8 quarters. So there's momentum for solid growth going forward. The bad news, though, Nicole, is that markets took this statement last week from policy officials that the Bank of Japan would not be hiking rates this year if the markets were unstable, and took rate hikes basically off the table this year. But Japan's growth now continuing to beat expectations could bring rate hikes back on the table for the BOJ and shake up the market's concerns over the carry trade. Markets right now are only pricing in a 50% chance of another rate hike from the Bank of Japan this year, but further improvement in the data may shift that outlook, and I think they are likely to hike again this year.
And when would that
Always clean this gym. May I help you?
When would that be?
You know, I was thinking September, but that could be pushed back into the fourth quarter. But it seems likely, given the
This is
backdrop
the
of economic
FBI.
growth
This
and
call is
inflation
now
that
being
above
recorded.
target, and everything kind of falling in line with what Ueda had talked about in the last policy meeting. Essentially, the markets are meeting or exceeding the benchmarks that he put in place for a further rate hike later this year.
All right. What's diversification? What is that?
It's basically.
Oh, did you just call me?
Diversified over the last year out of the AI-driven tech stock
Get 'em.
ownership at any time. It ended up not being rewarding. It was diversification, trying to diversify away from tech, but that might be changing.
FBI, you got
So
this?
far in Q3, along with the shift to defense, markets appear to be broadening from the narrow leadership of the current bull market, and that can mean better relative performance for equal weighted indexes. Since the bull market began back in October of 2022, equal weighted indexes in the US and the Eurozone and elsewhere, which measure the performance of the average stock, have lagged the capitalization weighted indexes we always talk about, which more closely track the performance of the biggest companies. So broader diversification may finally be beginning to reward investors when it comes to both managing volatility and seeking better performance.
Right, understood. What does this all mean for us at home?
Well, I think more volatility over the remainder of this summer.
Yeah, did you just call me?
Especially in August, it's kind of the dog days of summer.
Answer the phone. Did you call me?
Necessarily, but we do, right? We've got Jackson Hole from the Fed. We've got a number of data points coming up. We've got a lot more data related to the job market coming up here.
Yeah, we're going to watch this here line.
And of course, you've got geopolitical risks.
You just called the FBI office.
The election. All of this suggests higher volatility in the markets. I think it's interesting to see the markets rotating into defensive sectors. Not today, no, but so far in Q3, defensives have outperformed cyclicals, and notably, it's like utilities and healthcare and staples outperforming tech and communication services and consumer discretionary. And so I think we might still see that defensive bias over the remainder of this month, given the potential volatility connected to things like the yen carry trade, but also this concern about the slowdown in U.S. economic growth.
Yeah, understood. Jeffrey Kleintop, Chief Global Investment Strategist at Charles Schwab. Thank you so much. Great to see you. We appreciate it. Thanks. Still ahead, we're going to discuss some earnings for you from Deere. We'll be right back.
I'm thinking, I don't know, King Kong. This market is very bullish right now for some reason. I don't know. I think tomorrow's Friday. I don't think anybody expected this run today. I'd hate to say hold it and then we bounce up again, and if I say hold it, if I don't say hold it, we might dip. So I'm going to take a loss because I'm going to get it off my chest. That's about the only thing I think I can do. I should have sold them all right when I sold some, but I should have sold them all when we hit that 90. I'm really confused myself. I don't know what to do. where, I mean, we're hitting some resistance levels, but damn, there's no give today, and I'm surprised. We broke a new high. It just keeps going. There's just no... We should have had a pullback by now into the power hour, but it ain't happening. And we're at a shoulder line, and we broke resistance here on the 1 hour. I gotta clean this up. I can't see shit. We broke resistance on the overhead resistance. We broke that too. I mean, we can get up to 564. We can double top before they decide to go ahead and make a correction. Nothing about this makes sense to me right now, but we've had how many days? They said 6 days in a row of an upside, and you don't see that very often. We saw it back in here. There's just no give in it, none. I'd wait until 2 o'clock and see if there's any kind of reaction. Just let it pull back. It's going to have to correct back to the 200 at least. We got 10 minutes to really be the judge of that, right into power hour. I mean, I thought about adding on right here, but I'm not going to do it. I'm just going to see what it is if we get that 200, and I might get out right then. But I'm just as shook up as you are right now. I haven't had a bad trade like this in a long time, so I don't really know how to act. I mean, this is a parabolic run. You don't see that very often. We saw one down here, but that was down at the bottom. And that just tells me I don't want to be messing around being too much of a bear right now from here on out. I give you the most honest opinion I can ever, King Kong. My honest opinion is I don't know. I'm freaking out on this here breakout. I'm not used to it. I'm used to them, but I'm not used to this one. The tape is so strong. People are just buying it. I mean, there's tons of money going into the SPY. 600 contracts. I've seen up to 20,000. And then you keep them tomorrow, they're going to depreciate. They're not going to be worth hardly anything. Oh, trust my judgment. You trust my judgment. Well, right now, my judgment's nothing. Okay. I know I was screaming sell, sell, sell when we had that last bounce. Still strong tape. We got 2 more minutes. We're descending. McDonald's. H-Spy. We broke the overhead resistance. I don't like these baby steps either. That's a very strong run. I'm gonna maybe, I don't know. I'm afraid to throw more money in it. I could put 1,500 more in it here at 51. They'd give me 60 contracts. And then I'd really be screwed if it broke out. So nah. See, keep buying the dip. That nice engulfing candle right there. So we can come back to five. I'm still thinking this 552 area. I keep thinking that 552. I wish this was the SPX right now. I'd probably nail it. We're pushing it, and right now it's 206. I'm going to stay in it. I'm going to see if I can get 65 cents out of it. I'm down about 600. After buying them calls, that helped out a little bit. I haven't felt like this in a long time. Yeah. Very strong day today. If we get a VWAP flush, it's going to be a good deal for all of us. We got to break the 200. Thought about buying more, but I just can't do it. It's against my will. I'll just get what I can out of it. think the market's pretty well set that they're going to get these rate cuts, and that's the only thing that's on their mind. They've been talking about it for a whole year, every single day, and they more or less psyched themselves into like this is going to happen this time, and they're buying into that. Rate cuts will help tech. Tech already had a huge run. They always said the higher the interest rates, the worse tech would be off, but that's not the case in this last run. Because they had this AI. Tech's always been my favorite sector. Oil is my least favorite. Then tech. I've always traded tech from day one. And when they were bad-mouthing tech in 2022, I was saying, man, there's going to be some bargains. And I got into a lot of them bargains when it was cheap. Now we're expensive. We're way too high. And
fascinating.
I've always loved tech. I think I loved it ever since they came out with a gateway computer. And I bought that. I still got my paperwork from it. I saw it the other day. Yeah, I think it's time. We're 218. There's been no give. King Kong, I think it's going to go down more. I just don't know. It's not doing no good, that's for sure. I'm going to be glad when today's over. This is my first red trade I've had in months. Abandon my sneaky snake strategy and move on. Ten-minute hammers are all over. It's a little bitty. Every dip's been bought all the way up. Little bitty hammer, boom. I think it's been probably 3 years since I've had a $1,000 loss. Maybe longer than that. And that makes about 400 for the day.
And if they go buy a used home or something like that, it's going to be from a bank at a higher rate.
Right.
And so here's the thing. This is a secular issue. I don't think this is cyclical this time. And I really don't think, a big place like Deer Horn, they're only limited by inventory. They're not complaining about, the high rates, right? They figured out ways to overcome that. So I don't think that rates being a little longer, if we don't get 3 or 4 rate cuts, which I think is absolutely ridiculous. Forward rates are not a prediction, everyone. But even if we don't get those rate cuts, I think these stocks still have a plan to win over the next year. And if rates go down, we'll see. I think that volumes will go up, not down. And I think that that's the case with a lot of stocks we're seeing today as investors are realizing there's a lot of companies that are, growing earnings by 8-10% this year. Why should they not go up? Why should they be flat for the year? And I think home builders is just one dynamic that appear rate sensitive, but when you really get into the 10Ks, the 10Q, it becomes a different story.
No, good argument. I like it because it would help explain, why the persistent bid in these companies, despite some of the variance in housing data, despite some of the ups and downs of expectations, because it does, have some qualities that look like it trades more secularly. So I think it's a pretty fair point. Hey, while we got you, how about the tech stuff? You loving AI still? Want to get a piece of the stuff that's sold off? You think we're going to be going back to records and the key players in that group?
I'm not sure we're going to go be records between now and November, now and the end of the year, but I've tried to caution people, I'm more of a value player. I'm not a huge overpriced tech multiple guy, but let me tell you, I would not be fading the
You're not selling either
right now.
Okay.
No, I am not. I am only looking for more declines in markets, which I don't think we're getting, but if we did,
Everybody's saying more declines.
the Mag 7, those are still on my buy list for the right.
That's kind of attitude I got too. Everybody's been saying more decline, more decline. We're at frothy levels.
Is still there, and but I think if you could get some of these things a good deal.
And we're so close into November. I've traded this election year every single time, and I've always never seen the market run up. I remember the Trump deal with Hillary. They were counting on Hillary to win, so they were poised to run the market up, and then Trump won, and we had a short sell-off. China. We had a short sell-off, and then it bounced right back up. Clinton. I traded during the Clinton years. Going into midterm, he had changed his whole agenda around and got into welfare reform, had a welfare reform bill, which allowed the market to just explode his second term, and that's what got him reelected, because he already went through the Monica Lewinsky scandal, and he was debarred from the law, having an affair with an intern, where he said he did not have sex with that woman, but he did. He might have not have had it. Who knows? He probably did have intercourse. I know he got a good blowjob. And then, what was it? Bush. We had 9/11 right after he got elected. We were in a recession when Bill Clinton left office. And then we bounced back when they elected George Bush, and then we had 9/11, and then we had to crash. And then Obama, the market crashed. They tried to blame it on the housing market. I didn't. I blamed it on Obama because the way he was talking for 2 years about Wall Street. And every time he'd give a Wall Street speech, the market would tank. And every speech was was Wall Street. Every speech. Every speech. I don't think he had one speech where he did not talk about Wall Street, about how he was going to distribute wealth, that the fat cats were making a killing. So Warren Buffett ends up tripling his portfolio in 8 years, tripling it, billions. because they printed all this money and it never stopped. It went on for about 3 years. $87 billion a month. 87 billion for months. Then the Hillary Trump deal, the market crashed and popped back up. And then now we got full blown socialism that ain't no secret anymore, with the two candidates that are running for the Democratic Party, which means more money flow, more printed money. So they might print another 5 or 6 trillion when the market reacts to it, if she wins. I mean, if she wins, I'm going to be totally surprised, but who knows, you know. If it's rigged like it was before, Trump got a lot more votes this last time out than what he did before, so I was really shocked when he lost. There goes AMD popping. New high. Well, I don't know if it's new high. Let's see here. We're at 41. I'm about ready to just cut it. We don't break below this. Cut it and call it a day. It ain't doing nothing. It's all red and its price goes up. AMD popped. 3 white soldiers. So did Nvidia on that pullback. Apple's off the 200. And we had a little sell off on Meta. 537 from 538.50. So I got 4 monitors that have charts like this on it of each sector. So I can look at 4 different monitors and see which sector's running, which one's not. The IWM, QQQ, and I got airlines, and I've got tech. These are all breaking out. 237. Had days a whole lot. We wrote a song one time about had days a whole lot worse. When someone has a bad day, Mike kind of reminded me. I've had such good luck and such great winnings that I can't let this one little bad day hurt me. And it reminded me of a song that I wrote back in 1993 with this other guy named Kevin Rattery. We wrote a song about, everybody has a day that's real bad. And there's days that are a whole lot worse. So maybe this day wasn't as bad as you think it is. It could have been a lot worse than the day before or the time before, which would make it the worst of worst. Then you just look at all the good things that happened. Well, man, I nailed him yesterday. I nailed him I nailed him this morning. I was up $600. Just bam, 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 3 of them right out of the gate. And then last Monday, buying all them calls. And then last night, into close, sitting here, called the very bottom of the trade and got in it, and it didn't look good. Then all of a sudden, things were looking good, and then it popped up to $1,200 a contract from $1. In a matter of minutes. I had 10 of them. I sold them for 30 cents. 300. I could have made probably 12,000 in 6 minutes later. So I'm going to come in here with a bright shiny. I'm going to call these stupid IRS people. I got to know what's going on with this disclosure thing. Why do they want a disclosure for? And I want to talk to the supervisor of if I can get a hold of them, and say I did not like the way I was treated yesterday. We'll probably get another shouting match. I paid a lot of money in taxes. A lot. Not like Buffett or Cuban or Elon. I had a 45% tax bracket until I turned it into an LLC. Then Trump came and lowered taxes. And I was able to give more money to my family and kids, and donations and charity, but now I ain't giving shit. I mean, I have, because I made money in stocks, but Operation Smile, and then I've donated to that, about $5,000 to that Hawaiian thingamajigger, fire. So I'm going to sell these if we get a knife. It's right to the wire. 16 more minutes left. We're at major support. If we don't hold this, I'm going to see that, I think, at double bottom right there. There we go. I'm doing a little fudging right here. I've added a few down to 40 cents. And now it's time to probably sell them right here. 46. 47, 48, 9. Now. 48, 49. Okay, there's 180 bucks. I'm done. I got out of them all. I'm done. Shit. Like I said, I'd get out of them and they'd drop more. This was a crazy run today. I mean, you can't argue with it. Ten more minutes, and I take a Valium.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization and track market trends.
That'd have been another $150.
Trade brilliantly with Schwab.
I had 50 contracts.
I'm Nicole Petalini, live from the New York.
I had probably more than that.
On Schwab Network. Anytime,
Probably with more than that.
anywhere, on any device, for free. Schwab Network. Shit.
recession standpoint, but also, taking out some of that excess exuberance and optimism and then allowing us to, to run from here.
Have the earnings helped on the valuation side, or are we just running the PEs back up as the market rips?
They've helped on the large cap side, not as much on the small cap side. Unfortunately,
Okay.
It's still taking a while for them to catch up. So one of the reasons, you talk about the small cap rotation, so-called, that was taking place about a month ago. The rotation kind of lasted for 4 or 5 days. You chopped around a little bit, and then you went back to where you started. But even within that, the more profitable names in an index like the Russell 2000 have continued to move higher and outperform the non-profitable names. So, we still think that trying to, make the call that the Russell 2000, the overall index, is going to rally and is going to outperform large cap indexes like the S&P 500, I think at this stage is still a pretty tough call to make, but we don't think you have to kind of live in that world. You can be a little bit more decisive and a little bit more selective within both indexes and still look for profitability and look for high quality. And even in an index like the Russell, that's worked pretty well over the past year.
Okay, that's a good point that you guys have been pounding the table on, and you had a big piece in the FT for those that are curious to dive some more into the Russell stuff. That was really good looking at the small cap world.
Thanks.
But on the top level, it's basically like, that's why it's a kind of higher beta trade. Like the tech stuff's still a little bit more earnings supported, whereas a lot of what you're going to be seeing in some of the other areas is more valuation expansion kind of ripping back here.
Yeah, I think that's generally a good and big takeaway for just this cycle in general. I think a lot of there's often this conflating, I think, of, especially when you're comparing to prior eras and periods when you go through these really big momentum surges like you've had year to date up until mid-July, especially for a sector like tech, clearly highly correlated with momentum as a factor and driving a significant portion of the index's gains. Automatically that will take you back to a period like the late 90s. But I think you have to really be sort of careful in making, you in general, meaning the investing public, careful in making comparisons, because in the late 90s, the momentum factor was highly correlated with negative earnings. So it was, sort of the low quality, junky companies that were leading the rally. It's not as much the case this time, where you do have higher quality companies, whether it's in the Magnificent Seven or whether it's in the S&P 500 in general. But that also doesn't mean that you're immune to pullbacks. So there can be periods of froth and there can be periods of exuberance where you get so one-sided on a particular trade or for a particular sector, and then you have what happened over the past couple of weeks, and then you get just as strong of a bounce back. So
Yeah.
I think that's an important thing to keep in mind.
I've seen that
where,
many
the
times.
secular theme or the secular uptrend for that sector probably still in play, but it doesn't mean that you don't have pullbacks along the way, which can, sometimes be pretty severe, especially when you get a reversal of momentum, and that can happen really fast.
All right.
He's talking truth right there. I've noticed that a lot. We have a sharp sell off like we did a couple weeks ago, like that. I mean, where everybody was freaking out and stuck in the trade. I wasn't in any trades, so I bought the dip. I wasn't in nothing. And when that day happened, I was so blessed. I said, man, these are the days I really want to be here. That's why I just trade one at a time. It saves me a lot of grief, and I don't have losses like I did today on one ticker. I can't remember the last one I had that. I just can't remember the last one. I know it was around 1,200. I think it was Tesla. Pretty sure it was Tesla. When we got down to that low bottom there, and we had that breakout and it pulled back, we thought we were going ahead and run it on up from that breakout, but it didn't do it. And I loaded up that day. Nice little breakout, and then dropped. Everything else was cheap. Everything was under. NVIDIA was under 100. Boeing was at 120. Apple under 100. AMD under 100. I say cheap. Things are cheap. People go, no, they're not. Yes, they are. bounced right back up. Just like that guy said, the dip and the bounce was twice as fast. Dip here, it gained respect, and then gained some. They do that all the time. Yesterday when we bought the dip, right at open, we had that knife, and it kept going and going and going. I held on, and by the end of the day, I was up 300% on that trade. That one trade alone made up for today's loss of $600. I'll come in here tomorrow and probably triple what I lost today. Triple it back. Pretty sure I will. It's hard to be on the wrong side of the street. I thought I had that pretty well tapered off until today. Oh, which bell's already rung? Shit, I'm waiting for the bell to ring. I had it muted. Well, come back here stronger than better than ever, get a good night's sleep. I was really enthusiastic this morning. I played a song, you know, I took 3 good trades. I was up $600-700. And then I got into this SPY. So I'm going to get out of here and relax, take a chill pill, get my mental game back on, and try to not to show my emotions so much on here like I did today, where I just had to stare at this thing all day long. And should have got out when I was up there, and I was up about $60 from when I was down 600. I should have sold it right there, and I didn't do it. I just watched it fall. So that was my mistake. I told everybody else to sell, get out, leave it, and I stayed in the trade. So I'm blaming myself, and I'm going to get out of here and have a great day. And see you tomorrow. All I can do is say thanks all for helping me out. I don't like red days.